right now, if you could, at shares of defense contractor L3Harris. They are rising after just announced a new partnership with the Defense Department as part of this to try to increase capacity to build what they're calling solid rocket motors that power missiles. Now, that company is going to pursue an IPO of this missile solutions business in the second half of the year, and you're seeing that stock move on the back of this. The CEO is saying that we are taking action to build today's arsenal of freedom by launching a pure-play mission solution provider. So a little bit of a background on what's going on with that stock this morning. Meantime, I want to go over to Phil LeBeau because Delta Airlines reporting results just in the last hour, and you know who has a big interview with the CEO of Delta Airlines. Phil.
Thank you, Andrew. Ed Bastian, good to be here this morning at your museum, which has so much of your history here. Let's talk about Q4. Oh, kind of a strange quarter. October, the government shutdown really hit you and the rest of the industry, and then you saw a snapback. How strong was that snapback that you saw?
Well, first of all, thanks for coming down. It's great to have you in the museum. Q4 was very much like much of 25. It was a year with a lot of challenges, throughout the year. It started the year with the Liberation Day announcements, a massive drop in consumer confidence, ended the year with the FAA mandating the forced closure of airspace as a result of the government shutdown. But through it all, I'm really proud of how our team performed. We had really solid set of results, double-digit margins in the year as well as in the quarter, all-time record revenues for the year. Most importantly, to me at least, is our free cash flow generation, $4.6 billion of free cash flow, all-time records for Delta. Free cash flow, we believe, is probably the most important thing we can do for our shareholders in terms of providing tangible returns. That brings our 3-year total net to $10 billion of free cash, which has reduced our leverage by over 50%. So you look at all of the work we did throughout the year, it was not a lost year, it was a good year. It sets us up really well for 26.
Speaking of 26, you've got potential for another government shutdown at the end of this month. Are you concerned at all, or are you fairly confident, given everything that happened last fall, that you will not see that repeated?
Well, it's a little bit we just saw, and we've been very vocal with respect to our Congress and on the Hill, letting them know that if you're asking essential workers to work in a really important industry, they must get paid. So I don't know what's going to happen with respect to the government shutdown, but I can tell you we're expecting and hoping it's going to be a better outcome than the last time.
With regard to 26, you're expecting a 20% increase in profits, range of $6.50 to $7.50 a share. But this comes at a time where you see the corporations, it's clearly a slower, higher environment. Are you noticing a slowdown in corporate spending, or are your corporate customers telling you, look, we're going as hard as we were at the end of 26 or 25?
We're seeing really strong corporate demand. The fourth quarter, we saw an 8% growth in corporate travel. In the first part of the new year, we're already seeing double-digit growth. Consumer demand in total is up. January is a pretty good indicator as to how the year starts with what you can expect to see for the year. For this last week, we had all-time record high in terms of weekly cash sales, which was double digits higher than the same week a year ago. So consumer is traveling. Our consumer is a higher-end consumer, as you know. We talked about the confidence and the K-shaped economy and the consumer. Our consumer is at the higher end of that. They're doing well. Corporate, international, premium, our express relationship, it's all going well. And we expect not just a 20% increase in EPS for the year, we're expecting a 50% increase in EPS for the first quarter.
When you look at airfares, Joe asked me about this when we reported your results. He says, look, they seem high. And he's not just talking about Delta, he's talking about the industry overall. What's your sense of what people are seeing with airfares right now?
Fares are driven by demand. And the demand set that we've talked a lot over the last several years that's growing the fastest is our premium sector. And as a result of that, our premium demand is what drives fares because there's a limit to how much supply we can put in terms of the premium product. We're bringing as much product in as we can create. We announced this morning a big order with Boeing, which will have a significant amount of premium content on. But that's where people want to be. Our customer is a premium customer, and they're willing to spend what it takes to be sitting up front.
Speaking of Boeing, you've been critical in the past as they've had their challenges over the last several years. What gave you the confidence in your conversations with Kelly Porter and others at Boeing that this is the time to place this order for these 3 years?
We've long talked about placing of Dreamland order. We're the only major here, at least in our country, that does not have, probably one of the only majors in the world that does not have the 787. And we're confident, based on those conversations, watching the progress that the team has made, we realize that turnaround is still in midst. But, and by the way, this order is not going to deliver to 2031, so we still have a few years yet before we see that.
And those are going to be crucial to your international growth, which, as you look out over the next several years, you and I have talked about this, you've incrementally continued to expand internationally.
International is the fastest growing part of our business. People ask me where the future is in terms of air travel. It's international. Only 1 in 5 people in the world have ever stepped foot on an airplane. So that tells you what we have to do in terms of making it affordable, accessible, sustainable. And that's where our growth over this next, not just decade, but our next century flight's going to be.
Ed Bastian, CEO of Delta Airlines, joining us on a day, guys, where they beat on the bottom line and forecast a 20% increase in profits for 2026. We'll send it back to you.
All right, Phil. Thank you. Thanks for clearing that up too. It is. It's always about demand. I guess supply and demand. That's a good price. Coming up, House Republicans have a new plan to address affordability issues across the nation. We'll get some details in just a few minutes. Then later, Washboardjim CEO Chris Wiebacher on his company's focus on rare diseases, drug pricing, future growth. That's at 8:10 Eastern. Clock will return in just a moment.
Tonight, we're bringing you a special primetime show, Warren Buffett, A Life and Legacy. We speak with Warren Buffett about his views on life, philanthropy, and business, and how they've changed over his lifetime. One thing that has changed significantly over the last few decades, that would be the amount of cash that Berkshire Hathaway is sitting on. It's upwards of $350 billion as of the company's last report. I asked Buffett if he thinks cash is a good investment.
I know the cash, is certain levels necessary, but cash is not a good asset.
Yeah.
you need oxygen. You don't need to be surrounded out. You don't have to pay a lot for it or anything like that. But you do need oxygen. and if you ever without it for 4 or 5 minutes, you will learn. And cash is that way. So you always need to have it available because you do not know what will happen.
He did say he was willing to write a check for $100 billion that day if someone came to him with a good idea. So he's always on the hunt, and that hasn't changed. You can see much more of that conversation and others with Warren Buffett and a rare interview with his kids. That's tonight at 7 p.m. Eastern Time and a 2-hour premiere of Warren Buffett, A Life and Legacy.
You don't think I should call him and tell him about Bitcoin?
Oh, I thought you were going to call and say, give me $100 million.
No, 100 billion. You said earlier he didn't buy tech until he did.
Yeah.
It's never going to happen for Bitcoin.
I doubt it.
Charlie went to his grave calling it a rat poison.
I mean, the problem is they would never invest in anything, even like gold. He's said
Right,
for a
no
long time
dividend,
how he
right.
thinks it's a terrible investment because it's not a producing, it's not an
He's
asset
messed,
producing.
he has given me an hour, 10 things to say, here's why Bitcoin doesn't, I didn't really understand what the point was. We're talking past each other.
Yeah, it's just, look, he's pretty upfront about it. He doesn't claim to understand
Blockchain, I mean.
He does say that it's not the type of investment I would do.
Yeah.
He's got a very, he likes cash flow businesses. He likes to be able to understand an asset that.
Is he looking at blockchain and how it's going to change a lot of?
I don't think that's in his wheelhouse.
That's not it is.
All right, when we come back, China's economy under review, the nation showing some weakness in 2025. Will that trend continue into 2026? We're going to talk to the CEO of the China Beige Book next. But first, the AccuWeather forecast with meteorologist Bernie Rayno.
The weather is quiet across the country on our Tuesday, and warmer air continues to come eastward. Your exclusive AccuWeather forecast. How about 50 in Chicago? Maybe a passing shower. Sunshine giving way the clouds in Boston, New York City, Washington, D.C. Beautiful day in Atlanta. Shower 2 around Tampa and Miami. And the west remains quiet. 62 degrees in San Francisco. The only delays I can see in your AccuWeather travel forecast is Chicago this afternoon. Some minor ones due to wind. To help you make the best decisions and be more in the know, download the AccuWeather app today.
China Beige Book out with exclusive new data on China's fourth quarter and the macro outlook for 2026. And joining us right now for that is China Beige Book CEO Leland Miller. Leland, by all accounts, it looks like China's economy was okay in 2025. Not anything that's gangbusters, but something that is not in real trouble either. What did you see in the fourth quarter?
Yeah, I think that's right. It just wasn't the path that official data told us along the way. So if you look through official data, early in the year, there was a lot more strength. It just happened to be projected during a time when Xi and Trump were, into another trade war. And then as we got later into the year, the data started to weaken. We didn't really see that. We saw an economy that was thoroughly mediocre sort of all the way through. There wasn't these giant ebbs and flows, et cetera. So you have an issue where a lot of the strength that was projected earlier this year was done for geopolitical reasons, not because it was in the economic data, and then they reported weakness later in the year that we didn't see. You also have a separate dynamic in which statistical normalization is happening across a lot of these pockets of Chinese data that have been over-reported for years, particularly fixed investment. So you see these months where it looks like some of the data have fallen off a cliff. Oh my gosh, October fixed asset investment looks like the economy's crashing. Nothing like that was actually happening. It was just the Chinese, tinkering back, changing the data so that it was going to be looking a little bit more normal over time as they try to fix things that they did erroneously in previous years.
You said that part of this is because of China's priorities, and that's pretty interesting too. Can you lay out their priorities and then explain how or why, if it does have any impact on things like you saw corporate borrowing notched its second weakest level on record? Steel producers reported another quarter of accelerating output, and that came despite weakened profit margins. So there's clearly some signs of some state interference there.
Oh, yeah. I mean, that's China's economy. I won't bury the lead. The idea is that China's economy is not very good, but at the same time, Xi Jinping doesn't care. It's good enough for Xi. And I think that the reason that's important is that when you see these really weak data points, particularly in the fall, released, you think, oh my goodness, bad things are happening in China's economy. They will have no choice but to do bigger stimulus. It doesn't come, and everyone's scratching their head. Why is this? Well, one, because the economy is not so weak that Xi thinks there needs to be bigger stimulus, but also because some of that weakness is not actually there. They don't like reporting some of the downward trends during periods of geopolitical stress, and so when there's when there's sort of an uptick, they don't report the uptick either. It's all sort of smoothed out. So the economy's not doing great, and there's a lot of stress on the export side too. That can't be the growth driver forever. But it's not falling off a cliff, and I think people have a hard time, dealing with that projection.
What do you expect for 2026? More of the same?
More of the same, but more weakness. I think people are looking at AI and some things in advanced technology, and they get really excited about China's economy. They say, oh, look, great things seem to be happening. The economy must be improving overall. Yeah, that's not what's happening. There are enormous stresses on China's economy right now. The first is that, consumption is extraordinarily weak. And one of the things they've been doing all year long is pulling forward consumption with these trade-in programs. That works the first time and maybe the second time, but there's only so many times you can trade in your toaster and you want a new one. So you've got an issue with consumption. The second thing is exports. The export machine has been going gangbusters for years and years, but there are political frictions on the horizon. There are political frictions now that are pushing back against this. So there are a lot of obstacles to China's current and limited growth drivers that they had in 2025 that are just going to accelerate in 2026, even if the U.S.-China geopolitical situation doesn't deteriorate any further.
But you say some of the weakness that we see in these numbers is more of a sign of that statistical normalization than any sort of a collapse that's coming for China.
Yeah, that's right. So a lot of the data points in 2025 that got people really worried. So October, for instance, fixed asset investment looked like it fell off a cliff. Everyone's scratching their heads saying, what in the world happened here? What can China do to fix this? Well, they don't do anything to fix it because nothing's happening. They're just sort of rectifying the numbers from where they were in previous years. One of the things we've done for several years now with China-based data is set our stuff aside, say, here's what's actually happening. But here's the way the Chinese change some of the numbers. They change the basic comparison each year so that the retail sales look like they're not falling in a certain way, or fixed asset investment doesn't look like it's falling too dramatically. There's some tweaking that goes on there, though, and so overall, you have a situation where every once in a while you get something looking like the bottom's falling out in the economy, but really what you're seeing is cooling as the data adjusts to what they should have been from a year or two ago. So a lot of this is actually trying to look deeper into the data and say, what are the trends we need to be filtering out from official data projection?
All right, Leland, thank you. We'll talk to you again soon.
Thanks, Becky.
All right, coming up, House lawmakers taking on the affordability challenge. The chairman of the Republican Study Committee, August Pfluger, going to tell us about a new reconciliation bill to address some of those issues when Squawk Box returns. The Republican study committee is unveiling a second reconciliation bill to tackle, says here, affordability issues. Joining us now with the details, Congressman August Pfluger, chairman of the Republican Study Committee. I'll call you Mr. Chairman, and it's good to see you. Thanks for joining us this morning.
Well, Joe, thanks for having me. And we have 190 members who've been working on a second reconciliation. Joe Biden spent 4 years trying to destroy the economy. Rising inflation, out of control regulations, American families all across the country were hurting, and that's why today we roll out the Making the American Dream More Affordable Act, which is a combination of bills that's centered around a couple of major themes, including housing, energy, and healthcare. But we want to make it more affordable. President Trump has supercharged our economy, and now it's our time in Congress to act to codify what he has done to make sure that this is long-lasting and that families can enjoy the benefits that he rightfully has been working on.
Right. Congressman, does it address, who do we have on? We've had on some of your colleagues talking about another reconciliation bill that I guess Jody Arrington was talking about it when he was on last week, that would address health care and maybe the subsidy issues and maybe other ways that Republicans are proposing as an alternative to Obamacare. Is that included here as well in the affordability reconciliation?
Well, absolutely. Listen to listen to what President Trump said last week when he addressed us. Why are these subsidies going to insurance companies? They should be going directly to Americans. That is codified inside this package. Americans want choices. They want transparency. They want competition. They want to know what they're buying. We have many of those options embedded here, but also we've got, the first-time homeowner, the age is 41 years old. That's not the American dream. Let's push that down to a home savings account. We have legislation called the Nest Act that allows you to save money tax-free and then spend that on a down payment. Why don't we have a provision there, even if it's just for a couple of years, to allow those who are selling homes to not pay capital gains, especially when they're selling to a first-time homeowner? It's these types of policies that President Trump can see where we would continue to supercharge the economy, make life more affordable for Americans, and do the things that he has all along, even in his first term, been doing, but we took a little break with President Biden trying to destroy the economy.
Well, Congressman, the midterms are coming up, and it's kind of rich because the affordability issue is on the lips of every Democrat in Congress, and the buck does stop with the party that's in power. But my question to you would be, by sort of conceding that Republicans need to fix it, it almost allows the Democrats to say, "See, it is your fault," and it's going to tarnish you during the midterms. When in reality, inflation is 3% or below 3%, and the reason affordability is on everyone's lips is because of the 22% rise in prices during the Biden administration, and because average real wages fell in the 4 years that Biden was president. Does it not pay to just keep harping on that and say this isn't our fault? It's not our fault, so we're not going to fix it. So you say, yeah, we're going to fix it, but you see what I'm saying? It just seems like it's your problem, which means you caused the problem.
Look, Republicans always have solutions. We have much better policy than Democrats, and I think your audience is smart enough to understand the points that you just made, that Democrats were responsible for out-of-control inflation and higher prices on everything, with more government control, less innovation, and we've always championed innovation and the economy. But we're not just going to sit back. I mean, the president has worked tirelessly through the executive order process to do things that make life more affordable. We need to codify those executive orders. So, yes, it is their fault, but it is our time to fix it. We're not going to sit back. We have plenty of ideas, and that's what this framework of making the American dream affordable again is all about. And we are going to harp on it. But look, at the end of the day, my constituents and those across the country just want to be able to know that they are paying for a service or a good, health care, or whatever it is that they're buying, and that they're getting a fair price. And they've been getting ripped off, and many of those policies came from Joe Biden.
But in hearing centers, you don't want to pay for those. I don't think. Gasoline price, oil's down, gas prices. Remember when Biden came in, gas prices were about $2.50 or something, and for most of the presidency, it was above $3. They're back down, but in general, Congressman, you don't see prices fall. When the president said, "I'm going to bring prices down because we don't want deflation, we'd like." The Fed's target is 2% inflation, but that's still rising prices, based on, year after year, the previous price level goes up another 2% on most things, or at least overall.
Well, Joe, you're right. The CPI is one metric, but what about the fraud that we see throughout our healthcare system? And I think that's what you were referring to, my colleague from Texas, Jody Arrington, talking about healthcare. There's so much fraud in this system. Why this is a major part of our bill, which is to root that out and not have those middlemen taking the money. It should go directly to the American patient. That's what we're advocating for. And what President Trump has done so brilliantly is he has added accountability back into the system. It didn't exist under Joe Biden, and now it does. And now you know what you're going to pay for, you know what service you're going to get, and we can translate across many industries that point. But it is hard to bring down consumer prices. But there are other things like healthcare that are massively important to my constituents and those around the country.
Okay. Chairman Pfluger, thanks for your time this morning.
Thank you so much.
Okay. See you later.
Okay. Joe, in just a moment, when we come back, we're going to talk Senate Armed Services Committee member Mark Wayne Mullen. We'll talk to him about the rising tensions between the U.S. and Iran, and the next steps in Venezuela. That's coming up at 8:40 Eastern Time, a conversation you do not want to miss. Squawk Box, we'll be right back after this. Welcome back to Squawk Box. Reports saying that Facebook parent Meta Platforms plan to cut about 10% of its Reality Labs division as it shifts focus to AI. Reality Labs is that unit that deals with the metaverse and virtual reality headsets. Meta's chief technology officer reportedly urging employees to attend a meeting tomorrow in person. The New York Times reporting that there's some big layoffs are not expected from that segment of Meta's business that's working on things like augmented reality, Ray-Ban sunglasses and things like that. Meta had no comment when reached by CNBC. When we come back, a lot more on Squawk Box. Does it really matter who owns Warner Brothers Discovery? That's the question. And longtime media executive Tom Rogers is asking, as Paramount steps up its hostile bid. He's going to join us to explain next. We come right back. Welcome back to Squawk Box this morning. Paramount Skydance pushing its hostile bid for Warner Brothers Discovery, including plans to sue. For more details on the Netflix deal, that's the next permutation of the saga. Joining us right now is Tom Rogers, former NBC cable president, CNBC contributor, and senior advisor to CNBC parent company Versant. He writes in his latest op-ed, quote, "Does it really matter who ends up owning Warner Brothers?" So that's the question in the morning. And Tom, let's start there, and maybe you can answer it yourself.
Well, good morning, Andrew. I looked at this from many angles, looked at it from a viewer's point of view, from the industry point of view, from policymakers' point of view, even President Trump's point of view. And I really came away that there's no compelling reason one way or the other that overall one owner of Warner is a better outcome for all those constituents than another owner. Each has its own pluses and minuses. Obviously, the shareholders of the three companies, it matters to. But more broadly, I don't think it really matters who ends up winning this fight.
So you don't think, in Hollywood, as you know, there's a big debate about what's going to happen to the future of the film business, what's going to happen to the idea of people going to theaters and cinema. And there's one view that says that David Ellison is a big fan of films, loves films, and would keep that business alive. There's another that says that Netflix, at least historically, has been anti-theater, more trying to get people in home. They've said that they're going to continue to support the theater, but I think there's some people who just don't believe them. Does that piece of this matter to you one way or the other?
Well, each side has a viewpoint. I come out that, look, if Paramount wins, there's going to be one less studio. There's going to be a consolidation there between Warner and Paramount. There's going to be a lot more job loss relative to the industry in terms of that metric of how the industry comes out. In terms of theatrical distribution, yes, Netflix has cared a lot less about getting movies in theaters, but they also haven't had much impact as a provider of movies relative to the originals that they produce in terms of TV series. And yet they do very well when it comes to licensed movies, movies that have had the promotion of theatrical release that they then license for their distribution. I don't see any reason when they're owning a studio that's in the business of promoting theatrical release and those types of movies do so well on streaming that they wouldn't have every incentive to continue to drive that kind of theatrical business. So there are arguments both ways, but on that count, I don't see a winner.
Let's play the board. I want to put you on the board of Warner Brothers Discovery right now. To the extent that you think there is a way to get a higher price that's acceptable to you, is there? Because one of the things that's happened right now is you've had this board say, look, we're nervous, we're anxious about the economics and the debt that's being put on this business in the context of the offer that's put forward by Paramount right now. And so there's a question mark about, if they did offer more, how, if you're the board and you've publicly said, we're worried about their economics, how you could feel more comfortable about their economics. And then there's the question, of course, about the regulatory scheme. There's also the flip side, which is, do you think Netflix would come back? And what would you do if you were running either of those companies?
Well, you're getting now into the shareholder. Does it matter to the shareholders? And yes, it matters very much to the shareholders of Warner as well as to the other two companies. I was mostly analyzing this from the point of view of the other constituencies, but putting myself in a board position, I'm at Warner. And yes, they have legitimate concerns. Larry Ellison has backstopped the equity part of the Paramount bid, but you have this huge amount of debt, which is going to be cause Paramount to be leveraged 9 times at close. Obviously, a lot of synergies and job loss that bring that down, but a lot of things could happen over the course of a year before this deal closes that could create a situation where the creditors get antsy about the deal and the financing isn't there at close. But at the same time, I'd have to give Paramount somewhat of an edge over Netflix when it comes to regulatory approval, not so much from the federal government of the United States, but when it comes to European countries and state AGs, Netflix probably has a tougher regulatory road. So I think if you're a Warner board, you're looking at risks in either direction, and as a result, they obviously are looking out for shareholders by saying, hey, if you got a higher bid, Paramount, let's hear it. And it's a little weird that Paramount has said they'd never put forward their best and highest in terms of a final offer. It hasn't come forward yet. You'd expect it would by this point, but we'll see. I guess
so
there's
what do you
still
think
more
is
to
going to
come.
happen now? But play it out at this point. You know, you have this threat of a lawsuit happening here. You have the prospect they could come back with a higher bid. There's no reason for Netflix right now to put together a higher bid because they've got to wait to see what Paramount is or is not going to do. There may be no incentive to do anything for the next month or two before you get closer to the shareholder a vote on something like this. What would you be doing?
If I was Netflix, I was the Warner board, or I was Paramount.
I want you to put all three hats on, you know, in concurrent, not concurrently, just, you know, one at a time.
Well, I think there's already been some noise out of Warner shareholders, big institutional shareholders, that they do like the price of the Paramount deal, and I think if Paramount did raise its bid without a counter move by Netflix, that may well clinch in its direction. Certainly Warner has been saying, hey, you got some risks here, but a higher price may do it for you. When it comes to Netflix, I do what they're doing and obviously wait, as you suggest. You know, Warner is not putting forward frivolous objections. They obviously have legitimate concerns about how highly leveraged Paramount would be. That is a hard one to cure, so leaning on it as heavily as they are, I'm not sure how anybody backstops the debt side of the equation here, given how it is possible over the course of a year, given macro issues, that Paramount could end up with a situation where the debt financing is harder to deal with at close. You know, I think this is still a fluid situation, and I would expect, given that Paramount hasn't yet come forward with what it said was its best and final, to see one more move there, and that will probably catalyze at least one more move from Netflix, would be my guess right now.
Let me just throw one last piece at you. I'm curious what you think the other chess moves on the table are during this process, after this process. You know, we just had Mike Cavanaugh on, who runs Comcast, NBC Universal, and there's been a big question about what happens to a Peacock, for example. There's still a number of other media assets, and I just out there that people talked about consolidation, and I wonder whether you think just everything is on pause for however long this takes, which is not just going to be the process of getting to whoever wins this battle, but then imagine another maybe 18-month regulatory review. Does everybody just sit frozen? Because the other piece of this is politically, you don't know what's on the other side of it later for the other players.
Well, I think things are frozen for a while because I think Paramount is the player that needs a solution more than anybody else out there, and as long as they're pursuing this solution, it's hard to see that they're a free agent to come up with a second play. If Netflix does win this, I don't think it's impossible that Paramount still picks up the cable side of the Warner assets. I think that there's obviously an enormous amount of synergy for them to be able to consolidate the Paramount cable networks along with CNN and CBS News with the Warner cable assets. And that's one of the reasons that I'm not sure President Trump, not that his inclinations here should decide anything, but clearly is interested in another owner of CNN. And I think he has a relatively benign outlook toward Netflix winning because Netflix isn't going to end up owning CNN, and Paramount might own the Warner assets and consolidate CBS News and CNN even if they lose the HBO Warner studio fight.
Fair enough. Tom, I want to thank you, as always, for your perspective on all of the goings-on in the middle of what has turned out to be quite the soap opera. Thank you.
Thanks for having me.
All right, it is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, President Trump says that any country doing business with Iran will face a 25% tariff on trade with the United States. In a post on Truth Social, the president saying the measure would take effect immediately as Washington weighs its response to Iran's largest anti-government protests in years. Also, President Trump announcing on social media that Microsoft will announce changes this week to ensure consumers don't see rising utility bills tied to AI data centers. Big tech companies have been racing to open data centers to meet rising AI demand. And we're less than 30 minutes away from the December CPI report, which is expected to reveal a 2.7% annual inflation rate. We will bring you the numbers and the instant reaction. Joe?
Let's check the futures this morning, which have been kind of right around the flat line JP Morgan reported, and we did see the Dow jump a little bit. It's back down nearly triple digits. Let's get to Don Chu with a look at this morning's pre-market movers. Hey, Don.
All right, so Joe, Becky, Andrew, we're going to kind of wrap up some of the earnings, and to your point, JP Morgan is one of those factors. So those shares of JP Morgan Chase right now are moving to the upside by just shy of 0.5% off of earnings, with better than expected fourth quarter revenues. The company said profits fell 7% because of a pre-announced $2.2 billion reserve that was taken to its takeover of the Apple Card loan portfolio from Goldman Sachs. If you exclude that hit, adjusted earnings did top expectations. So we're going to hear more about those details during JPM's call with analysts. It's going to happen at around 8:30 a.m. Eastern time, so just about 24 minutes from now. Then you got shares of Delta Airlines also moving to the downside by about 3.5%, posting fourth quarter earnings slightly ahead of estimates and revenues that came in just short of expectations. Delta CEO Ed Bastian told us in the last hour that 2025 was a year with a lot of challenges for airlines, from a drop in consumer confidence to the government shutdown. Delta, by the way, also gave a full-year profit forecast that fell shy of consensus forecasts, which is also adding to some of the downside pressure in those shares, so Delta down 3.5%. And then shares of Bank of New York Mellon are dropping right now to the tune of about 1%, despite posting fourth quarter profits that beat estimates. The custody bank raised a pair of key performance targets this morning, and CEO Robin Vince told CNBC that those metrics signal the company's turnaround effort is starting to take hold. So Andrew, keep an eye on BNY down 1%. I'll send things back over to you.
Okay, Dom, thank you for that. Meantime, when we come back, Biogen stock sitting near a 52-week high. The company, which of course specializes in treatment of neurological diseases, giving a business update last night that took place at the JP Morgan Healthcare Conference on the West Coast. The company's CEO is going to join us next. And later, Senator Mark Wayne Mullen on Venezuela, Iran, and so much more. Big hour still ahead. Squawk Box coming right back after this.
Welcome back, everybody. Joining us right now from the J.P. Morgan Healthcare Conference in San Francisco is Chris Viehbacher. He is the CEO of Biogen. And Chris, thank you. It's great to talk to you this morning. I'm hoping you could lay out a little bit about not only what you're going to talk about today at the J.P. Morgan Conference, but also what you're hearing, what's different this year, what strikes you. Go ahead. First of all, what are you going to tell people?
Well, thanks, Becky, for having me here. This is an important year for Biogen. We have been building a new future of sustainable growth through our pipeline that contains 5 potentially transformative new medicines, 3 of which are in rare diseases, in 10 late-stage registrational clinical trials. 2026 is the year where we start to turn over the cards of those, and we will see every year now new clinical studies coming along that hopefully will lead us to registration of new medicines. And that comes on the back of having launched 4 also not only first in class, but first in disease medicine. So I think it's an exciting period for Biogen.
The emphasis that you have on rare disease is really interesting to me. We last week launched this Cures Initiative here at CNBC, where we're going to be focusing on that because far too often these rare diseases or orphan diseases kind of get overlooked. It's not seen as a marketable opportunity, but you really are not only doubling, but maybe tripling down on this space. I know back in August, you brought together a lot of people within the community and some researchers along the way to try and figure out how you could do more with rare. Why are you focusing on rare, and what do you see with the next year and beyond?
First, let me thank you, Becky, for really raising awareness of rare diseases. As you know, there are about 10,000 rare diseases, and approximately 10% of the population suffers from a rare disease. So although each individual disease has a few number of patients, this is actually a major healthcare issue. One of the major issues of rare diseases is actually getting to a diagnosis. Because these diseases are so poorly known, it can take years before people find a diagnosis. And yes, it is true that the number of patients is individually small, but I think one of the things that rare diseases does differently is that we really are able to globalize these products. So we couldn't necessarily, like in a lot of other diseases, just justify the investment on the population in the United States. But we are able to take these medicines and go around the world. Our product, for instance, for spinal muscular atrophy, Spinraza, has about 15,000 patients on it worldwide, but 9,000 of those are outside the U.S. So if you are able to go and globalize, obviously, it takes a long time to actually find the patients. There's an awful lot of education of physicians, development of biomarkers to assist in actually diagnosing these diseases. But it is also an area of huge unmet need. Biogen has a history of breakthrough medicines, trying to solve the healthcare's hardest problems, and so this is really the ethos of who Biogen is.
Chris, it seems to me that even by globalizing, you're not necessarily going to find a large enough market unless you can find a way to make a platform where some of these medicines or treatments, indications are able to be used in more than just one disease, or at least it's a jumping off point to make it easier to solve some similar diseases along the way. Is that the case, or am I wrong?
It depends on the disease. We have the first treatment, for instance, for Friedreich's ataxia. There are probably 10,000 people in the world. And yet, but the other thing is we don't have necessarily high operating costs. You don't have to have a huge commercial force to actually go commercialize those. The other thing that I have to say is that, in a world of MFN, actually, because of the unmet need, most governments are actually willing to offer a price that remunerates our research and development. So, a Friedreich's ataxia program, for instance, could be somewhere from $1 billion to $1.5 billion if we do this right and find the patients. Now, the marketing strategy is often finding needles in haystacks, and it takes a while. It can take, again, several years for someone to get a diagnosis. But that's what we do well. Biogen has an extraordinarily strong patient support program. In the rare disease space, you have to obviously work with physicians, but this is one where you know all of the patients individually. And that actually helps us in other areas. I mean, we're not just in rare diseases. We have a new medicine for lupus, for example, which is a much bigger disease. But our history has been actually as one of the leaders in indeed in numbers of patients treated. We are still the leading company in the treatment of multiple sclerosis. That's going to help us with lupus. And again, where this matters is that this is a very complex disease. Different patients have different symptoms, and you really have to understand the patient, which drug is right for that patient at the right time. And that takes a huge amount of patience and work to understand. And so a lot of what we do in rare diseases actually has applicability in a lot of the other complex diseases, which, while not rare, are also requiring this patient orientation. You know, the science is also extraordinarily important, and the scientific level at Biogen is very high. And you have to engage with physicians on genetic testing, on thinking about causalities. Now, we might not have multiple indications for each rare disease, but you do find some things that are common to rare disease. If you think about lysosomal storage, if you think about autoimmune diseases, if you look at certain genetic diseases. So you develop an institutional knowledge of a lot of these causes of disease that can actually make the research and development more efficient.
How would you describe the market right now? How would you describe regulatory hurdles or help that are along the way? And let's start with the market, because over the last 3 years, I think the stock's off by about 35%, but last year it was up 24%, maybe a little more than that, closer to 25%. So what do you get in terms of what investors are looking for right now, and what would you seek from the government in terms of assistance for helping get some of these therapies out?
Well, first, in terms of the financial market, I think we're coming back into an upswing just in the biopharmaceutical sector. You know, during COVID, massive amount of capital flowed into this sector, and it's not because you double the amount of capital available that you double the investable opportunities. And so we ended up seeing a number of companies developed that really shouldn't have been, and that led to some higher failure rates for a few years in our industry. That has now changed. The companies that exist all have very solid data and are able to raise capital. Obviously, higher interest rates hurt this industry. We take a long time to develop drugs, as you know, and we need patient capital. And it's hard to have the same patients when interest rates are higher. So the fact that interest rates are coming down certainly helps our industry. The macro environment has certainly been choppy this past year with tariffs and things like MFN. At the same time, there are some positive aspects. I think we are having discussions with European governments, for example, in a way that we haven't been able to have, so that we can even out the pricing differences between the US and Europe. The science has never been more interesting. But, you know, where we are today in science looks nothing like when I started in this business decades ago. So we're not lacking in innovation. Venture capital is now able to raise money. I think the fact that some people are worrying about the valuations in the tech sector has allowed some capital to start to come into the biotech sector. What we're also seeing is some movement of capital from other healthcare sectors back into the innovative space. So, you know, it has been a year that's been a little tricky to navigate, but I would say we've come through it with the resilience that has been the hallmark of our industry now for multiple decades.
Hey, Chris, I want to thank you for joining us today. Chris Viehbacher, again, the CEO of Biogen. We appreciate your time, Chris.
Thank you, and thank you again, Becky, for all you're doing for rare diseases.
Thank you.
Okay, up next, we're going to preview the big premiere of Becky's special, Warren Buffett, A Life and Legacy, which airs tonight, plus a key read on inflation. Consumer Price Index is going to be released. The numbers and reaction just minutes away, less than 10. And Senator Mark Wayne Mullen on the latest developments out of Venezuela, Iran, and Greenland. Squawk Box coming right back.
Berkshire Hathaway is known as a unicorn in American business. It does things differently than basically every other public company. Warren Buffett has been very vocal over the years about why he purposefully made sure Berkshire didn't conform to widely accepted norms. From keeping its headquarters in Omaha with a staff of just about 24 people, to not holding earnings calls, to hosting annual meetings on Saturdays and taking questions from shareholders, hundreds of them. In a new program that airs tonight on CNBC, we talked to Buffett about some of the things that he sees as dumb in business today. At the top of his mind, well, a lot of things, but one of them is how independent, so-called independent directors on corporate boards actually are.
I mean, if I didn't have any money and somebody said, Warren, how would you like to be a director of the XYZ company? And you'll make $300,000 a year, and all you have to do is show up, meet some other nice people, and just don't burp. Don't say anything. Don't screw it up.
Buffett says he wants Berkshire board members to be smart about business and to have an investment in Berkshire Hathaway, one that he says is significant to them and that is bought on the same basis as other shareholders. Warren Buffett, A Life and Legacy, airs tonight right here on CNBC at 7 p.m. Eastern Time. Andrew?
Okay, as I've mentioned, it's on my card for tonight as some people watch. I've been looking forward to this for quite a while, as I know you've been working on it really hard. So that's on the watch list. Meantime, when we come back on the other side of this, the December CPI data. Take a look, by the way, at what Kalshi is now saying ahead of that number. 80% say it'll be above 2.6%, 44% above 2.7%, 13% above 2.8%. We will find out who is right. The futures point to a lower open. We'll bring you the numbers and instant market reaction in just a moment. Spot Bucks. Be right back after this.
We're just seconds away from the December Consumer Price Index. Actually, we're about 90 seconds away. That gives Rick Santelli, who's standing by at the CME in Chicago, some time to, some me time is what everybody needs occasionally. Rick, you got anything on your mind? You always do. I can't wait to hear it.
Yeah, no, I was out yesterday, but obviously the big story was Chairman Powell, and it has been had a day or two to simmer, and I think I'd like to weigh on in a little bit. I think the market yesterday, which would always be my answer, gave us all the answer. If anything comes from what's going on with the supposed investigation of Chairman Powell, it's that there's going to be more introspection. There's going to be more eyes. There's going to be more transparency. The market understands. Listen, I don't know why the investigation began. I don't know if it came from Trump. I have no idea if it came from the Department of Justice. I know that $2.5 billion for renovation sounds expensive, but I'm not in the building business, and it seems like everything the government does is expensive. But what it boils down to me is that this shouldn't come as a shock to anybody. The president has certain desires, and he acts a certain way. I think the market has priced this exactly perfect. If you go back to Friday's probabilities on all the meetings coming up, the changes are so subtle. The market understands. It's transparency, and the numbers are coming out for our December read on Consumer Price Index. We're expecting a headline number up 0.3%, and it delivered. That's exactly what we received, up 0.3%. Now, if you look at the previous month in August, it was up 0.4. September, it was up 0.3. So this fits right in. If you look at food and energy, known as core on a month over month, it's a tenth cooler than expected. It's up 0.2. Now, if you look at year over year, up 2.7 expected, 2.7 arrives. The one glimmer here on the year over year is the core comes in a tenth light to expectations, but the 2.6 level is where we've been. And my favorite numbers, and they really are my favorite numbers, Joe. If we look at the index on the non-seasonally adjusted index, this started in 1913. The index number, 324. And why is that important? Because once again, it's a new all-time high. Pretty much, not all the time, but pretty much every month, we get a new all-time high. 1913. And if you look at the 1957 rendition, which is the core CPI, it comes in at 331 and change. And of course, that's also an all-time high, which goes to all the great conversations you've had on Squawk Box. We don't want disinflation, really. We don't want deflation. And the compounding nature of what's going on probably isn't going to abate. So what's the real answer if we're all grown up about this? We're going to have to grow, and we're going to have to be patient, because time is going to heal this as these prices and various aspects of things like the housing industry become the new norm, and we become less sensitive to where history has been. Back to you.
The immediate reaction is right there. We were negative across the board. There's the dollar
down, yeah, on rates.
We were 420 on the 10-year earlier. We're 416. That's been sort of quiet. So, what was the?
And the stock market liked it.
Right. What are so with what you just said? What are traders hanging their hat on primarily at this point?
Yeah, most likely we're not going to be getting to the Fed's target in any quick fashion, but there have been some wild cards that many traders didn't count on. Many thought energy would be much more sticky with respect to inflation, and we see what's going on, whether we agree or disagree, but what's going on with Venezuela most likely is going to pay dividends and a lower pricing for gasoline. And in terms of the economy in general, I think there are certain areas that over time on a very long glide path can get closer to 2%. But I think the general awareness out there is that somewhere between 2 and 3, 2.5, 2 and 3/4, and some metrics as high as 3 is going to be the new normal, and we're just all going to have to get used to that. And over time, if it comes down a bit, that'll be a good thing. Hey, listen, the Fed has given 3 rate cuts for 2025, and personally, I think that matches the situation we're in.
Very good. All right, thank you, Rick Santelli. Join us now, Wall Street Journal chief economics commentator and deputy economics editor, Greg Yep. Hey, so Greg, I did think of something when Rick was saying, if you're putting in, let's say it's a $6,000 toilet, and the wrench is $1,800 to put the toilet. I mean, you're going to get up into the. It's easy to get. I mean, what's $1 billion nowadays? It's not that much, is it?
So, I mean, if the point you're making is that, like, even modest rates of inflation still, like, add to the price level, no, you're absolutely right. But this is a good number for the Fed. It's a good number for the country that inflation is still relatively moderate. The core inflation rate coming in a little bit lower than expected. So I don't think it moves the Fed in the direction of cutting again, but should we get further weakness in the labor market, this certainly means that the inflation numbers are not giving them a strong reason to hold back.
Yep. Actually, I was talking about how cost overruns at the Fed building is something to be expected.
Oh, is that right? So
yeah, when you know the way the government is able to spend money, I think, and Greg, you can weigh in on this as well. Last week with Santelli, we talked about with Warsh sort of reemerging as one of the leading candidates. That wouldn't be the person necessarily that the president would pick if he just wanted a rubber stamp for lower interest rates to cut rates. So we were saying maybe the Fed independence is alive and well. And then with the developments over the weekend, we were back, with nervous Nellies again, really worried about Fed independence being the end of the world. Then the market closed up and it's up today. We need to be vigilant that the Fed, and I think the stuff that the chairman said in that video, all of that was true. Is it at risk any more than when LBJ threw that poor Fed chair up against the wall and said, you better cut rates?
Yes, it is at risk, and I think people are right to be worried. I mean, look, on the positive side, the blowback to the alleged investigation of Chair Powell has been so severe that a lot of the people responsible for it are trying to distance themselves from it. The president claims he didn't know about it. The U.S. attorney in charge of the probe claims to say, hey, we didn't even use the word indictment. So, and I think that's a reflection that there's still a strong muscle memory in the body politic and among thoughtful policy leaders that you should not go this distance. But Joe, I guess what I would fall back on is that this is not the last person, it's not the last attempt by Trump to corral the independence of the Fed. We've seen him repeatedly take runs at the Fed, threatening to fire Chair Powell, trying to fire Governor Lisa Cook, putting his own White House advisor on the board of governors. And he has also, through this process of interviewing new candidates to succeed Powell, made it clear what his priority is. You must lower interest rates. And based on their public comments, both Kevin Hassett and Kevin Warsh, the leading candidates, have said that is what they will do. So I would say that at least 24 to 48 hours into this latest brouhaha, it's not perhaps the death blow that some of us worried about. But I think that this is a president who does not give up when there's something that he wants, and I would expect him to come back and try this again in some other way.
I guess the other way the half full way of looking at it is that cooler heads always seem to prevail, and you mentioned it. Yeah, the blowback, and it happens immediately, and it came from the Treasury Secretary. It came from the former Fed, individuals that were on the Fed and former Treasury Secretaries. It came from both sides of the aisle. So we have a system that, who said it? We try everything else until we do the right thing in the country. Who was that, Churchill or something? I think Churchill.
Do everything.
So if you know that, Greg, then a lot of the hand-wringing and the fear and the over-the-top angst should have been tempered by knowing that things work out in the end. Or maybe not. Maybe the actual specter of something like that happening is why people speak up. So maybe you do need those people that seem perennially pessimistic about the future.
Well, that's the optimistic take, Joe.
The future under Trump. I should say the future under the bad orange man.
Joe, that's an optimistic take. I wish I could share your optimism. We had a couple of Republican senators come out against that. But look, one of them, Tom Tillis, has already announced he's retiring because he has gone up against the president once too often, and he could see the writing on the wall. The other was Lisa Murkowski, who's obviously always had an independent streak.
Yes,
The
she
vast
does.
majority of
Thune,
Republican senators haven't really said anything.
Thune, Kennedy, I saw about almost, I didn't see a single one say, yeah, it's a great idea, let's fire Jay Powell. I didn't see a single one say, yeah, this is a great idea. They all were tempted.
No, but the only ones who said they were actually going to use their vote to block the president from appointing a new chair unless this probe was wound down.
Yeah, because he's chairman of that committee, right? Tell us.
No, I believe that's Tim Scott, who's the chairman of that committee.
Okay, well, he's in some position where he won't put a nominee up. All right. They tell me we got to go. I want you to, if you can call me anytime, day or night, if you're really out on a ledge and something, I will talk you down because I'm very optimistic. More new highs, good GDP, closed southern border. Just
Joe, I'm with you on all those positives. I'm not disputing any of those, and the inflation number is one more reason to be optimistic. I think 2026 is going to be a very good year for the economy and the markets.
Awesome. Good. All right, I'm going to rub it all over myself. Thank you.
All right, thanks.
Your eyes.
Avert your eyes.
I don't know. Okay, we've got some breaking news out of D.C. It is involving Microsoft. We're going to get straight over to Eamon Javers, who joins us with that news right now. Eamon.
Yeah. Good morning again, Andrew. Microsoft is out with an announcement this morning of 5 core principles that will guide the company's data center expansion around the country and, in theory, mitigate some of the political blowback that we've seen around water use, power consumption, and quality of life in impacted communities. President Trump, you saw him posting about it on social media last night. The president said, "I never want Americans to pay higher electricity bills because of data centers. Therefore, my administration is working with major American technology companies to secure their commitment to the American people. And we will have much to announce in the coming weeks. First up is Microsoft, who my team has been working with, and which will make major changes beginning this week to ensure that Americans don't pick up the tab for their power consumption in the form of paying higher utility bills." Now, Microsoft says it's going to abide by 5 new core principles as it builds out its infrastructure. They say, "We'll pay our way to ensure our data centers don't increase your electricity prices. We'll minimize our water use and replenish more of your water than we use. We'll create jobs for your residents. We'll add to the tax base for your local hospitals, schools, parks, and libraries. And we'll strengthen your community by investing in local AI training and nonprofits." And the company says that it's unfair politically and unrealistic for tech companies to ask the public to shoulder added electricity costs for AI. So among other things, the company is committing to not asking for tax breaks from local communities as it builds out its infrastructure. Now, Microsoft President Brad Smith is in D.C. today to talk about all this, and I'll be interviewing him exclusively here on CNBC at 10:30 a.m. Guys, back over to you.
Okay, Eamon, want to thank you for that. We'll be looking forward to that interview. Becky?
Thanks, Andrew. When we come back, Venezuelan opposition activist Maria Corina Machado is expected to meet with President Trump on Thursday. We will speak to Senator Mark Wayne Mullen about the latest developments out of the region. First, though, as we head to a break, take a look at oil prices this morning. WTI back above $60 a barrel. It's up by about 1.9% to $60.62. ICE Brent is at 65.06 a barrel. Stick around. Squawk Box will be right back.
Fox this morning. Tensions between the U.S. and Iran continuing to rise as President Trump works on his plan for Venezuela. Joining us right now is Republican Senator Mark Wayne Mullen. He serves on the Armed Services Committee. Good morning to you. I think we're all trying to understand what comes. I'm so curious about not just what you thought of what's taken place over the last week in Venezuela and the like. Obviously, we can talk about Iran as well, but also just even the reaction, for example, some of the oil company executives on that front.
Well, you know, Venezuela, what we're trying to do is pay attention, one, to our Western Hemisphere, you know, right? For the last 25 years, Andrew, we have paid attention elsewhere, and we've allowed our streets to be flooded with drugs and poison our friends and our family members. And what the president is doing is making a strong focus on our own backyard, which I commend him for. When we start looking at Maduro, you know, in his first administration, the Democrats were criticizing him for not going and getting Maduro because of his him being technically a drug lord and using Venezuela to be able to launder money through and poison our streets with the drugs that were flooding our shores coming out of his ports. And so I commend President Trump on taking that strong action, and it woke up everybody in that region. Now what we're going to do is allow Venezuela to choose the direction of their country. You know, 25 years ago, they were a prime example of democracy and of a wealthy nation. You keep in mind, many of your audience, and as you know, Andrew, the oil reserves in Venezuela is greater than Saudi Arabia, but there's been zero investment into it because Maduro didn't care about the oil because there was more money in drugs, and so he used the money or the oil to launder the other drug cartels money through. Plus, he shipped it on the black market. And so stability is our goal. Stability is what I believe we can bring to the region by just having the U.S. presence in the region. And I think it is definitely put a big squeeze on China. Keep in mind, China was receiving roughly 400,000 barrels of oil a day at a much reduced price on the black market. They were feeding Cuba with oil to keep their economy propped up, and that's no longer there. And so it's put a hard strain on what Russia, China, and Cuba was playing with the communist push in Central and South America. So I believe President Trump has made a very good push here to stabilize our region and our hemisphere.
I think there's a critical question, though, about how the U.S. and American oil companies are able to either work or not in Venezuela. The CEO of ExxonMobil last week calling the country, quote, uninvestable. I think there's lots of questions among at least the big public majors about whether they even want to be in the country and what it would take to make it a palatable place to invest, and whether ultimately you need boots on the ground to do it.
Well, when you start looking at Venezuela, if they stabilize, most of these majors, including Exxon, is going to run there. We've had relationships. I mean, look at Chevron. We've had relationships in Venezuela for years. The problem is under Maduro, it really became uninvestable because of the destabilization that he caused and the amount of criminal activity that was taking place. Once that stabilizes, every major company is going to be buying to get involved in that area because there's a tremendous amount of opportunity for the company and for their shareholders, but they want to see stabilization, which, I mean, you can't blame them for that. However, there's going to be one company that's going to step out in front, and they're going to take this opportunity as a time to invest, and President Trump is going to have the U.S. investors back going into Venezuela. But at the end of the day, it's going to be Venezuela and the people of Venezuela that's going to choose what type of government they have moving forward.
I'm curious where you land here. You know, one of President Trump's efforts now is to create more affordability. He wants to bring down the price of oil. One of the ways I think he wants to do that is actually by accessing oil in Venezuela. If you bring the price down, which would be good for consumers, on the other end, there are so many American, shale drillers, for example, here in the U.S., who need the price, frankly, to be up to make the economics of it work. And so you have this sort of very unique push-pull situation taking place when you have American companies that could benefit by going to Venezuela, but you have a lot of other Americans who are trying to do the work right here in America, where it could get a lot more complicated.
Yeah, and if you talk to most of these oil companies, they'll give you a range between $60 and $70 a barrel is where they need to be to actually be profitable. However, if we can bring stability in the regulatory environment, bring down the regulatory cost of entry into drilling and delivering the product to the market, that price can easily slip from $60, let's say on the low end, down to $45. But we need to do it not just through executive orders, it needs to be done through permit reform, which is why there's myself and several senators on both sides of the aisle and representatives are working on doing that. And we can meet the president's goal, and it's good for Republicans and Democrats as a whole when we can bring down the cost of energy, because, Andrew, you know that energy is a backbone of our economy. You can't build a product, you can't deliver a product without factoring the cost of energy into it. So if we can get permit reform, which the president has made it a staple, we can bring down that cost from, like I said, from the low end of about $45 a barrel, and the oil companies can still be profitable and the shareholders can still be happy with it.
Let me ask you a different question. You know, the president's going to be in Davos, Switzerland next week, and there's going to be a lot of talk about geopolitics. There's two views of what's happening in Venezuela. One is the positive view that it's actually maybe boxed in China, for example. The other is that it could potentially give license to a China to invade a place like Taiwan. Where do you land on that?
Well, it's comparing apples and oranges, right? We didn't invade Venezuela. We removed an indicted dictator that was ruining the country, and it was a drug lord. What you're talking about is true invasion of a country of another country, and those are two different things. That's not, you can't compare those two. And what we did was go in and try stabilizing our hemisphere from a drug lord that was poisoning our streets. What China is aggressively working towards Taiwan is they want to reunite a country. They want to bring Taiwan into China because they feel like they have claim over it, which we feel like would cause tremendous amount of destabilization in that region, because they would start controlling and possibly charging shipping lanes to move in and through that area. So I don't, Andrew, I hear people talking about that, but I don't know how people can even make that comparison.
While we have you here, one of the debates we've been having all morning, and it's been a big debate in Washington just the last 48 hours, has been this investigation into the Federal Reserve and Jay Powell, and wanted to get your reaction to hearing about that investigation and some of your Republican colleagues who have come out quite critically about that investigation and the independence of the Federal Reserve.
Well, I haven't been briefed on it. Typically, when something like this happens, I want to lean in and say, listen, let the DOJ do their work their diligence here. If they're bringing charges up or they're investigating this, there must be a reason. And like I said, I haven't been briefed on it, Andrew, at all. But I understand this has to do with his testimony in front of Congress about the building project. Maybe there was some information that he had that he purposely misled Congress. I don't know the circumstances. I believe we'll probably be briefed on it in the coming week because there's so much attention on this. But as of right now, there's no way I can comment on something I know very little about.
At some level, are you struck by all living Federal Reserve chairs, former Fed chairs, have now come out publicly against this? You've had a number of some of your Republican colleagues, but also some of the former Treasury secretaries, including people like Hank Paulson. I imagine those people, I don't know, maybe they don't have credibility in your eyes, but it's almost astonishing to see, in this case, so many people so vocal on this particular issue on both sides of the aisle.
Well, in the Federal Reserve, they have a tendency to, circle the wagons around each other, which I always think that the Federal Reserve has more transparency with Congress to begin with. However, I would ask a simple question: have you been briefed on it? Before you come out and you start making a decision on this, have you been briefed on it? Do you have the details on it? And I would say they probably haven't. If I haven't been briefed on it, and the Senate hasn't been briefed on it, and Congress hasn't been briefed on it, I would say more than likely they haven't either. And so maybe they should, maybe take a deep breath, look around and think, maybe, there is something to this. Maybe there's not, but we can allow the court system, and, that's what we have grand juries for. Once the evidence is presented to the grand jury, they can decide if this is worth pressing charges on or not.
Talking about deep breaths, one of the next big questions geopolitically is Iran and what should happen or shouldn't happen next, especially given some of the escalating protests. if you could whisper in the ear of the president, what would you be telling him? And by the way, to the extent that the U.S. would want to do something in Iran, do you believe the president should be going to Congress and the Senate for approval?
Well, first of all, for the regime that is killing its own people, I think they better pay attention to the president's words. The president doesn't bluff. His timing is on his timing, and when he decides to move, he will move. But he has made it very clear that he supports the Iranian people and whatever move they try to move, and that he will keep the mass murdering from going on from this murderous regime that's running Iran and that's been repressing them since 1979.
Senator, I want to thank you, as always, for the conversation. It's fascinating. I look forward to seeing you again very, very soon.
Appreciate it.
You bet. Thanks.
Thank you.
You bet. Bex?
Andrew, thank you. Up next, a deal in the investment banking sector. Two familiar names for our viewers getting together. We've got the details right after this break. Squawk Box, we'll be right back. Breaking on Squawk Box this morning, CPI, which is, of course, a measure of inflation, coming in up 0.3% for the month and 2.7% year over year, both in line with expectations. The core number was slightly below expectations. JP Morgan beating earnings and revenue expectations. The stock hitting a new high last week. It is flat this morning. And U.S. Bancorp is buying financial services firm BTIG in a deal valued at about $1 billion. Also, Delta Airlines beating earnings expectations but missing on revenue. The CEO, Ed Bastian, telling us earlier this morning that earnings for the full year could jump more than 20% from last year. He was optimistic about the high end of the market.
You have some guests from BTIG. I just can't remember. Ann can tell me. I don't know. Futures are up after that CPI number. That was a turnaround just like yesterday. Make sure you join us tomorrow. Squawk on the Street coming up next.
Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber, Post 9 of the New York Stock Exchange. Kramer once again at the JP Morgan Healthcare Conference in San Francisco. Futures do erase some losses here as the worst fears about December CPI go mostly unrealized. Year-on-year core 2.7 is a tenth light. Meantime, earnings season kicks off with JPM and Delta. The 10-year is backing off once again off of 4.2. Our roadmap begins with the latest read on inflation and what it means for the Fed's next rate move as global central bankers now unite in their defense of Jay Powell.
JP Morgan is kicking off earnings season. The bank beat estimates, this thanks to better than expected trading revenue. We'll keep an eye on that stock. President Trump announcing a new tariff on any country doing business with Iran. This amidst the crackdown, of course, on protests there, a move which could derail America's trade deal with China. And as we mentioned, Jim is out west at the JP Morgan Healthcare Conference. Eli Lilly CEO Dave Ricks is going to join us, or him, certainly for a CNBC exclusive a bit later in the hour.
Let's begin with CPI this morning and the Fed as we dive through some of this data, Jim, about a half hour old. There were some fears that there was going to be payback for that cool reading out of November, but this isn't too bad.
No, look, shelter's still too high. Food at home still too high. Surprising break in used cars. I can't find that in the actual work that I do. And also energy, but we think the energy could come down. This was a very soft number, and I understand if the president were to actually say, I think rates should come down, as long as it doesn't involve a decoration of the Federal Reserve Building.
Yeah, the only hole in the donut there, Jim, might be grocery. 2.4 year on year.
Yes.
And 0.7, that's the biggest monthly gain in about 3 years.
Look, food's too high. A lot of that is tariffs. A lot of that is, say, for instance, when you deal with Brazil. Brazil would be a way to get cattle down. Cattle is a principal source of food inflation. I'm surprised the president hasn't addressed it yet. But when you're a political enemy, as Brazil is regarded now, you're not going to get lower tariffs. And I think that what the president's going about incorrectly, and I know now the president feels like a little bit more of a free fire zone after what Justice did with Powell, is you just go and you make a deal. Let's get beef down. That is a principal source, a staple, and it's way too high, and it's up to the president to lower it.
Jim, you did say yesterday that about the DOJ, that they are in league with the president, and you can't believe that they take themselves seriously. Where's your head right now on DOJ and Powell?
Well, look, I mean, everyone keeps talking about the attack on the Federal Reserve and independence. That's because we're a business network. That the fact that the Justice Department is being revealed as a pawn of the president, even to the point where the president doesn't even know it's a pawn, that's what the real attack is on. I think you don't want the Justice Department to be a farce or a joke. It tends to be a really important arm of government. But right now, it just seems like a kind of a hack group of people. You know, when I got out of law school, the number one job to get was, before you go to any of these firms like Paul Weiss or Cravath or Sullivan, you went to the Justice Department. I don't think anyone would be thinking about going to the Justice Department now, because you just had to do the bidding of someone else. To go after Powell, to make it so that he could be in jail, it's farcical. And I think that the Justice Department is the agency that is really being hammered, not the Fed.
What was interesting yesterday, David, was the Republicans who came out saying this is sort of unnecessary. Tillis, Murkowski, McCormick, Collins, Kramer. Kennedy's line was fabulous. We need this like we need a hole in our head. Everybody needs to take their meds.
Yeah, there's no doubt there is significant opposition, even amongst Senate Republicans, to that, and there is the possibility, therefore, that you could hold up any nominee to replace Powell, for example, which would be significant. There also is this now question that's much more significant as to whether Powell will remain on the Fed after his term as chair expires, which was unexpected, perhaps, but in terms of trying to maintain the independence of the actual organization, the agency, he may do that, Jim. I know we're going to continue to hear about this. You've been outspoken again. You just heard it as well in the Justice Department. We can cite any number of other areas outside of what is being done to the Federal Reserve Chairman that also show a lack of independence on the DOJ. It is much more a part now of the presidency as opposed to an independent agency. But, you know, interestingly, yesterday, Jim, there was not really that much of a market response to all of this.
No, I think the problem is, David, that when the Justice Department becomes just an arm of of the president, as we actually saw with RFK and President Kennedy. It tends to diminish that department. David, if you're doing a renovation of your house and it goes way over, do I attack you? Do I criminalize what you're doing? Or do I go after the contractor? I think, again, America's very confused. We've all had contractors have overruns. We tend not to blame the customer, but suddenly the customer could end up in jail. By the way, it's criminal. But the idea of criminalizing everything that is civil is also something that seems so politically motivated as to make it so you've got a farcical Justice Department. We've got to restore the value of the Justice Department, or the Justice Department, the Attorney General should just quit or be fired. This is a great opportunity to fire an Attorney General. It's a fantastic opportunity, because obviously we can't criminalize everything. We can't send everybody to jail because we decide, you know what, that guy belongs in jail. Jay Powell does not belong in jail. And that's what this is about, putting him in jail. Why do people act like this is some bloodless thing about interest rates? I don't think Jay Powell should be thrown in jail because the contractor had an overrun and he said something in Congress. And I think even President Trump recognizes that the orange jumpsuit thing it's bad. It's a bad look for the Fed. But it's the Justice Department's fault, not the Fed's fault.
No, but the reporting yesterday, I think it was the Journal talking about how Trump is at least mused about replacing Pam Bondi as AG, has been more that she's not been supportive enough of the Trump agenda. Nothing to do with this part of it.
Well, she's going rogue. I mean, she's going rogue. It's okay to say this stuff. I mean, we have to start saying things that you would never say. But we said them in 1962 when RFK had a Get Hoffa squad. We said it in 1962 when RFK investigated the railroads for the steel companies for antitrust because President Kennedy didn't like them. And that was something that I know that our current president may have found to be distasteful. But this is really incredible. We are talking about getting criminal lawyers in order to be able to defend yourself for an overrun when we're trying to run a darn country.
Well, that's why this statement, Jim, by global central bankers, the heads of Australia, Brazil, Canada, Denmark, the Eurozone, South Korea, Sweden, Switzerland, and the UK is so interesting. And then Diamond's comments today about Powell himself.
We can move on, of course, to JP Morgan earnings, but as you might expect, we were also waiting for what Jamie Dimon, the company's leader, would have to say about Powell, and there it is. The cornerstone of price, financial economic stability, interest assistance. Standing up for Fed independence, no surprise there. And, saying in his remarks as well, anything that chips away at that is probably not a great idea. Will have the reverse consequence, he also said. And there's that coming at the end of this statement as well. And he believes will raise inflation expectations, probably actually have the effect of increasing rates over time as you lose faith, so to speak, in the central bank. And that takes us to the numbers themselves, guys. Jim, I don't know if you've had a chance to look at them. I mean, we're talking about a stock that inevitably seems to move higher over these last couple of years, but not typically after it reports earnings, even when they, as they did this quarter, beat the estimates of the analysts who follow the company.
Well, we hope there's a Roach Motel. Remember last time Jamie spoke, he was talking about the cockroach theory, which turned out to be untrue, by the way. There were really only two. There was First Brands and Tricolor. At that point, we were still calling it Tricolor. We had no idea what that was. David, investment banking, disappointing. Now, is that some sort of timing issue? Because I think there's investment banking for even the smallest firm right now, and I thought that JP Morgan should have a better investment banking number, because otherwise everything else would be clean.
Yeah, loans up 9. Equity's a huge beat, obviously, up 40. Guidance on NII above consensus for the full year. They do, Jim Dimon does say that the impact of a cap on APR would be dramatic.
Right. I mean, look, it's the end of credit as we know it. Look, it's an unfortunate thing. You have to pay high interest rates because other people are defaulting. And we do want a system where banks want to give you a credit card. It's a good business. Is it usurious? Well, for the people who didn't understand the process, absolutely. If we had Max Levchin on right now for buy now, pay later in a firm, he would say it definitely is, but they have a different model. David, the fact is that people do default. It is unsecured, and someone has to make up for the 3 to 5% of the credit cards that are default. I don't know how you get around this unless you decide that, well, you know what, no one should do it except for a handful of people, and then only people who get credit cards are the people who don't need them.
That's a good point. Well, and that goes to the idea that it would actually, the ultimate impact would be less borrowing, which would not necessarily be good for the broader economy as well. Kind of interesting story in the Journal today, also about J.P. Morgan taking over for Goldman Sachs for that Apple Card. I remember when you talked a lot about that.
That was a loser. Boy, Goldman, remember we were hammering Goldman when they did it. I mean, I remember telling Goldman, look, you guys are going to lose a fortune. And someone at Citi had told me this could be like a $7 billion hit. But the Goldman guys, yeah, but it's Apple. You didn't even know Apple was involved. Anybody who used that card realized you were rooted to a call center in Mississippi who had no idea what the heck they were talking about because Goldman didn't want to get a chance for the credit card. And I don't mind. I don't blame him because, man, that business sucks.
I don't know, is there something in the air out there in California that just like you suddenly are, speaking the truth? What's going on?
I'm having a great time.
You're having a great time? Did you get any sleep at all? Any sleep?
Eagles lost.
Right? Yeah, that was 2 days ago.
I got 2 hours last night. 2 solid hours.
You got 2 solid hours?
What are you doing? Your phone?
I don't know. I'm looking
your
for
phone,
things
you
here.
usually have it right in front. This is how the show's done typically. Oh, look at that. I didn't even count on her. Never mind. Carl, I'm having some fun. What can I say?
That sit down between Ricks and Jensen looked pretty interesting yesterday. We're going to talk more about it, but this notion of living forever is literally something you're writing about.
Yeah, well, I mean, we were talking about what it would be like and whether it would be not so great to live forever. The downside of living forever. It was kind of an otherworldly discussion. I didn't expect to see that between these two gentlemen who are pretty sober. They also talk about living past 100 and the upside and downside of that. Frankly, I thought we were going to talk about drug discovery, but what the heck? Why not go science fiction?
Jim, we'll get to a lot of that. Very busy couple of days you've had out west at the JPM Healthcare Conference. When we come back, you'll hear what Novo's CEO told Jim about the Wegovy pill last night at the conference. Tons of news coming out of there in the last 24 hours. Speaking of weight loss, as you just saw, Eli Lilly's Dave Ricks from that conference coming up later on this hour. We'll dive into Delta and L3 Harris and a bunch of calls on Chipotle, FCX, AMAT, Micron, our own parent Versant. When we come back. Welcome back. Shares in Novo Nordisk up more than 25% since last month's FDA approval of its Wegovy pill to treat obesity. Last night on MAD at the JP Morgan Healthcare Conference, Novo CEO talked to Jim about pricing the drug.
If you want to really make this accessible, then you have to put it at a price where everyone can afford it.
And it's something that the president and you both agree on.
We have actually.
Jim, takeaways from that sit down?
Well, look, I think that prices, we used to talk about the idea that maybe this is going to be $1,000 a month would break the treasury. Competition does work, obviously, Lilly and Novo. What I thought was really interesting was this first mover advantage we have to figure out when we speak to David Ricks. What does it mean to have first mover advantage on a pill? Let's say you tolerate the pill, your weight goes down. Does the doctor say, you know what, Lilly just came out with a pill. Why don't we give that a shot? That has not been the way that things have gone in the medical profession, but I think Dave Ricks will have some answers, and I really want to know. Because, boy, did he ever come on strong versus Novo. They wiped the floor with Novo. I think Novo's trying to get back in the game. Let's hope they do. We need competition.
Well, yeah. we have talked about sort of the cadence of these medications, and it's not something that you tend to hop or brand switch once you're in the midst of treatment.
Well, it's not really the doctor's role to be able to say, you know what, you really tolerate this pill, let's just decide to switch. But again, if the Lilly pill is superior, then I think you would do that. We want to find out the difference or whether these are now somehow become commodities, which is really crazy. This is one of the specialized medicines in history.
You a little surprised, Jim, overall? We haven't gotten a lot of deal announcements so far. I mean, we're what, day 2 now?
Jensen Huang talked about this amazing deal that he did with Eli Lilly, and he said maybe this is the biggest thing that's come out of the conference. David, you and I both remember when this is where big deals occurred. To me, it's where now smaller companies are hoping for a big deal now that the FTC has changed its mind about combinations. I am surprised, David. The biggest news was Eli Lilly and Jensen Huang getting together.
Yeah, that's interesting. What about, one of the names, of course, is this Revolution Medicine. It's not a name that we necessarily knew, although it would be a fairly large deal were it to happen. Merck, the latest name to come around. I know they talked a bit more broadly about their acquisition strategy. Did Mr. Davis, the CEO of Merck, yesterday, Jim, saying things like, we are looking at later stage acquisitions. Obviously, they're going to be dealing with the Keytruda patent expiration coming up in 2028. That's some $32 billion in revenues that they need to replace over time. Any pickup there in terms of what they may be thinking?
Well, look, I think that Keytruda is such a huge drug that almost no matter what you do, you're not going to be able to make it up. You're sure going to have to try, and Davis is trying very hard to do it at Merck. It's been the stock that has reacted to that. But a lot of these companies here are really talking about patent cliff, patent cliff, patent cliff. And it does make you remember that this is really one uncertain business versus, say, NVIDIA, which has each iteration succeeds. There are a lot of companies that can't iterate, and there's a lot of drugs that fail. We forget what a not so great business these people are really in, and how amazing it is to say an Eli Lilly has clear visibility to the 2030s. A lot of companies had clear visibility to the 2030s. Novartis surprised me. Vascular Simon, they seem to have clear visibility to the 30s, but Pfizer does not have clear visibility, I think, to, I don't know, March.
Oh, that's not nice, Jim. To March?
David, it's not about friends, it's about money. How many times do I have to tell you that in the last 20 years?
I know, you do. You tell me over and over again. And obviously there are still other drugs that are going to compete with Lilly and Novo, or at least potentially be out there, Jim. And, others went in on the GLP-1 craze. Of course, we know Pfizer fought Novo over Metsera, remember, and they won that battle.
That was interesting because it was Novo's to win initially. I don't think they need it. Pfizer has some interesting things. Amgen is going to talk today to me about the best kind of pill or injection over 1 month. Regeneron's got something that combines with cholesterol. Everybody has something, but you want to be Eli Lilly. You want to be Eli Lilly because what they have is manufacturing. They have heft. They have skill. They have scale. Everybody else is just kind of got press release. The press release ratio here, really incredible.
Yeah, a lot.
Look
You
at
got
Regeneron.
You got Regeneron
$1
tonight. Yeah, you got. Is Lynch Lifer still running
Regeneron's
Regeneron? Is that or yeah?
Is he still more than ever? More than ever.
First
It was one of
ever
my
guest
first
on
guest.
Mad?
Stock was at $5.
Yeah, I remember. But
One of
he's-
the first few.
He's got
It
to
was
be
at
getting up there in
$5.
terms of
He said-
CEO tenure.
I saw him once up at Saratoga with racehorses. Isn't that usually the top?
Can be the top. Can be.
Could be. Actually, I think Regeneron's got a lot of room. They've got more room than a lot of companies realize. Have some really good drugs. But Lilly is the one. David, Lilly is, there's just nothing. There's Lilly and then there's everybody else. And that's what you want. There's the Indiana football team and then there's everybody else. There's Lilly and then everybody else.
Look forward to catching up with
Same
Rick
state, right?
in a bit, Jim. We'll get your mad dash. We'll count down to the opening bell. We'll dive into Delta, the other big earnings print of note this morning. Shares down about 4% before the bell. Stay with us. Only a couple of weeks into the new year, but check out how the stock rally has really broadened out since we turned the page on the calendar, especially small caps. The S&P is underperforming the Russell, last week at least, by the widest margin since November of 24. We'll talk about whether or not this continues, what it means for the rest of the year when we come back. Opening bell just a few moments away. Don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
All right, let's get to a mad dash with Jim, of course. A couple of minutes before we get an opening bell here. Want to talk a little Alphabet?
Yeah, look, David, I think that what happened yesterday, we wrote the story, this combination between Google and Apple is really starting to get people to be concerned about the power of Google again. Elon Musk talking about maybe they're too powerful, but what I think we're missing is that the last justice decision, last court decision, said that Apple is a good competitor to Google, so you don't have to worry about anything. But David, this may be game, set, match for a lot of the different these chatbots that don't have anybody tying up with them. This was such a great thing for Google, and of course for Apple, it looks like they didn't have to spend all that money anyway because they've got Siri powered by Google. I don't think Google stops here. I think Alphabet goes straight shot to 400. Straight shot.
Straight shot. Yeah, it's interesting. The stock did not really move yesterday, Jim, on the news. Now, it may have been anticipated. It's not clear what, if any, payment will take place from Apple to Alphabet for this. It's not expected to be anywhere near what they've been paying, of course, to be the search provider on Apple in the past. You surprised that the stocks didn't really react to this yesterday, or perhaps that expected, given we kind of knew this might be coming?
Well, I think that there's an understanding that this time Google has to do some heavy lifting because they're taking over Siri. Before it was just the foundation was let's use Google for search. I thought that it should have been up much more. I thought Apple should have been up much more. I think the market has really soured on these big cap techs. It's a big mistake. This is the one to own. Alphabet. It goes much higher.
Jim, let's get the opening bell here in the CNBC Real-Time Exchange. And the big board, it's Pinnacle, completing their merger with Synovus Financial at the NASDAQ FinTech Bank, the Bancorp. Doing the honors. Jim, to your point about whether or not Alphabet's being rewarded, you just mentioned this outperformance by the small caps. Is it simply a function of the market being more interested in this market broadening?
Yeah, I think so. I mean, there are a lot of people who feel like they got to catch up. I'm really, I want to make a case that says that at the beginning of the year, there's a lot of people who do things. That when you look at the small caps, that tends to be done by an index. If you actually break down the small caps, you wouldn't want to own half of them because they're losing fortunes, including many of the companies I see here that are small cap. I want to warn people that this is just strictly an allocation into small caps, is not an identification of a lot of small caps, good companies. And a lot of these Russell 2000 moves have fizzled out because once people realize what they're buying, it turns out that they're not buying anything that belongs in an investable, safe category. Because they're just not. Too many.
Now, you've never been a fan of the small caps as a group, but that hasn't stopped it from hitting all-time highs, obviously, along with equal weight, SPW.
Well, look, I think it's catch-up. I like equal weight, but that's part and parcel with why Google didn't go up gigantically yesterday. Equal weight, people are looking at things and they're saying, you know what, maybe it's time to buy materials. Equal weight means, like, let's buy some Caterpillar. It means let's buy some health insurers, and let's buy some smaller drug companies.
Yeah. And maybe some Boeing, which I know you wrote about this morning. Delta, which we'll get into the numbers. That's an order for as many as 60 Dreamliners.
Yeah, Boeing reported a really great quarter last. I don't know why the stock went down. It's a cash flow story. Kelly Ortberg would tell you that. Ever since then, what's been going up is that they've been getting orders for the planes that they can make without any government intervention, which is the Dreamliner. That's where the big profits are. That was a gigantic order by Delta. Delta did not like Boeing. Boeing is back. Airbus can't make them. Boeing is very even. Another straight shot because there's just no competition and they can make them. Ortberg, congratulations. I mean, David, you know Ortberg. He turned out to be a cool taskmaster, a tough guy, a humorless. Maybe that's what Boeing needed.
Maybe humorless with you, Jim. I don't know. When we spend time together, the laughs never stop.
What, you mean a laugh riot?
Yeah.
It was like, what,
yeah.
Henny Young or something?
Yeah. I mean, it just,
Wow.
I know. I think you can have that effect on people. They're funny and then they see you.
Well,
they're just too.
I don't know. I mean,
afraid.
David, you have a better relationship. I thought it was pretty straightforward that, listen, Jim, this is what's going to happen. Stock was at 180, and then it went to 240. Hey, he can be I don't want fun. If I can get no fun and 180 to 240, I'm fine.
You are right. You are a dollar sign masquerading as a man, after all.
I used to think that Charlie Sharp wasn't funny. Turned out he was funny.
No, there's oftentimes, and it's a key. It's a real key personality trait. You got to have somebody who's got a sense of humor somewhere. It may be buried deep in there, but you got to find it if you can. Otherwise, they're no.
Jensen Wong's funny. He's super
never
funny.
Never
He's
met him.
super funny.
Never really met him.
Well, he's laughing. He always laughs on the inside.
There you go. All the way to the bank, too. All right, speaking of Jensen, checking in on sort of the AI trade, so to speak.
I'm here.
Some news that it's worth getting to. Meta, we talked about this a bit yesterday, but they kind of quantified it as the day went on.
Quantify.
This team that's going to oversee the AI infrastructure build-out. You see these social media posts from Zuckerberg planning to build tens of gigawatts this decade. Tens of gigawatts.
Okay. You guys don't show cleavage.
Gigawatts or more.
375. They've got a buy rating. Bank of raising their price target to 370.
Google a bit pumped again. It's about the same old thing every day. Breakout, pullback, scalp. Dar. Nvidia pullback. Meta pullback. Now they're just pumping Meta just a second ago. And there's that AMD 220. Can't say I didn't tell you. Telling you, when it gets down to that 200, man, that thing's been by. /ES at VWAP.
The same procedure pulls back to the VWAP, retest. Now it's the third time. So we're going to find something out real fast. Today is Tuesday. Right off the VWAP, off the 200 SMA, the SPX. Boom, dee 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 dee. get back in. We were at the 200 on the. We just had a knife, and we got a fallen wedge on the /ES to the 200. So this is second scalp going into works here. Not ain't yet. 13th. I got bill due tomorrow. Do the 69.95s or the 77,000s. 7,000s. $2.35. Ah. Need to hold. So right now I'm a little bit bearish because I'm under that 200 on the ES. But we can get above the VWAP. We're at 260. And back down again. Come on now. I'm gonna go get my coffee going. IWM's at the 200. God, too. This ain't working out here. Well, that went that way. Shit. Okay. 235. We're at 185. Intel up another $2. PDD at 113. That's that China trade I used to trade. She's not getting back as she wants. Come on, I should have added on there, but I didn't. I'm gonna go get me a coffee. I'm still in this. I think I'll end up adding. Oak. Mama. Here she comes. $145. I need some makeup money. $145. I got 235 and 145. Come on, baby. Not looking good. Opens back under 7. I need 175 on SPX. Come on. Just sitting there doing nothing. I don't like that. Still too early in the day. AMD popped it open. I'm liking where that SPY is.
nice. Beat earnings estimates ahead of the open this morning. Let's take a look at where markets stand around half an hour into trading, given that, of course, we do have the earnings to deal with this morning. Of course, the CPI coming in mostly in line there with expectations, so like cooler than some were perhaps anticipating. We have got a mixed picture across the major indices here this morning. We're just seeing a bit of a softer picture across all three of the major averages, actually. Taking a little bit of a breather, we did see an initial pop, actually, off the back of this inflation print. In fact, the futures had been pointing lower, but then things have ticked higher, and then we did see a move in the 10-year yield as well. But right now, we've got the S&P 500 down 0.2%. Obviously, we are on 7K watch off the back of a couple of records here, but as I said, a little bit of a softer picture now around 30 minutes or so into the trading day. Let's take a look at where foreign markets stand, of course, at the positioning ahead of this all-important CPI print that we got out this morning. We had the FTSE just down 0.2% right now. We've got the DAX heading in the other direction. A very, very strong performance for the Nikkei 225 as traders over
so the CPI was strong
after a market holiday. We'll dig into that and why later on in the program. And then the Hang Seng Index is sitting up almost at 1%. We have all important China trade figures out tonight. Imports and exports, pretty much one of the only things that going for China right now as far as the economy is concerned.
Home sales, now that
more than $1 trillion trade.
That don't look right.
Well, let's take a look at some of these futures products. As I mentioned, we had the 10-year yield coming off. It was about 4.19 ahead of the CPI print. Looking at 4.17 right now.
That number on the home sales don't look right at all. September -1 versus a positive 20 prior.
Silver as well, so a nice day for some of the precious metals as we continue to see this bull run. Crude oil catching a bid this morning, of course, off the back of these Iran headlines. We will be getting to that just in a minute with KG. We are looking at $61 a barrel in this market this morning. So we have crossed that 60 level. And Bitcoin is catching a bid, up 1% right now. We're at levels of 90,000 and change. So let's get to KG, who joins me now, senior markets correspondent, to get us across some of the data that we're seeing this morning. So obviously we've had the CPI, but just talk us through new home sales data that's just been released, KG.
Well, Sam, it's actually a lot
get
better
paper
than
towels
expectations when you're looking at new home sales, and this is going to be for the month of September. That actually came in at 737,000. She was looking for 716,000. Previously, it was at 800,000. So we did see a drop of about 0.1% on a month-over-month basis. But once again, coming in relatively strong, you are starting to see some buyers really stepping into this market. We have some prices starting to stall out in certain pockets, especially ones that have been in very high demand over the last couple of years here. Those prices have stalled. Interest rates, especially for mortgages, have also kind of moved to the downside here, and buyers are trying to step in. And this is giving a little bit more of a rosier picture when you're looking at the outlook for the housing market as a whole. The home builders have actually caught a pretty decent bid over the last two or three trading sessions after the announcement that the government, for the most part, is going to potentially start buying mortgage-backed securities, which should also then move mortgage rates lower, or that's at least the thought here. So a pretty decent report when you're looking at new housing sales, and let's see if it's going to be supported by pending home sales as well as existing home sales, which those two have been a little bit more lackluster when you're looking at the year-over-year performance, especially if you're kind of looking at the past year and a half.
Also trying
Let me go get my coffee and I'll be right back.
Single-family homes as well, so we're trying to.
I'm still holding my stock here.
It's interesting that it's September numbers. It feels like a bit backwards looking, but at least we're seeing some encouraging signs early on. Let's see if that sort of continued throughout the course of the rest of the year.
We got a 1, 2, 3 in the last couple of days.
Coming off the sidelines in a very positive way. But let's
AMD's coming down. Boeing's had a good run. When it gets down that lower price, you got to swing it.
The expectations were concerned, but I'm just looking at some of the gauges here. When you look at
IWM's still bearish,
down, but still energy services, which were up quite considerably. Just talk us through it.
And there's Kevin Green.
Yeah, I would say this is kind of a mixed report. If you're looking at core inflation, that actually did beat the street's expectations, coming in at 2.6% on a year-over-year basis. And the month-over-month print was 0.2%. Street was looking for 0.3%. The headline inflation actually did remain fairly sticky. The year-over-year print came in at 2.7%, matching the street's expectations. And the month-over-month print came in at 0.3%. But I agree with you. When you're looking at some of these month-over-month comps within this report, you could make the case that some things are accelerating at a fairly fast pace. If you're looking at food at home, that actually increased by 0.7% on a month-over-month basis. That's buying those groceries. So we are seeing prices for a lot of products moving to the upside. What's also very notable, Stan, is food away from home, and that's a little bit different. That's more of a services metric. How is the experience?
235, 145, and
What's
70.
the cost of that? And that actually increased by 0.7% as well. So keep that in the back of your mind when you're starting to see and get retail sales data, as well as even PPI data moving forward here. Now, when you're talking about energy actually did increase by 0.3%. A lot of that actually came from natural gas and utilities gas pipes. That's not a surprise. On a seasonal basis, we usually do see that move to the upside, and that did increase by 4.4% on a month-over-month basis. The big draw for the report is actually used cars and trucks. That did see a drop of 1.1% on a month-over-month basis. So the headline looks okay in certain pockets. When you're looking at the underlying, we might be seeing a little bit more volatility. Obviously, the government is still trying to work through that backlog of data throughout the shutdown, so hopefully this normalizes a little bit. But the bright sign is actually Supercore coming in a little bit better than the street's expectations. Shelter is also another component we have to be mindful of. That did come in at 0.4% on a month-over-month basis. The last print, we kind of got a little excited because it did come in at 0.2%, but it looks like that's also kind of reaccelerating. Owner's equivalent rent also increasing by 0.3% on a month-over-month basis. So I would say mixed at best, but there's still probably a lot of variability when it comes to the data set because of the government shutdown.
Okay, good to keep in mind. But as you say, important to highlight, shelter still up. I mean, I'm just looking at the year-over-year change. I mean, when you take a look at electricity up 6.7%, gas services up 10.8%. I mean, these are considerable jumps here. I was just looking at my electricity bill throughout the course of 2025. I am up 27% there on my bill. So, I mean, that is just quite a significant increase there. But yes, have to look under the hood. Gas prices down, used cars also down as well, as you highlighted. So a mixed read. Let's see what the trend tells us. I'm interested to get your thoughts on what is going on in the commodities patch, particularly with this jump in oil prices up above $60 a barrel. Obviously, Trump's Iran-related 25% tariffs now effective immediately. What that's going to mean for India, what that's going to mean for customers like China. Just talk us through the story and the price action this morning, KT.
Yeah, so I would say that there's actually two stories that are developing right now. The Iran story is starting to catch a little bit more steam over the last 30 minutes or so. President Trump has made some comments encouraging the protesters to continue to protest, and he did say that help is on the way, and that's a quote from him. So you are seeing a bid actually getting coming back into the crude oil market just in general. But even before that, we actually had a situation out in Russia in the Black Sea where there was 4 oil tankers that were hit by drones at the CPC terminal, and that's actually a really crucial terminal, not only for Russia, but also for Kazakhstan. So there's concerns that maybe we also see some logistical risk being priced into the market there. Back in November 29th of 2025, we actually did see a significant strike on that terminal that did actually take some production and some pipelines offline, which pushed prices higher. So you kind of have two different geopolitical risk events that are now being priced into crude oil, and you can make the case that if it's able to sustain above $61.5 or even $62, if you're looking at West Texas Intermediate, that could be that basing formation where maybe we do go up and try to test $70. We have not been able to sustain higher prices for long. A lot of these geopolitical risk events kind of get priced out a day or 2 days later, but it seems like a lot of this escalation is maybe here to stay in the near term, which could be a positive catalyst for the energy traders out there.
Yeah, we're certainly seeing that in the price action this morning. Hey, KG, thanks so much for breaking down some of those key stories and the data for us. Appreciate it. I'll speak to you a bit later on. Coming up, we will take a look at the big picture and what's next for hedge funds and private markets in 2026. Morning Trade Live is back after this.
Belch.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills.
In the biz.
Actually, I'm seeing something from Schwab.
Double bottom.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists.
I'm watching
in taxes,
IWM,
insurance,
but I don't
and
know.
estate planning, all with low fees.
We're experiencing
Technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Schwab, you piece
No
of crap.
politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
We are back on Morning Trade Live. Delta is lower this morning.
Delta, she said it.
Adjusted revenue fell short of analysts'
Delta.
forecasts. Fourth quarter revenue growth was impacted by 2 points due to the government shutdown. Delta also announced
Oh,
a purchase agreement
666.
with Boeing for up to 60 787 Dreamliners. We are trading down 1.4% right now on Delta. Let's take a look at the winners on the session, and of course we've got Intel and AMD among the big gainers
trade
today
down
off the back of
4%.
this upgrade from KeyBank. We'll be digging into that story in a little while. We've also got Moderna up at 6.9%
Moderna.
today, so we are seeing a bit of a tech, a bit of a healthcare type of thing playing out for some of our leaders in this morning's session off the back of some optimism. Certainly
This is
around
one that I had to help
data
run on.
centers, some of the demand for those CPU.
I remember when COVID broke out, this thing ran like $500. I'm going, are you kidding me? $497.
So, those are your winners and losers on the session. Joining us now, let's switch gears, is Alan Strauss, Senior Partner and Director of Investor Relations, Crystal Capital Partners. Very good morning to you, Alan. Thank you so much for joining us. Just before we dig into your alternative investment themes and ideas to watch in the market in 2026, have you got any thoughts as far as, some of the information we've been getting, seeing it's a big day as far as some of the data, some of the earnings, the direction of these markets right now?
JP Morgan
I
pulled
think we
back.
need to move to warmer climates. I heard your tremendous increase in your personal energy costs. So we're down here in South Florida.
Didn't like earnings.
I would say that's a huge benefit for us. Listen, volatility. That's what I heard the underlying message.
Now, if you heard me yesterday talk about earnings on banks, does anybody remember what I said? You can say it in 2 words. And I'll give you a clue. He's the president of our United States. And the second word is P. Come on, someone. Trump. Pump. Trump pump. And I said that they were overbought and to expect a pullback in these banks. I read off the numbers, 123 all the way up to 337. Way overbought. Way overbought. 24.96 all the way up to 57 for Bank of America. 38 all the way up to 124 on Citibank. 60 to 124 in less than a year. Way overbought. Especially when the houses ain't selling. Credit card debt at an all-time high. Interest rates at an all-time high. Way overbought. I mean, I was listening to a guy this morning talking smack. And everything he said made perfect sense. Trading stocks is like fishing. You got to get up early. You got to get to the right location. You got to make sure that that all your criterias are met, like good weather, or we just had a rain last night, the catfish are going to come out and bite this morning, or so I'm an experienced fisherman. And I take many people out fishing, especially ones that haven't gone much. Disabled kids, and I used to really be big into fishing. And I always told you got to put down the right size of fish hook. You got to have the right size of leader. You got to have the right size of the bait that you want to use to catch the right size of fish, what kind of fish you want to catch. Same thing with trading stocks. You want to, before you make a trade, you want to make sure that your setup is there and that you have the right amount of liquidity and that you want to trade, that you won't lose your gut on. Because we're all going to lose trades every once in a while. We're all going to lose a fish every once in a while. Sometimes we can sit here and wait all day long and not catch a fish. And then that one fish could feed you for a week. Sometimes you can go out there and just catch one right after another. Just boom, 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 boom when the time is right. Same as the market. You can sit here all day long and felt like you cheated yourself because you didn't take a trade. But if you didn't take a trade all day and the market wasn't cooperating, you didn't lose anything. In the days that come by and the market is in your grid, then you can go to town. It's like using a bait alert on your rod. Same thing as using an alert on your platform. It sets you up alerts, and when the alert triggers, you run to your rod and you catch and see what's going on. You look at your chart, your indicators, and it seems like fishing's good right now. Same as your watch list, your maps have them in different sectors. We used to catch white bass And I taught this guy, I said, how long you been fishing for white bass? And he says, oh, about 5 years. And I said, can I show you a trick? And I said, yeah. So I grabbed his ultralight rod and I stuck a torpedo on top of it. A torpedo is a floating lure. Then I cut a piece of string off, a little fishing line about 3 foot behind it, and tied it to the back hook, and tied a little jig to that 3 foot line. So now I had 2 baits in the water. And I cast that line out there. I said, cast that line out there. And he cast that line out there, and his first reel, he caught 2 fish. He said he'd never done that before, never caught 2 fish on one line. I said, well, let's do it again. And you'd go out there and be fishing for about an hour, hour and a half, right before dark or early in the morning. If you don't know what a white bass is. That's a white bass right there. They're good eating. Get 2 or 3 of them, get a couple of them on your line, on the 6-pound test line, and see how much fun you can have. Straight down, I'm still red on these. I was about even. About too far out of the money. I don't like being in this kind of situation. Visa hit my 3rd support. Now that's just down off news because interest rates are way too high and Trump wants to put a little, at least bring them down to 10%. We still drop more. I don't want to. I'll leave that alone for now.
Micro, I mean, obviously some trendsetters as far as the reports we heard this morning. JP Morgan obviously looking good, a beat, better trading revenue, and of course Delta sitting at the top of the K, filling the front of the plane. What did you make of it as far as what they told us and the market reaction this morning?
I was interested to kind of see how financials turned around. I thought that was a pretty good number by JP Morgan, and we'll get more data tomorrow. With Wells Fargo and Citigroup. Bank of America.
See, none of these guys understand not one of them, none of them said it was a Trump pump. They were saying it at first when he got elected. They're making a killing. I wonder if I had JP Morgan, where would I get in at? Come on, Jim. I'm going to have end up having a lot of contracts, I think. I think a lot. That would give me, yeah.
Charts or even just a wider breadth perspective, percentage of the stocks above the
Next,
50,
if you
percentage
don't
of the stocks
hold-
above the 100-day moving average. Everything's pointing in a very positive direction.
6932.
The one thing that gives me a little bit of a pause is something like the ADX, which is basically kind of showing a little bit of a sideways trend, and I think that makes sense. We really haven't had a big thrust to the upside in a while. We've had ups and chops, right? A little bit more of a consolidation, as I think is a proper way to put it.
What's wrong with stair
The
steps?
RSI looks pretty strong. It's back up around 62, 63, and it's uptrending. And you got a market that has continued to kind of move up within this kind of accumulation phase. I think the next big step will be this earnings cycle, and I think we need maybe tech to help kind of push us forward on that. It doesn't have to be the Mag 7. If you remember, Sam, only 2 out of the 7 of the Mag 7 last year actually outperformed the S&P 500, and we still set an all-time high. So I think that that's important for the viewers to recognize that it doesn't have to be the Mag 7. It can be other tech leaders. We've seen that already start off out of the gate with some of the memory providers, with other chip leaders outside of NVIDIA that have kind of continued to power forward, whether it's Micron and some other stocks like that. So I think it's important to remember that this dispersion trade that I heard your former guest talk about, I think I think that is something that carries forward into 2026. I think it behooves stock pickers. And maybe extends beyond a little bit at the index level. So if you're somebody that likes to do the research and kind of be more of a stock picker yourself, I think there's plenty of opportunities out there.
Oh yeah, absolutely. And we continue to see that rotation. I mean, industrials catching a bid, obviously, in recent sessions off the back of this whole idea around this being a sort of AI adjacent kind of backdoor into that tech trade as well. I mean, materials, just on the line to the downside, but that's been performing well. Utilities are higher today. Obviously, we've heard about these meta deals. Vista, of course, are looking to really bolster up the portfolio too. Interesting moves there. Any risks that you have on your radar right now? I know obviously things can come out of the blue, and it's always easy to sort of, talk about good news is bad news and bad news is good news for the markets. But what are you keeping tabs on right now, Joe?
Well, look, we got over a hurdle today with the inflation data. I think that's important, and I think you saw that the probability markets pushed up a little bit higher of a probability for a March cut, and even more so for an April or June cut. So I think that's helpful. I think we need to continue to see GDP perform. We need to continue to see earnings do well. I think expectations are for about 14% year-over-year growth. We're probably in line with that with our own expectations. And so I think the real risk would be something along the lines of unemployment creeping up a little bit higher. And as we get more and more of that data, remember, we're still kind of parsing through what I called earlier this kind of muddy data. So as that data becomes a little bit more current, we have to kind of keep an eye on that. But that's probably the biggest risk to this market right now, Sam, outside of some exogenous event that, it's just really hard to throw a probability on that one. It's probably unemployment.
Skill.
Yeah, and look, for now, 4.4, that was the bright spot within the data the other day, so let's see if that trend continues. Joe, always appreciate it. Thanks so much for the insights this morning. Joe Mazzola there, head trading and derivatives strategist over at Charles Schwab.
Charles Schwab.
We'll take a closer look at Intel and AMD. Both chip stocks were upgraded this morning. Morning Trade Live. We'll be right back with that story.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
First breakout we've had here on the TTM.
With Schwab.
It's the first breakout we've had on the TTM since the sell-off. I don't know what to call it. It's kind of like a wedge. Today's Tuesday, I think. I definitely got to do my... Oh, I got to pay my auto insurance too. Shit. Oh, God. I hate bills. Nothing in there. Today's 13. We're at 60. Let's go. Making me some money. Do. Tesla. Yeah, I think the banks were a no-brainer that they're all going to pull back. When I first started, Jamie Dimon this, Jamie Dimon that, Jamie Dimon, Jamie Dimon, Jamie Dimon. It's worse than hearing Buffett this, Buffett that, Buffett this. We're at 60. Do 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 do. $65. I'm real close to even. We're at. I mean, this sucks. See, you're close to even. I'd rather be a little bit closer. And there it is. I mean, that's the idea to scale out right here. If you bought the dip, I'd scale out and buy back more. See, that's the 63 EMA. Same as the V/ES. Gotta work your way out of them. I stuck a little turd by one of the IRS women this morning. By her desk. A little fake turd. Be sticking any turds around my desk. Oh, jeez. No, 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 no. Okay. Tesla bounced up off that 446. I was just looking at it. And look at that.
$11 sectors, but I mean, I suppose this is the closest thing you're sort of going to get to that. Just talk us through sort of the mixed picture beneath the surface here.
Yeah, I think there's something here for both sides. If you're bullish and you want to look at this as a glass half full, you got about 57% of the S&P 500 components higher on today's session. You're 1/3% off of an all-time high close. And as you mentioned, 6 of those 11 sectors are trading higher. However, you want to be a little bit more bearish, and you want to interpret this a little bit more negatively, maybe more glass half empty. Despite that, the 5 sectors that are lower, pretty objectively the 5 most important sectors: financials, information technology, consumer discretionary, communication services, and healthcare. So by size and market cap impact, your big kind of chunky sectors are the ones that are red, and that's why you have a red market.
All right, what about our big chunky stocks, the Mag 7? I mean, just seeing 2 names up today. Obviously, a $4 trillion market cap for Google Alphabet. Just talk us through some of the price action here. It looks like Microsoft is our underperformer today, along with Meta.
Sam, we spent a lot of time when I was helping out with Market on Close as we were closing out and starting this year, closing out last year, starting this year. One of the things that we kept talking about was the rotation out of the names like NVIDIA, Microsoft, and Apple that just so clearly seem to be happening. Every rally met with selling. Well, that continues, but we said,
can everybody hear me?
It's likely because there's a new home for some of that money, and whether that was spreading out to different areas of the market like financials or energy. There was really only a handful of stocks that had that kind of market cap that could be a one-for-one swap, and Alphabet kept being the name that seemed like analysts were really warming up to and investors were moving towards, and it continues. So that big shift continues to happen. Magnificent 7, though, down about 0.75% if you index it today. Absolutely a drag on the market.
Say it's a bit of an interesting move on Meta to the downside, given, of course, investors have had some concerns around their spending plans. They are looking at cutting some jobs reportedly and redirecting some of this cash away from virtual reality into
sort of SPX pulled back.
Well. So, maybe something else is moving that name today. But thanks so much for the breakdown, Alex. Really appreciate it.
Now, the SPX pulled back after it hit that 63. So I sold most of mine. Then I'm going to buy the dip. And hopefully by the second time we come back up here, I can get out of this thing even. Or we go ahead and break the 63 and run it on up. But right now, we've kind of got a little symmetrical flag here. And when I called sell here at the 63, you take a run like that and you'll get a second chance to, if you have the money.
Jumping over 3% on the prospect of a snap election in the country, which could further
this dip right here was a good buy. Once I noticed that started breaking out of the TTM squeeze, and we crossed the 9, crossed the 21, I knew it was going to run up to 63. So now I want this thing to come up and double top to 63, and then break out and hit the 200.
158 versus the greenback in what is seen as intervention risk zone. It was a bit more risk off in Europe.
Right now it's kind of risky trade, so you don't want to follow.
US court gave the Danish offshore wind developer the all clear to resume work on a $5 billion project, which had been disrupted by President Trump.
Set flag.
Inside Out, and we'll take a closer look at JP Morgan and the rest of the big bank stocks and bring you an example trade.
So we had snake breakout, pullback, inverse head and shoulders, and it's got to get past this lump to a double top break, and then run up to the 200. That's my game plan.
Schwab is here to help you move with it. So whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, Powerful trading platforms and 400 branches. All at your service, all so you can invest your own way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and
I've
forward-looking
got to
market
go and do a
coverage
couple
every trading
things.
day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're in
Wish I was about 10 years younger.
We're just getting started. Charles Schwab
Maybe
offers
20.
a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
If I was 20 years younger,
Data-driven analysis from
and
equities to global
20 years ago I was living, well, 21.
Connects the dots. Watch live, subscribe free.
I was living in Hawaii. So if I had to do it all over again, I would stay in Hawaii.
We're back on Morning Trade Live. Here's a look at big bank stocks after JP Morgan Chase reported earnings this morning. Citigroup, Wells Fargo, and Bank
It was
of
really
America
great because I get up,
earnings tomorrow ahead of the open, and we
I'd be able to trade the market about 3 a.m. in the morning,
We've got JP Morgan
get all my trading done, and the sun come up, I'd go down to the beach.
sitting up, and so is Citi. But Bank of America is lower, and a few things weighing on this trade this morning.
And do it over and over and over again.
Policy news as well, perhaps. So let's go inside out on JP Morgan's earnings and some of these other bank stocks as well. So joining us now, very pleased to say, is John Petrides, portfolio manager at Tocqueville Asset Management. Thanks so much for joining us, John. So takeaways from JPM. I mean, any surprises there, or much of the same?
Now, this is one of the issues where bank stocks had performed so well in 2025 that the bar was set very, very high. And the narrative is very well known. We understand deregulation. We understand a lower valuation. We understand a wider yield curve spread. So, particularly for a company like JPM, which is a stock we own, is one of the
I will take you to the bottom of the ground.
Banks. You don't need much, or you need a lot to move the stock higher from here. And there were some metrics that investors wanted.
Because I am Dar.
But as a quality franchise institution, the results are very strong.
Right, okay. As you say, setting a high bar. We know the story for 2025. I mean, things look pretty good. There is an expectation that that's likely to continue this year, particularly with what the Fed is likely to go do, the steepening yield curve as well. I mean, people are still bullish on, of course, the stock market as well. But let's talk about the boss himself. I mean, Jamie Dimon comes out with some pretty high-profile comments. I mean, he's been very open about his thoughts on the economy in recent years, around his concerns around stagflation, but also, I mean, some of his remarks around the cockroaches too. What did you make of what he had to say about the economy?
Well, I think, like he always does, he lays a very realistic picture, and he makes sure that he lets investors stretch their thinking in terms of probability of outcomes. And the picture that he put forward is that the underlying economy is healthy. You have catalysts coming. The consumer, by and large, is okay. There are parts of the consumer that are stronger than others, but you'll have benefits from the One Big Beautiful Bill tax refunds. You'll have stimulus coming in the form of a shot in the arm of the U.S. hosting the World Cup, the U.S. 250th anniversary. That'll get consumers to spend, and then a new Fed coming in has the likelihood, particularly being pushed by President Trump, to be slightly more accommodative. Now, although JP Morgan put, I think, in their presentation that they're expecting 1 or 2 more rate cuts, that's debatable, particularly given the CPI data that came out today. Now, that being said, that's clearly what the president wants, is for the Fed to be more accommodative as we enter the midterm election cycle. So underlying economic trends remain quite solid, which is favorable for banks in general.
Yeah, I mean, he talked about the resilience, didn't he? And this sort of sets the tone for the broader earnings season. And I mean, you know, we've seen that very much with Delta as well. I mean, you know, where some of those consumers are actually spending their money too. But yeah, I mean, obviously first cab off the rank with JPM this morning. Then what is the setup for the rest of the banks? I mean, particularly given that things look a little bit skewed because, of course, of all this credit card policy talk as well.
Yeah, the credit card policy talk is quite interesting because part of the narrative last year, and particularly post the Trump presidential win, has been deregulation within the financial sector. And here you have more populist politics type of move of trying to regulate interest rate on credit cards, particularly as we know inflation is an issue and the consumer is stretched as you head into a very pivotal midterm election year. So I don't think that a cap on interest rates credit cards will happen. You know, Jamie Dimon was actually vocal against that because he thinks that would restrict credit on the lower income consumer who need the most help. They need the most flexibility. They need the most wiggle room, given where the cost of living standard are these days, right? That's been one of the pushback on bank regulation is that the standards have gotten so tight that it's forced out the marginal buyer because they couldn't get access to credit. So his comment is, you know, banks would lend less to those that might need it in the form of credit cards if there's a cap on rates.
Right, and as I mentioned, with some of the names reporting tomorrow, just very quickly, I mean, do you foresee any risks with the banks this year, particularly with the K-shaped economy, the rise of defaults? Obviously, we've had some credit warnings and scares as well.
Yeah, no, risks in terms of fundamentals, not really. You know, they went through the non-bank financial institutions. That's sort of the cockroaches that was, that was being brought to the forefront, and fear of some sort of contagion within that space. And the reality is, you know, will there be loans made to, non-par, non-substantial, non-qualified type of companies? Of course, there's always default in that space. Does it get systemic and out of hand? You know, the jury's out on that. You know, Warren Buffett used to say that part of the issue with private equity, private credit is that we've never seen this type of cycle before. So we haven't seen what happens when the tide goes out. So right now, things look okay. People are very aware of these types of potential risks, but whether there's something systemic to the broader financial institution, it's probably too early to tell.
Yeah, I mean, we're yet to see who's been left swimming naked when that tide does go out, but obviously something to keep an eye on. John, always appreciate it. Thanks so much for the setup for tomorrow's bank's earnings. John Petrides there, portfolio manager at Tocqueville Asset Management. Let's trade it now with Tom White, host of Fast Market. We're talking about Citigroup, and you've got an example trade for us this morning. Tom, what's the approach?
Yeah, this one's been the big winner over the last year. CEO Jane Fraser has done a great job. They've gotten rid of some underperforming assets across the globe, and that's provided a lift for this company. Option market's pricing in about a plus or minus 4% move either way in the stock, less than $5 either way. So I looked at a strategy. We're seeing maybe a 2% pullback in JP Morgan. Citigroup's relatively flat today. So I looked at something a little bit neutral where I can take advantage of that higher implied volatility going into the report with the expectations maybe the stock's not going to move a lot, but still staying risk-defined in this example trade here. So going out to the January 16th monthly options that expire in just 3 days. So this is a pure earnings type play where we're going to sell an iron condor. We sometimes call this a short iron butterfly because you're selling the same common strike on the call and put on this one. But we're going to sell the 117 strike call and sell the 117 strike put. So your shorter straddle there on the 117 line. And then against it, to make it risk-defying, we're going to buy the 112 strike put, $5 to the downside, and then buy the 122 strike call, $5 to the upside. So it's a short $5 wide neutral iron condor or short iron butterfly. You're going to collect a credit of about $3.50. That's what you can potentially make on it if the stock settles in here around 117. Now, because you're collecting that $3.50 credit, you got $150 in risk, but that's below 112 on the downside and above 122 on the upside on that. And your break evens where you want it to stay between about 113.50 on the downside and 120.50 on the upside. So you've got a decent range on this one. You just need some consolidation after this.
The ball. What's going on here?
Last 12 months. and a muted
Jim, you
reaction
idiot.
post-earnings. I think the key is you're still risk-defying on this one, so you know exactly what your downside is, but you need some consolidation.
See, this ain't paying off as much as I thought it would.
Okay, we'll be watching this time tomorrow after this company, of course, reports earnings. Thanks so much for that, as always.
These are my two targets.
Thanks so much for joining us here today on Morning Trade Live. I'm Sam Vardis. Download the Schwab Network app, available
Somewhere in this channel right in here.
24/7 on schwabnetwork.com. We've got Trading 360 with Marley Caden coming up next.
Looking for a place of consolidation. And then I'm using that with my moving averages.
Schwab Bank Investor Checking. The checking account
So somewhere in here,
named highest in client satisfaction by J.D. Power for 7 years in
and
a row.
that'll hit that
Investor
orb.
Checking, you get the award-winning features of our checking account.
I think that's the
plus
orb.
Cash management solutions. All
Now see, here we're at, this is another dilemma.
unlimited ATM fee rebates for
I should have sold him at 60.
worldwide. No overdraft fees and enhanced security features to keep your money safe.
Because of this double top.
Because your investor
So I just now
checking
noticed
is linked
that.
to
That
your
was probably
Schwab
my
Bank
bad
brokerage
right
account.
there.
You can manage your checking and investing in one convenient location. Moving funds
And then
between
bought the
your
dip.
accounts is easy. Cash moved to your brokerage account is available in seconds. That
Yeah, I
means
missed
you can
that.
Stop waiting and start
I should have jumped
investing
on
in
that
stocks,
instead of looking up
bonds,
here.
money market funds, and more. Get more with Schwab Bank Investor
And looking at
Checking,
that 200
the checking
EMA.
account built for investors.
Now, if we respect this previous resistance of the double top, that'll show respect, and then that'll catapult it back up into this area in here.
Real-time market
I
coverage
think.
meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the mind
Trading
of
stocks is a lot of, like fishing.
A higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute.
When I first traded, I used to finish the day off. Power hour would be with a beer.
With speed, accuracy,
I'd have a special beer, specialty beer in the fridge.
Important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists.
Da 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 da
Streaming
da.
live.
Schwab Network, streaming 24/7, any screen, anywhere.
I think I'm gonna go do my
SchwabNetwork.com.
duty here. I'll probably be out of this trade before I get
When
back.
my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Ooh, my coffee. Fuck. Oh, I got it.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have coming up on today's show for you. We'll check in on big banks after JP Morgan reported this morning. We'll also have Citi, Wells Fargo, and Bank of America reporting later this week. We'll discuss what you might be able to expect from those earnings in our 360 spotlight. And KeyBank upgraded AMD to overweight from sector reform with a $270 price target today. George Tillis will break down that news for us and also have an example trade in our disruptor. And Delta shares under some pressure today after an earnings beat but having guidance that lagged estimates. We'll dive into those numbers and break down what it means for the airline industry in our 360 round. Before we get to that and more, though, let's see how the markets are faring this morning in the wake of our inflation data. We got a bit of a mixed picture here. The S&P trading slightly lower, down about 0.25% at 69.62. The Nasdaq also down about the same, 25,730. On the Dow, we sold off about 300 points this morning, 49,290. And the Russell, our only one in positive territory for now, up about 0.1% at 2638.37. In terms of the 10-year, not too much reaction to the data we got this morning, holding about 417. The dollar 98.83. For gold, we're at 46.27.60, up 0.25% right near those record highs. Crude oil up 3% higher, over $60 a barrel. Now we're at 61.31 a barrel. And Bitcoin rising higher today, up 2.4% at 93,865, inching closer back to that 95,000, but still way off our highs of 125,000 that we saw late last year. I do want to welcome in Alex Coffey, though. Talk about one of the big movers and a big story this morning that's developing here. That's, of course, L3Harris and another investment by the government.
Yeah, and you read the headline and you start thinking there might not be much to this story, but the more you dig, it's quite interesting. And so the headline is the Pentagon is investing $1 billion in L3Harris's rocket motor business.
Not a good idea.
But as you start digging, you really do see that it's sort of the first of its kind in this proposed deal. So as we said, they would make that $1 billion investment in the missile business to turbocharge production of the rocket and missile components. But the defense contractors said, so L3Harris that is, said that they plan to spin off this missile segment into a separate publicly traded company set to IPO later on this year, maybe the second half of this year, and it would be backed by this minority investment from the Pentagon. This standalone new business will focus on making solid rocket motors for the U.S. and its allies' weapon systems, including the Patriot, THAAD, and the Tomahawk missiles. The Defense Department plans to make this investment through a preferred stock that would convert to common equity after the IPO that is again set to occur in the second half of this year. One thing that's another one. Well. So that's basically the genesis of this story. But the CEO of L3Harris talked about recent Trump administration actions, placing a renewed emphasis on strengthening.
I don't agree with government involvement in our markets.
Year wave of consolidation. So, in a way, this is another example of that kind of private-public partnerships blurring those lines, but a new name, maybe for those who follow defense contractors, this isn't a new name, but to me, this is not a name that I followed closely, and it's maybe leveling the playing field just a little bit. It's not just Boeing, RTX, Lockheed Martin, that short list of names.
Here's 193 all the way up to 361. It's already had a run.
Upside on this news, and certainly not the first government investment that we've talked about, with Intel and some of these critical mineral companies. But
Pentagon investing $1 billion in. I don't see how they can get away with it.
This deal is unusual,
investing,
particularly in the defense sector. In any of the commentary that you've read or any of the articles you've come across, has there been any concern about any regulatory?
Most of them idiots up there are dumbasses. I don't want them taking my tax money and investing.
Regulatory scrutiny, but more that blurring of the lines and what that means for defense. Contractors and the feeling.
Another thing.
The preferred interest
about the market.
Of some and the others. As
let me see if I can get this all down.
Department would make many of these calls for where some of these contracts maybe would go, and if they're invested in some and not others, does that
I used to say this all the time, but
kind of comparisons to sort of those public military partnerships that maybe you see in countries like China.
I had a different way of saying it.
Early, kind of this is the first day of these discussions, but interesting structure. And another example, I think critically though, of the Trump administration looking to get return on sort of these, they're not just grants, they're investments.
Might come
and that's
back
a very
to that
different
later.
approach than really any administration we've seen in the past.
Will be interesting to see how this plays out. The administration coming out and saying they're going to source their own supply in a different way. And
it's about things that you can't control in the market.
Points about some
you just have to kind of write off.
Interest, market competition here as well. Thanks to Alex Coffey, co-host of Next Gen Investing, for breaking this one down for us. Do want to take a wider look this morning, though. We did get
government spending was really crazy the last 4 years.
In terms of what
I've never seen so much money spent.
Want to welcome in Eddie Gabor, owner of
out of any administration for 8 years, as long as it four.
Thoughts on the market reaction that we're seeing
trillions,
this morning?
Trillions and trillions and trillions and trillions and trillions.
This says a lot, and it's actually
and it didn't do no good
because The market's been up 5 out of the last 6 days, and we got some data coming from inflation that usually moves the needle one way or another. And I think what the market and bond market is saying is that the worst is in the rearview mirror here in the near term from an inflationary
So we had the
perspective.
pullback
Yeah,
already
core
on this
came
one.
down.
I expected to
And
pull
so
back
I think
more.
the setup over this quarter is going to continue to favor economically sensitive areas because we believe with energy prices down, housing prices down, that inflation is going to trend
Yeah,
downward
I'm
on a
gonna
rate
look at it.
change
It's up
perspective
too much.
for the next few months while
I'd
the
short
economy
it.
surprises to the upside.
I would've shorted
And I
that
think
this
that's what
morning.
the market's telling you when you look at these economically sensitive areas that we're favoring right now. They are really outperforming the Mag 7 and some of the leaders that have been
So we're
led the way the
kind of
last few
threatened with that
years.
resistance
And I
level
think that's gonna be the story
that I
here
need
for
to
the
get
first
to
part of
get out of this trade.
2026.
Say that we need to position towards more economically sensitive areas, and also you're expecting that growth is going to surprise to the upside.
L3
Outside
Harris
of
rocket
seeing some
motor
of those
business.
more sensitive areas outperforming the Mag 7, what other data points are giving you that confidence?
So again, I think when you look at the concerns that we had in 2025 with tariffs and inflation accelerating, these energy prices down is a real tailwind for the consumer.
Coin up
And
today.
it's a tailwind for small caps. This is why I
Baba's
think
up
when you go
again to
into earnings
170.10.
season, what we're going to be looking at is how much these
Yeah,
companies
PDD is probably
because
would be my
the
next
bar
long
set
in
really
China.
low for areas like housing and these small cap areas. And when you look at tech, the bar is set really high. So this is why I think you're going to see this transition from technology into these other areas. These institutions are going to be forced to buy these under-owned areas because they've been hated and left for dead. And I think they'll be big leaders this year.
And Eddie, you made this contrarian call on housing back in 25 when we were sort of looking ahead to 26. What do you think it is specifically that the market is underestimating in that sector? And also, how do the recent announcements from the administration play into that call potentially being correct?
Well, when you look at housing, it's off to a big start this year. And one of the biggest reasons why is we do think this administration is going to be committed to trying to get housing back. And they've shown, whether you agree with their policies or not, doesn't matter. They've done what they say they're going to do in certain areas, and they continue to focus. And the announcement of trying to get bonds, $200 billion of mortgage-backed bonds to be purchased is going to bring mortgage rates down. And if consumer confidence grows because of growth in wages as well as inflation coming down,
55
that's going to give the
cents.
consumer confidence to buy houses. So I think it's going to continue to outperform. And so it's off to a good start.
I come
It's a
back and
volatile
sings
area
up
without
$2.
question. But they've been down for 2 straight years. I'm betting that they're not going to be down
Woo!
in those areas in year 3 here.
And I know that you were pulling back some of your weighting in terms of tech, and you just mentioned again, that tech's overplayed here. But a lot of investors still saying that they see it as a market leader. So I'm going to call
It's
this
rising
another
wedges on
contrarian
these
call
knives on the
almost, that you're now underweight
SPY and
tech.
the SPX.
What's driving that? Is it valuation concerns? Is it earning risk concerns? Or is it just this broader rotation that we're seeing?
Should I eat lunch before I leave, or should I?
Everything. A, I think the rotation is going to continue. And B, it's not that tech is not in a bull market. It's just the bar set too high. I don't see how they're going to have major surprises to the upside in earnings. All of the good news is really priced in. And so when you look at the year started now, it's still early on, but a lot of times it's an indication on what the market's going to do for the year. The Mag 7 really hasn't done much for the last few months, while other areas have come to life. And I think the market is front-running what's going to happen here come earnings season. So it's really a play on the fact that I think earnings aren't going to surprise, and you'll have a better buying point at the latter part of 2026 in technology than you did at the beginning of this year.
And I have to ask about financials, obviously, with getting JP Morgan this morning and the rest of the banks starting to come, tomorrow. What's your thoughts on that space? And also, what are your takeaways from JP Morgan and particularly the market reaction we saw to their report?
So we're bullish on financials heading into this year. Now, one of the biggest things that we certainly didn't have in our playbook was President Trump coming out and announcing a 10%
55
cap
cents
on credit cards. That's really what's hurting financials here. Because traditionally, when you get an economy that's going to accelerate and a Fed that's very accommodative, which is the setup, it's very bullish for financials. Now, we think this weakness, because of the credit card risks is a buying opportunity, in our opinion, because we don't think this legislation will
Dow
actually
Jones
pass
down.
or stick. So we're looking at it more as a headline risk right now until proven otherwise. So we're going to stay with the financials here in this first quarter because we think they'll be very, very bullish in earnings season.
And I know last time we spoke, you were also bullish. Under investigation. We are still seemingly holding a dovish Fed, but we are going to get a new Fed head. What's your take on small caps? Are you still bullish?
Very bullish. I don't know if there's an area that benefits more than the economic setup we have. You have a dovish Fed. You know the new head of the Fed that's going to be announced is going to be perceived by the market as more dovish than Chairman Powell. They're doing light QE. And again, you have an economy that's going to accelerate growth-wise.
Yep.
And inflation looks as if for the next few months it's going to continue to trend downward. So we think the year-over-year earnings growth in small caps are going to be very strong. And when you look at the IWM, it's had some great performance. And in markets like yesterday, and it opened up down, they just can't keep it down. Buyers are keep coming in and buying dips in this area. And I think that will continue here in this first quarter of 2026.
All right, so if that goes into the first quarter, I know you said you expect your outlook for 26 to be pretty similar to 25, with a caveat there. You expect a major correction somewhere along the way, but new highs by the end of the year. What specifically do you think investors should be looking out to know when that correction is starting?
So I think you're going to see that start in the tech space. And we saw some signs of that towards the end of last year with some frothy names that sold off by 25 to 30%. I think when we go into tech earnings season and going into late March and April, you're going to start to see the AI trade get tired, in our opinion. And I think that's going to start the correction. It's going to be healthy. It's good to have these corrections, in my opinion, for the longevity of the bull market. So we're going to be continuing to look to shift out of those areas and stay in areas that continue to show really good, strong technical strength. And then look to buy back and rotate more back into technology later in the year. So we think it'll be mainly a technology correction.
Eddie, we appreciate you taking the time to join us this morning. It's always a pleasure to talk to you. That's Eddie Gabor, the owner of Key Advisors Wealth Management. And we've got a lot more for you today on Trading 360. Next, we've got the big three: 3 stocks, 3 charts, 3 trades. Kevin Green will be taking us through the technicals today, and Charles Moon will take us through the trades for AMD, Credo, and Amazon. That's next on Trading 360 on Schwab Network.
Got appointments, gotta go meet. Oh, I gotta pay my auto insurance. Did I say that already? Yeah, dadgummit. I'll do that tonight.
Iconic trading floor in the world. This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley
Here we go.
Kagan. It's
Break.
time for the big three. We've got 3 stocks, 3 charts,
We're now
3 trades for you.
we're now
Tom Green will take us through the
Marley.
charts, and here to take us through the trades is
We're now at the 200. This was my goal. I think we can get on up to the 200 SMA, and I can get out even. No, I'm green almost right now. But if I get another 10 cents.
For the Supreme Court ruling, the president himself didn't do the markets any favor by basically saying we're screwed if the Supreme Court does rule against them. That kind of already has a preset mindset for traders and the institutions, and it could be a pretty violent reaction once we get that ruling. The prediction markets are already suggesting that there's a 3 out of 4 chance that the Supreme Court is going to rule against the markets.
No.
But, we're bullish off the CPI. We'll see if this momentum could be at least somewhat sustainable. But I think everything's kind of tees up, for the Supreme Court ruling, and then we're just going to have to take it from there.
Yep.
All right, so then let's kick off the big three here. Your first one I was just talking about 45 minutes ago, got a pretty impressive upgrade from KeyBank earlier today, basically saying that their server checks show they're pretty much sold out almost through 2026 and may increase their prices here. I'm, of course, talking about AMD. Walk us through this pick and where you see AMD going.
Yesterday we were wondering if AMD was going to break down below this $200 level. It's a key accumulation level that it's rebounded from for the last month and a half. Well, they're up over almost around 10% off of that level. They touched on the 200 on the 50 SMA today. This is key, this 222 half level. If we could break free, I could see AMD really shooting up, probably in the range of around 235 in the very near term. Obviously, that's going to be somewhat market dependent. But now that it's stalling here, this could be a great play for tomorrow, especially in relation to how the markets may react to the ruling. So it may be a strangle approach at this moment, back down either towards 200 or launching up towards 235. It essentially is at a break or make moment. I do like the idea that they could apply pressure. They've been performing better than other counterparts, NVIDIA in particular. So this is a name that's shown strength going into this ruling and really has the ability of breaking out if it could get through that 222 half level.
All right, KG, so as we take a look at the charts, knowing AMD is up about 5.75% right now on the heels of this upgrade, does it look like we have the possibility to break out above those levels?
Yeah, definitely. I mean, if you're looking at the primary trend for AMD in a 1-year time frame here, obviously it's still making higher highs as well as higher lows with, maybe a month or 2 months of a consolidation before breaking out higher. And that's exactly what we saw. Actually, if you go back and look at around, let's say, October,
so they're pumping AMD
up to the upside here.
on an upgrade.
That's really what we are testing as an area of support around that $200 level, but we have been able to maintain it. And we are starting to see this kind of triangle formation taking shape. And we also have that 50-day moving average, which is in yellow here, acting as an area of resistance. So if you do get some buying activity and we're able to break out of this formation, yes, that can be bullish. That's when you can start looking at the 265, even 270 level when it comes to AMD. But the big risk that you have is any type of breakdown below that $200 level. There's not a lot of activity on a volume standpoint to give you a lot of support. And then you're starting to look at around that 170 level, which is the lower end of that breakout here. Now, RSI is actually in a bullish formation. We were making lower highs as well as lower lows, but we have now broken that downtrend. And MACD is trying to set up in a bullish formation with a 12 EMA above the 26 EMA here. So I would say a little bit more bullish than bearish. But if you get any type of material breakdown below that $200 level, you're talking about another $30 until maybe some buyers really, truly try to step in here for that bounce.
Right now trading just below 220, and this move to the upside we're seeing for AMD today did move it into positive territory for 2026, up about 2.5% on the year so far. This next pick you have Credo Technology, a very interesting company. They invented this copper-based cable for AI servers, so a big potential part of this AI build-out series here. Also, Needham says they're a top pick for 2026. You walk us through this one.
Yeah, this was a monster performer in 2025. Over the last 3 months, there's been just a huge amount of volatility, but what's been really fairly consistent in terms of price performance is that anytime they've dropped below this 130 price over the last few months, buyers have just stepped in and really brought the stock back up to the tune of, in the range of around 190 to even over $200. So once again, they just a few days ago came down to this range. They've been nothing but ascending since. Today, they've propped up against the 50 SMA, and now they're utilizing it, at least intraday-wise, for support. So usually when I see
1 trillion in sight,
as we have found in the last 2 days of trading, now immediately turn to support, it's a bullish sign. And so as long as CRDO holds this 155 price, I actually love the jump to right around 170. But probably the eventual run is going to be close to that $190, $200 price. That's been the consistency over the last 2 months. Rinse, wash,
okay, I'll be back.
All right, and KG, as you look at the technicals here, are you seeing that same support level around 155 and some bullish signals here as well?
Yeah, a tad bit here. If you're kind of looking at the price action, you could say it has been, for the most part, kind of range bound, but it's a megaphone pattern that's also...
Oh, megaphone!
We are making higher highs.
Woo!
Instead of developing this pattern, you are seeing it's low, but lower lows within this overall consolidation here. And now we're pretty much trading at the midpoint of that range.
Yeah, it has to break that moving average.
A little bit more optimistic than Charles. You're really talking about $215.
What is that? 50
major area of resistance.
50 SMA.
And you can make the bull case right now, and it is being tested. That 20-day moving average is now
50,
been,
you idiot.
Leveraging as an area of support. That 50-day moving average, you can close above that for 2 or 3 sessions in a row on large volume. That's also going to be bullish.
There's another.
We have that MACD at the bottom crossing in a bullish formation.
He said something right there very important.
Now it's not above the zero line.
So, listen to this. What he just said. I'm sorry I haven't brought it up much. But there's your 200 SMA. So he's saying you don't have to jump right in it. Wait for it to break that 200 SMA and hold that 200 SMA for 2 or 3 days. And then jump in it. Let it consolidate above that breaking point of the 200 SMA. So wait 3 days. It's where patience comes in. Marley looks hot today. Yummy, yummy, girl. So do you understand that? The 200 SMA
240 price
is a leading indicator. If you break above it, you become bullish, and if you break below it, you become bearish. And you can trade it under it, or you can trade it above it, down to it. So let that be said.
It's more likely to go down than up, but it actually might hold up a lot better than other counterparts. And this is really something where I would be looking eagerly for a pullback to this 240 price range for a dip to rip idea right back up to around 250, and with that potential momentum carrying it all the way up to 258.60 or higher. So this is one of those names that I would be looking at from the Mag 7 that could possibly withstand any downside pressure in the markets. I would probably stop myself out if it got below 236.
Okay, now listen to this.
But if it did,
we got the SPY sitting at yesterday's after-hour low right now at a support. So if this thing we've got a yin-yang, what was resistance now becomes support. So if this thing holds, it could run back up and break this resistance level. That's on the SPY. And this is a 1, 2, 3 dip right here. And it's a two-headed snake.
and break out of that triangle formation, if you will. Now this is where it gets a little bit difficult. The RSI is already at that overbought territory and it's starting to hinge a little bit lower. Usually once we start seeing that hinge a little bit lower, it continues to go in the direction of that hinge, which means moving to the downside, or price momentum moving to the downside here. The conflicting indicator is the MACD, so that 12 EMA is still above the 26 EMA at this point in time, which is bullish. I would be cautiously optimistic with this one. I would say come back, retest at least that 50-day moving average, that 20-day moving average, which wants to try to cross here. Maybe some buyers step in. If not, 230 would not be out of the question for an area of support. You would really get a little bit bearish on this if it hits 218, that 200-day moving average, and breaks below. That's where you could see a massive move to the downside. Not sure if that's really priced in the market right now, though.
And Amazon down on the day, almost 1%. 4 of our Mag 7 also lower on the day today, but Amazon trading at 244.18 right now. Want to thank both of you for being with us for Big 3 today. Charles Moon from Prosper Trading Academy, and of course Kevin Green here from Schwab Network. Thanks again. And coming up, we're going to spotlight the banks ahead of earnings this week. We got JP Morgan this morning. What does it tell us about what we can expect and what it might mean for the broader market? Stay with us.
Okay, I'm going to get ready to go. And I want to also say I think a person can learn too much, have too much indicators, and still not work out for you. So try to thin out indicators that you don't use as much, put them on a separate chart them alone. You can always use them as a reference.
Courses available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets.
And the video did break out this morning.
Breaks down the macro
Look at this.
driving the price action from Fed policy to global.
So you got Nvidia, and you got a fallen wedge. And I called this thing out this morning. So you got a fallen wedge. Now I'm going to show you how to draw this. You got this down here for sure. So you want to take your trend line, go from the body of that candle, just get a kind of an outside diagram. Doesn't have to be perfect. So that's a fallen wedge. And you can see it kind of coming down in here. It's almost like a bull flag. And if you can count to 4, you might make a little bit more. 1 2 bits, 3 bits, 4 bits. Boom. But there's a little, you can see the wedge in there. Lower highs, lower lows. There's a big hammer right there. That's pretty bullish. Always clean as Jim. See, I see that hammer. You don't see anything in here like that, do you? All the bodies are more or less closing up. Here's a couple inverted hammers up here. Then you got this one down here. I mean, I wish I'd have caught that. Keep your watch list simple and clean. Ooh, SMCI's had a beat down. I thought this one just had a run. PLTR, another one that should be a daily watcher. For volatility, because they're all, you know, PLTR is way overbought. But that would have been a pretty trade this morning. Double bottom off the bottom of the orb. In and out of that trade by now. Secretary of War Pete Hegseth visits Elon Musk-led SpaceX Starbase. Peter Thiel donates $3 million to fight California wealth tax as Gavin Newsom vows to block measure. I don't understand why a country would want to block success and reward failure. Are Americans that frickin' stupid? Mister's up. Another good one. And I'll be back. I think I'll finally go this time and then come back and have lunch. If I don't have it on my way out and back. There's something else I've been saying here lately. You don't have to trade every day. I used to get real mad at Vegas when she said that. Because I always had this idea that we're bullish every day, but you get your good trade in, take the day off. This one guy trades an hour and a half a day, He wouldn't tell me his time frame, but I took a pretty good guess what it was. It's definitely in the morning. That's all he does. Trades one trade a day.
Expansion in regionals and small caps, where I'm finding banks in the 10 to 11
The
forward
banks.
PE ratios with nice growth rates. If you look at Huntington Bank shares, HBAN, you know, it's about 11 times earning.
Hey, you pumper, this stock is way overbought.
Peers as far as its markets, its acquisitions, completing one here with Cadence here in February. That'll close. Just got approval. They lead their peers in deposits and deposit growth. So that's a great bank. Why wouldn't I rather own that rather than J.P. Morgan, because it's growing faster? And then if I look even further down the line, there's two banks in Texas, which is a great market. The two top banks that grow by tangible book value per share growth, the top two are South Plains Financial, SPFI, and Third Coast, TCBX. Both of them growing very fast and have nice 4% margins, very robust.
Oh, we don't want Mr. up here.
Really
Want
good,
to
really
spy.
good banks.
Or head out.
So I think I'd rather own them at a 10 or 11 PE rather than JP Morgan at a 16.
Exactly.
Great insight there. And Dory, thank you for taking the time to be with us to break down JP Morgan's earnings as well as preview some of the banks we'll be hearing from tomorrow. That's Dory Wiley, President and CEO of Commerce Street Holdings. And coming up, stay with us. We've got the disruptors. We'll be taking a look at AMD after an upgrade. That's next.
We're going to take a look at AMD after an upgrade. That's next.
So when I get back, I'll be going out the next day to trade the SPY. My cutoff is about now, noon for sure. PANW was another one that was pumped. Let me see how this thing did here when they mentioned it. 10-day, 30-minute. Well, it came down. It ran up on the pump, and then it came back down. Did TSM have a sell-off yesterday? No, it had a run up. See, we're at resistance levels, so I wouldn't want to jump in this. I'd come down to the lower part of this channel, maybe the bottom of this gap, set an alert. 321 something. The bottom of the ground, for I am Dar. I wonder if that Hell's Angel would get mad at me if I called him Dar. For I am Dar. NVIDIA new high. Okay, I'll be back. Water, turn on my sound. Make sure I got my right. Dar. And I'll leave the slashy yes up. See, we're back up at resistance. I'll probably have this sold when I get back.
%, best performer in the S&P 500 today. This, as the company did raise its guidance, so that's a nice name in the healthcare space that's capturing my attention. You do have the president talking about 25% tariffs on countries that are working and doing business with Iran, so that's one story. The other is the president still holding steady on the fact that the Fed should, in fact, cut 25 basis points in the January 28th meeting. With our CPI print, inflation being a little cooler than expected today. And we'll continue to have a lot of financial earnings throughout this week. We've got new home sales, and we'll have a lot more to go on.
Yeah, we certainly will. But let's talk about Alphabet here. We saw them become the second largest company by market cap. They passed that $4 trillion valuation here, announced a series of retail partnerships. Now they've got a series of upgrades this morning. You know, we are seeing them continue to move to the upside, up almost 2%. You know, what's the latest here?
Yeah, I think the Google Alphabet story is an exciting one. To hit the $4 trillion market cap is a really big deal. You have multiple price target hikes, which we have there on the side slab for you. Bank of America 370, TD Cowen 355, and Goldman Sachs. They all have buy ratings at 375. So those are the upgrades as far as the price targets. Some of the reasons, for example, one is on advertising, worldwide digital advertising. And so we did see that from TD Cowen. Also, the deal that they made with Apple and Siri, that has brought some optimism. But this particular story pertaining to retail and National Retail Federation is Google's big place here with Walmart, but also Wayfair. And it's a common language. You can go on Google and from discovery to checkout, you know, basically from the beginning of your experience to the end of your experience, you'll be staying on and with Google. And Wayfair's chief technology officer is very excited about this. They are establishing a common language for AI agents to help folks sort of navigate through this new type of process that this is what's called the Universal Commerce Protocol. So get used to UCP. It's a new sort of acronym. And so that's going to be UCP. We may hear that more often. But just the fact that you have Google and Wayfair now really setting the tone for retail going forward, that brought some optimism too.
All right, well, we are seeing a nice move to the upside for Alphabet today. Nicole, we appreciate you highlighting some of those notes that we're getting and some developments here as Alphabet continues its run in 26, up more than 8% so far in 2026. That's Nicole Petalides. Thanks again. Now it's time for our disruptors. George Tillis, our senior markets correspondent, is here with today's company. We're talking about AMD after getting a very important, very bullish upgrade at Key Bank. You know, shares up almost 6% right now. You know, what can you tell us about that note?
Well, we're seeing a really nice day for AMD, which we know is still a traditional CPU-based business, second place to Intel in that regard. But if you look at the GPU technologies for AMD, overall, the estimates for this fiscal year at around $15 billion on the high end represents around 30% of total sales. So this is, again, a company with their MI300 and 400 series GPU chips is starting to encroach on some of the market share, especially in the inference chip technology stack associated with NVIDIA. If you look again, NVIDIA is still leading when it comes down to 3D accelerator chips and, of course, large learning model chips. But inference, I think, is the name of the game coming up this year. Other thing you got to keep in mind with AMD, it's actually a very comprehensive portfolio of semiconductors, including field programmable chips, which are used in factory automation. RFID, I think, is another theme that might be very hot this year as well. So I think manufacturing and industrial stack, as well as automotive, is another area that AMD is potentially going to thrive in. And if you look at the analyst call today, quite remarkable, a $270 increase in terms of price for Key Bank. They increased their rating to an overweight from sector weight. They actually see the CPU markets, not necessarily on the PC end of the verticals, but in the server stack, they see AMD sold that completely out for 2026, and they're anticipating price increases. This is a natural ascension, considering again the sales demand for their end market server chips and CPUs. So they're expecting a price increase when the company's going to be reporting their earnings coming up in Q1 of this year. They're also looking, as I mentioned, at around $15 billion on the high end for their MI3 and 400 series GPU technologies chips, and that's increasing, if you will, to around 30% of sales. And lastly, if you look at the earnings multiple for AMD at around 32 times 2026 earnings, one would say historically it's expensive, but not necessarily in regards to the earnings growth estimates for this fiscal year, which are close to 30%. So it's only trading at a 1 times forward PEG ratio as well, and that could also be why KeyBank is still strongly bullish on this name.
All right, so with this bull move and this bullish note, we got the 6% move to the upside. This move today took them into positive territory so far for 2026,
Yes.
but they had a very impressive year last year. How would you look to trade AMD right now for example purposes?
Well, so look at the context of the market, Marley. We've really been in a trading range, slightly higher since October. If you look at the gap on AMD in October, and this was based on some favorable news with OpenAI, it's retraced off of the highs, but it seems to be holding that gap. If you look at a rising 100-day moving average, it also is a corresponding technical area of support, but at the same time, the stock is nestled between that 50 and 100-day moving average, below the 50. So if it's below the 50, I have a rule that I won't place an aggressive bullish trade, but I will structure essentially a bullish to neutral trade here, a put spread, going out to February's expiration with 38 days. And I'm going to essentially sell the $200 put below the current price, and then below that, I'm going to buy the 190 put to offset the risk. So this is sold for a credit of around $2.50 a share, or $250 a contract. So the whole premise behind the trade is it can stay nested between that 50 and 100-day moving average. It's fine. The premium will erode to zero if the stock stays above $200 between now and expiration. You have to consider the risk as well. Break even at 197.50, and you're earning 250, but your risk is 750. That will occur if the stock hits 190 or lower by expiration.
All right, right now we're about $30 off of that AMD, trading at a little above 220 today. George, we appreciate you being with us to walk through that note from KeyBank and also for that example trade. That's George Tillis. Coming up next, we've got our 360 round. We'll be taking a look at what to make of Delta's earnings from this morning and also what it could signal for the airline industry. Stay with us.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. For that, let's bring in our panel to discuss Delta Airlines after the company reported earnings this morning. Joining us right now, Jared Billou, the airline managing director at S&P Global Ratings, and Andy Wong, managing partner at Runnymede Capital Management. Great to have you both with us. Andy, let's start with you. What were some of your key takeaways from the report today, and also thoughts on this, more than 3% move to the downside we're seeing?
Thanks, Marley. Yeah, I think Delta's quarter itself was solid. Earnings were $1.55 per share, right in line with expectations. Revenue came in at about $16 billion, beating estimates by more than $300 million. So unit revenue was essentially flat, which is better than feared given the government shutdown impact. That tells us operations held up well, even with a temporary external headwind. But we're seeing the stock falling today, and the market reaction is really about guidance. Delta introduced 2026 EPS guidance of $6.50 to $7.50, and that midpoint is a bit below what investors were expecting, even though it does still imply roughly 20% growth. So after a strong rally in the stock, expectations were high, so even a modest reset matters.
And Jared, coming to you, was there anything in the results that were surprising?
Oh, thanks for having me. I wouldn't say overly surprising, pretty much in line with expectations as noted. I think it's encouraging that demand is accelerating heading into Q1 on effectively all geographies. So, that we take that as a positive moving into this year. So, I think that's one area. The other area is that premium revenues continue to hold firm, accounting for about 60% in total of the company's revenues last year. So, I think that's another encouraging sign. It's something that we've heard from investors about concerns of oversaturation in that market, which is obviously higher margin and a big growth engine for Delta and many of its peers that have exposure to that area. So I think that's from my perspective, those are two positive takeaways.
And Andy, we just heard Jared talk about the premium demand there, and Ed Bastian said that Delta sits at what he called the top of the K-shaped economy. How important is premium demand to Delta's earnings power right now?
Yeah, I think that the longer term support for the stock is cash flow. Delta generated $4.6 billion in free cash flow in 2025. They expect $3 to $4 billion in 2026, alongside that strong Sky Miles and American Express partnership. And that steady cash generation is why investors view Delta as more resilient than its peers.
And Jared, coming over to you, we saw the bookings numbers in terms of the demand you were mentioning from both leisure and corporate travelers are starting the year out pretty strong. What data will you watch or be keeping a close eye on to see if that demand is going to hold through the spring and the summer?
Yeah, I think it's important to have the growth in demand, but it's also an issue of capacity. And we saw that last year, roughly the same time, there was a similar level of optimism heading into the year. And fast forward a couple of months, capacity got ahead of demand and led to some softer than expected results heading into the summer. So I think that the capacity story is an important one. I think relative to this time last year, perhaps there's an improved situation given that Spirit has filed for bankruptcy. It's possible that you could get less ambitious growth from some of the players that are struggling to generate profitable operating earnings from their base businesses heading into this year. So I think the capacity is something that we'll have to watch closely and what effect that has on overall fares and ultimately revenues as we head into this year.
And Andy, in terms of the outlook that we got from Delta, many citing that as part of the reason that we're seeing some of this downward move here. What do you think that suggests more broadly in terms of airline market conditions?
Yeah, well, I think that demand was not weak here. That's the good news. I think that the challenge here is that as fuel costs fall and capacity rises, airlines have less pricing leverage. And for 2026, margins are really the swing variable that investors should be keying in on. Fuel can be a tailwind, but non-fuel costs are still rising in low single digits, and Delta plans around 3% capacity growth. So if cost discipline slips, earnings growth can fall short even with solid demand.
So Jared, with what Andy just said there, as we wait for the reports from United, American, and Southwest, which metrics matter the most in those reports? What will you be focused on? Is it premium mix, unit revenue, cash flow, cost control?
Yeah, I think PRASM, so passenger revenue per ASM, is an important one, and unit costs, those are key. Capacity can fluctuate a little bit, but I think, generally speaking, it doesn't tend to move too much from what's guided at the start of the year, so there will be some fluctuations. Fuel costs are clearly a wild card. It's difficult to assess where that's going to go. Most of much of the industry uses the forward curve, and obviously that'll change on a day-to-day basis. It's less clear about the linkage between fuel costs and fares. That relationship has really not held over the last couple of years. So it's a question of, okay, if fuel prices go down, do they have to give it back to the customer? They may not need to if the capacity situation remains in line with expectations amid continued growth in traffic. So I think overall unit revenues, which are supported by premium, given that we saw some meaningful weakness in the base segment of the business overall for airlines last year. So I think that's a key area where we expect to see outperformance on some of those players that have the larger mix of premium, and ultimately that's what's necessary to drive improvement in margins, overall.
I appreciate you both being with us to break down these earnings that we got from Delta, moving about 3% lower today. Jarrett Billis, Airlines Managing Director, S&P Global Ratings, and Andy Wong, Managing Partner at Runnymede Capital Management. Also seeing the other airliners move lower in sympathy today. American, United, and Southwest all lower on the day. Thank you all for joining us on Trading 360 today. That's going to do it for us. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. I'll be back with Market on Close at 3 Eastern, 2 Central, but stay with us. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
to Fast Market here on Schwab Network. I'm Diane King Hall. It's noon Eastern time here at the New York Stock Exchange. The stocks are pulling back from record levels as investors regroup. Let's get right into it with the check of your scorecard as we hit the lunch hour on Wall Street. The S&P 500 a little bit lower, but we're close to that flat line, off by less than 0.1%. Weighing down the S&P 500, you got financials under some pressure after those latest quarterly results from JP Morgan Chase, but that has been typical as we've seen in the past in terms of how shares perform. We'll get into that a little bit later in the show. Down lower by 0.5%. NASDAQ 100 has a gain. It's better by 0.2%. Small cap, similar price action on a percent basis that we're seeing in the S&P 500 hugging the flat line, essentially off by less than 0.1%. Here's the roadmap for today's show. We'll look at example option strategies for Citigroup. It's got earnings due tomorrow. Plus, the team from Lightfolio will be along with new sentiment data on Walmart. And going back to the banking sector, Wells Fargo is also on our radar today. Now that we've got the roadmap for today's trading action, it is time to bring in my co-hosts. You've got Tom White in our Chicago studio and Kevin Green, senior markets correspondent, joining us today. Kevin Hinks has the day off. All right, let's talk inflation, you guys. So the cost of living in America was little change in December, coming in, when we look at it from November, for December, it comes in at 2.7%. That's on an annual basis. Tom, when you got the chance to see the numbers, did anything surprise you at all?
Not really. I think it's confirmation that they're winning the war a little bit here on inflation. Now, you start to take a look at some of the internal components within this. The core was at 2.6%. That's a really good number. Yeah, we're still closer to the 3% level, but we started to moderate. We started to pull back a little bit. And I think that, the reaction from equities when this number came out, where we popped up and jumped nearly 0.5%, that was probably indicative of the fact that the market wants these lower inflation numbers. President Trump came out immediately and said, hey, Fed Chair Powell's still late on cuts. We're still not expecting a cut later this month at the Fed meeting. So, I think the trajectory is probably positive moving forward for these inflation numbers. But, this last, 0.6 or 0.7 tenths down to that 2% mandate that the Fed has is going to be a difficult one, especially if we start to see this expansion in the economy moving forward, which a lot of people are expecting is as deregulation takes place from the administration. Consumers still robust at this point. We've got that unemployment rate down to 4.4%. So that's still, at good levels at this point. But it just goes back to maybe why we're at or near all-time highs is the fact that things are going well, data's coming in well, earnings are coming in okay over the last couple of quarters. We got the kickoff to earnings season today. So a lot of things aligning in the correct way, I think, at this point.
So inflation is not getting worse, but it's not disappearing, and shelter was one of that sticky components, which the weighting is obviously heavier. KG, what's your take?
Yeah, I think we're going to start the bull-bear debate a little bit early here. I'm kind of on the other side of this. I mean, inflation's still at levels that we've seen since June of last year. We are making some headway in certain pockets, but if you look at the internal components on a month-over-month basis, there is a little bit of cause for concern. Food at home up over 0.7% on a month-over-month basis. Food away from home, which is more of a services metric, up 0.7%. Obviously, we did see energy moving to the upside. That's because the utility price is moving a little bit higher here. The only thing that you saw a break in is used car prices. That did drop by 1.1% on a month-over-month basis. So super core looks okay. Core came in better than the street's expectations. Headline maybe a little bit more sticky here. I think you're going to get a little bit more of a mixed reaction when it comes to the Fed commentators around inflation and where we go next here. And I think that's initially why we saw the market move a little bit higher here, but we're also kind of balancing out the fact that are we starting to see a goods reflation type of environment taking place to kick off the year. That would not be a surprise. It was the same thing that happened in January of last year as well. So I'm a little bit more mixed on it, Diane, but this market has been able to buy a lot of these dips to the downside here because they are, once again, a little bit more optimistic that we're going to have a favorable Fed, especially the latter half of this year, which could push asset values a little bit higher, and I think that's why you're seeing this optimism.
Okay, now let's talk about downside in financials, which is putting some of the pressure on the S&P 500. So similar to that usual pattern post-earnings, shares JP Morgan Chase, they are turning lower. They had initially turned higher in the pre-market when there was just kind of the initial take on its results. They did beat expectations. You also got Delta lower after its latest results. Tom, when you look at both of these, you can either pick one or dive into one in particular. What stands out to you?
Well, I think you start looking at JP Morgan Chase. This is a pure reflection and up-to-date reflection on what's going on in the economy as a whole from the consumer side. And then you throw in some of the institutional sides. You throw in the trading revenue, which grew. Equity trading surged 40% to $2.9 billion. Fixed income rose 7% to $5.4 billion. Those were the good points. Some of the investment banking fees were down a little bit, and maybe some of the deals weren't maybe as robust as what we saw from the headlines, but this was a pretty good report. They did take that $2.2 billion reserve tied to its takeover of the Apple Card loan portfolio from Goldman Sachs, but you just look at the comments from Jamie Dimon, he's risk averse, and he talks that way quite a bit, even though the market's doing well. The consumer's doing well, unemployment's low, inflation has started to come down a little bit. He's still reserved a little bit in some of his commentary, but he mentioned that the economy's resilient at this point. And that's a positive, I think, kickoff to the earnings season. I think you'd start taking a look at some of these financials and normalizing interest rates. The wealth effect that's created from the stock market being at all-time highs. This opens up a lot for the economy, and I think these results would kind of reflect that. Now, if we don't see any volatility, if we don't see trading volumes pick up a little bit, maybe that's going to be a little bit cyclical at this point. But at the same time, you can't argue against some of these numbers that the company put out, and it probably bodes well for the sector as a whole, which is why it's basically outperformed at this point. Now you have to start looking at valuations. They're getting a little bit stretched here. Maybe that's why you're seeing a little bit of maybe profit taking on this name. The credit card cap may be coming into play, 10%. The CFO came out and stated that would be a real hit to JP Morgan Chase. But pretty good results here from most of the metrics here out of JP Morgan.
A great point. And the points that he made about the economy remaining resilient, consumer spending, and businesses being generally healthy, it sounds, less like he didn't sound bearish initially, which often he kind of comes across a little bearish when he's releasing his commentary around the earnings for JP Morgan Chase. Delta as well, the main cabin to them seems to not matter so much. Premium, they're leaning into that. KG, when you look across both of these earnings, what's the thought that comes to mind?
Yeah, just real quick when it comes to JP Morgan, they did miss on the investment banking side compared to the street's expectations. The CFO did talk about the fact that a lot of these deals are going to be pushed out to 2026, which is the reason why we did see that miss. Tom talked about the interest rate cap. Their CFO stated that it's going to be bad for the consumer. And then you also had comments from Jamie Dimon around Jerome Powell and really providing support for not only him, but the independence of the Fed. That might also be leading to a little bit of the sell-off. And sometimes, and usually what we see is for financials, we buy the rumor and sell the news. And I think that's exactly what's happening now. And some of these other companies that are going to be reporting over the next couple of days could also kind of maybe soften some of this bullishness that we've seen in that sector. When you're looking at Delta, they had actually a pretty decent earnings announcement, but their fiscal year guide, especially when you're looking at profitability, did miss the street's expectation. It looks like they're going to increase some of the pay for their employees, which is going to eat into profit margins here. And they're really kind of focusing on the business consumer, and they do believe that that's still actually ramping up here and improving since COVID-19. And consumers in general, they do believe that they're going to continue to spend money on experiences over goods like we have seen past COVID-19. So I would say this was more of a mixed report, not a really good guide. You are seeing it kind of pull back. I think it's down around 3% so far here. But the big risk that you actually have with these airline companies is a lot of these stocks moved aggressively up, maybe too far, too fast. and you might actually see a situation where jet fuel prices start to increase, especially in the latter half of next year. That could also be a little bit of an issue when it comes to their guidance moving forward.
All right, guys, let's talk tech. AMD, Intel, both gaining ground. AMD rallying 7%, Intel almost the same amount. You got KeyBank turning more bullish on chips. They've lifted their price target for AMD to 270. They're overweight on this. Tom, what's your take?
Well, I think you start taking a look at the AI infrastructure build out here. That's a bonus for these companies, especially on the AMD side. But I think one of the key things from the notes out of KeyBank was the fact that CPU chips are almost sold out for 2026 as these hyperscalers get built out a little bit. So that's a legacy side of their business, which might allow them to start raising prices. We've seen those spikes in the memory chip side as the AI infrastructure gets built out and hyperscalers get built out. Now you're starting to see it on the CPU side, not just the GPU side, that NVIDIA is in the mix in here. So you're seeing the nice pop in there with the expectations that, and I think this analyst kind of hit it, is, hey, if we're almost sold out for 2026, what does that mean for pricing? Well, they're not going to lower prices, right? If they start to raise prices, as this analyst put it, 10 to 15%, that's going to go right to margin expansion as that demand continues to be pretty robust at this point. I mean, you've seen Intel up over 145% from year ago levels. That seems to be the darling here right now. And then you look at the stake that the U.S. government has in Intel at this point. President Trump tweeted something out about that also. So it seems like everything's in alignment right now, and everything moving forward is probably going to be gravy on top of already elevated expectations for both of these companies.
Gravy takes it to the next level. KG, what's your take?
Look, the market must really respect this KeyBank analyst for a move like that. I haven't actually seen a stock or two stocks move in this aggressive of a fashion because of KeyBank here. And they might be onto something. I think you have this situation where the semiconductor trade continues to see a lot of tailwinds. AMD may have some pricing power, as Tom talked about. You also have Intel with the fabrication units that right now, obviously, the 18A process is a little bit lackluster, right? It's really hard to get it kind of up and running in the manner that you see a lot of companies really want to see. But they do have a leg up with the U.S. investment, as well as maybe some protectionist policies coming from China as well. And I think that's another reason why we are seeing these stocks kind of resurge back to the upside. China also, there's a news report that China is open to having NVIDIA sell some of their H200s, but they're going to be restricted in a manner here. So the semiconductor space itself is also kind of lifting up on an intraday basis. So decent report, decent reaction here to the upside. And I think if you pick one of the two here, Diane, Intel seems like it's a little bit more favorable because of the influence that the administration has on this company here. And it seems like the bulls understand that and continue to try to buy this one up.
That's a great point, and thanks for bringing up that headline on NVIDIA. I saw that one. Let's talk another member of the Mag 7, Alphabet, Google. Not just holding on to gains, increasing more, up more than 2% right now after hitting that $4 trillion market cap. To me, what was notable about this, I mean, there's multiple things, but the fact that it went from $3 trillion to $4 trillion in less than 90 days. Tom, what's your take?
Yeah, the wins keep coming for Google Alphabet at this point. $4 trillion market cap. On this one. It's been the big winner in the Mag 7. Remember, just over a year ago, everybody, before those lows that we saw in April, Alphabet was actually trending lower based on the fact that, hey, maybe they're going to lose market share in search to a lot of these AI engines and Copilot and some of the other competitors in this space. And they've actually flipped the script on this. And then you throw in, and I think people are forgetting about this last quarter, cloud growth was 34% for this company. Beat Microsoft Azure, beat AWS, which resurged up to 20%, just over 20% growth. So they're winning in multiple arenas at this point. It doesn't seem like they're going to lose that stranglehold on search anytime soon. That's ad dollars, that's revenue. Now, their CapEx spend is still robust at this point, but if they keep getting these wins in AI, that's going to be a positive for this company. I did note that one thing that Elon Musk tweeted out about this new partnership that they have with Apple, integrating Gemini into their Siri. That might come out later this spring. They've already got Android, right? They've already got Chrome. Is there going to be any regulatory issues on this coming forward? Because they've got a big slice of the pie in that arena, and I don't know if the regulators don't like that moving forward if they try to sign another deal. Now remember, they did win that suit with the Department of Justice before that said, hey, competition's out there now with all these AI chatbots, but it just seems like they're innovating a little bit quicker than some of their competitors in this space. And is it going to be a 2 or 3 horse race as far as AI chatbots and the AI monetization? It seems like Google Alphabet is continuing to win in this arena.
Absolutely. It certainly seems to be that way. You're seeing analyst after analyst increase their price target today. KG, what's your take?
Yeah, I mean, the trajectory is higher at this point in time here. It actually did have a consolidation and a breakout above that 330 level, so some buyers are stepping in just from a technical standpoint. They do have the AI news and working with Apple. I think from a regulatory standpoint, the big question is there any dollars being exchanged between the two in order to have this access? And if that's not going to be the case, then it seems like it's going to be hard for the DOJ to try to knock that down here. And then there was also some news reports that they're going to be developing some high-end phones in Vietnam. It looked like that was reported earlier this morning. That's a very small slice of their business, but once again, they're doing deals. They have a very diversified business. Ad revenue obviously is going to be a major driver for them. If you do believe that the economy is going to reaccelerate across the board, when you're looking at consumer discretionary as well as consumer staples, that will be a tailwind for them on the ad front here. So it seems like the market is really appreciative of this name. It was kind of a dog early on last year. It seems like now it's kind of an outperformer, and right now it doesn't look like there's anything that's trying to really stop this trend when it comes to the stocks. They're doing a phenomenal job here.
Not at all. It just keeps moving higher. All right, guys, let's put a pin in it. We've got bull versus bear coming up. Guys, get their example trades put together for Citigroup. It's next on Jack with its quarterly results. We'll have more Fast Market after this break.
I'm home. He's home.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more.
Washboardjim said we'd go back to the order.
Questions by chatting directly with an education
chatting directly with a technical analysis such as Washboardjim with a sneaky snake trading strategy where he talks about chart patterns, moving averages, and being in the now. Before I left explicit instructions that we would hit this red line. And boom, baby!
Sometimes
sometimes you just don't want to cut your own hair.
Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. JP Morgan Chase kicked things off today with better than expected results, but Citigroup is next up at bat. The question is, will it turn in a similar performance? Here's where expectations stand. Earnings are projected to come in at $1.65 per share on an adjusted basis. Revenue is expected to top $20.9 billion. The stock had a banner year last year. Time now for the
interest rates are so freaking high.
Our co-host Tom White and Kevin Green. It is bull versus bear time. So before we get to the example trades, we've got to talk your thoughts on Citigroup. Great year last year for Jane Fraser. There's some reports they're cutting fat, which is kind of typical this time of year. According to Bloomberg, plan to cut 1,000 jobs. KG, let's start with your take when you look through Citigroup. What's your thought?
Yeah, I mean, this stock has obviously been moving aggressively higher here. It's been trading at a discount compared to its peers over the last 5 years. And we're now seeing investors trying to pay a little bit more of a premium. And in fact, now it's trading at a premium compared to its tangible book value. And you are seeing a lot more optimism around the management of this company in itself. Now, over the last 2 years, 3 years, they've also shed some of their business units on an international basis, especially in South America, that were perceived to be a little bit more high risk. So they've shed a lot of those businesses, getting back to the nuts and bolts. Really, consumer lending, consumer banking is really where they thrive. And this is a stock, once again, doing a phenomenal job a little bit higher. The only thing that I'm a little bit concerned about, Diane, is when you're looking at their total losses or their credit losses compared to their revenue. If you actually looked at it for Q3 of 2025, it was around a 10% ratio between net credit losses and their total revenue for the company. And that's a little bit concerning for me. In fact, if you're looking at their personal banking unit, their total losses when it comes to credit compared to their revenue is sitting at around 33%. That is really high compared to their peers. And I think if you are going to see any type of cracks when it comes to the consumer, outside of Capital One and Discover, which obviously they're merging, this is a company that's going to have the biggest exposure when you're looking at branded cards and credit cards, and even when you're looking at checking and debit accounts here. So I think right now the run has actually been pretty good. But if there is going to be a canary in the coal mine, I think Citigroup would be the one to kind of show that and reflect that in these earnings.
Okay, Tom, what's your take when you look across Citigroup?
Yeah, you mentioned CEO Jane Fraser. She's been crushing it since she got in there. And, you know, she's been making cuts not only with underperforming assets across the globe, whether it's Mexico, South America, but also in employees, right? She's reduced pretty significantly employee count that she kind of set goals for last year. And those are coming to fruition, and that's helping at this point. Kevin mentioned the fact that they're above that tangible book value for the first time in 5 years, solidly above that at this point. That bodes well for them. It seems like she's doing everything right to kind of redesign this company. And then also they're starting to get in areas that they weren't very prominent in, trying to compete more with the JP Morgan Chases and even the Goldman Sachs and the investment banks also. And then you start looking at demand for commercial, industrial, and consumer loans. That's expected to be pretty strong. And then don't forget net interest income. That is going to be, you know, one of the metrics that we're going to follow pretty closely, and that's supposed to increase about 5.5 to 6% year over year. So that's going to be a bonus because we've seen that normalization in some of these yield curves. But as you guys mentioned, I mean, the stock has had a great run to 17-year highs that it hit last week, pulling back here just a little bit after the JP Morgan results. But the bar's going to be high on this one also.
All right, so let's get into the example trades. Tom says the bar is going to be high going into this one. KG, let's start out with your example trade. What's your approach today?
Yeah, once again, given some of the potential risk on the fundamental standpoint when it comes to credit losses, and as well as the chart. If you're looking at a one-year daily chart, this is actually starting to break down here a tad bit. We are seeing a break below the 20-day moving average. We also have the RSI making lower highs, and then you also see a bearish cross in that MACD where the 12 EMA is now below the 26 EMA. Anytime we have seen a pronounced cross on that MACD, it actually did result in at least a 7% pullback in those shares. So I actually have a bearish trade here. Looking at the February 20th, 115 puts. Buying those for $3.50. So the max loss on this trade, $350. Max gain up to $11,150. That's if the stock goes to zero with a break-even point of $111.50. You got a little bit of time for this particular trade strategy. Obviously, we do have earnings announcements. You might see a little bit of an IV crush. And what you're looking for is the stock to continue to move to the downside here and potentially even test a key area of support sitting at around that 105, 106-ish area. And if that's going to be the case, this trade can be profitable. It's also risk defined as well in the event that the stock does reverse and they have great earnings and the stock moves higher.
Yeah, KG. Yeah, go ahead. I'll go ahead. Yeah, KG's trade, bearish example here on this one, but I think one of the keys is he gave himself duration on this one. This is all the way out in the February monthly options that expire on the 20th That's 38 days to expiration. So not a pure earnings play, right? So even if you don't get the move that you need to be profitable on this one after the result, you've got yourself some duration on this one. So let's break it down. February 20th, 115 strike puts. Buying one of those $3.50 debit. There's your risk, $350. And you can see here from the risk profile, a lot of profitability below that break even of 111.50 to the downside. Now that break even is about 5% below the current share price in there. So you do need to move to the downside. The option market going into these results, pricing in only about a $4.35 move either way on a one-day move for this stock. But it's risk defying, taking a bearish outlook for this stock. But I think the key with KG's trade is that you've given yourself duration, and by buying an option strategy like
this,
buying an out of the money, slightly out of the money put.
Remember how excited I got before I left about this hammer? You see that hammer? And see what happened after that hammer? So I would say after those 3 black crows with that hammer, that's a pretty good odd that you're going to get a rebound on that. That's why I went big down there. Because that hammer. If it wasn't for that hammer, it might have been a doji or a rising star or something. But that hammer, that's very bullish. I'm eating me a little, what do they call that place? Hardee's? Slider. I'm not too happy with the second one. I'd fire whoever put that thing together on the spot. And they're talking about Citibank next. I got updates on my computer.
A little bit at the money when it comes to the calls. And when you're looking at that risk-reward ratio or even that premium to spread ratio, it's sitting at around 30, let's say 35% or so. So you're giving yourself a little bit of time post the earnings, as well as maybe a little bit of delta. And in the event that we do see earnings coming out, maybe it's not that much of an event. You do have implied volatility crush. That short call is going to also allow you to offset that. And if a market is available, you could be able to manage the trade as you see fit. But I see a trend that you have here, Tom, over the last couple of days. You like looking at these at the money calls, giving yourself a little bit more delta, then going a little bit higher in strike. Is that something that is only around earnings season that you like to look at that strategy, or is that something that's just a traditional setup that you like to look at?
Yeah, typically I'll look at that like at the money call, right? Especially if you're taking a directional bias on something like this where, hey, it's a short-term trade, 2.5 weeks, where I can buy something with a high delta, offset some of the costs on it by selling something with that lower delta. It's still a bullish position, but I might not need as big of a move on a percentage basis to start to get to profitability on something like this. There's still quite a bit of option premium in a call on the 117 strike where you've got 17 days to expiration on this one, but it still gives you that directional bias, but limiting what you can lose and also limiting what you can gain by doing the vertical as opposed to your bearish example where you're just buying the put outright. But I think the key is with yours, giving duration on this one where if it might not work out in the first 7 days, 14 days, but maybe in a month's time that might work out. So there you go, Diane. Got the bull bear debate in full swing there with KG and I.
Of course. Exactly. I was thinking that. All right, good stuff, guys. And thank you, KG, for joining us today and taking us through the first half of our show. That's our Kevin Green there, senior markets correspondent. Coming up, we've got cash tags. The team from Lightfolio will be along with new sentiment data on Walmart. Keep it right here on Schwab Network. Fast Market will be back after this break.
Hi, I'm Alex.
I'm Jean.
And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vitus, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Always swing right up here.
Yeah. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, let's bring in our next guest, and that is Landon Swan, co-founder of Lightfolio, with a look at Walmart. Landon, all right, so when we think about Walmart now,
They just pumped snow the other day.
But kind of like a tech company in the sense of it's moved over to the NASDAQ, it's listing. It's going to be joining the NASDAQ 100. When you look across the sentiment data that you all have called, what do things look like now?
I tell you what, it looks a lot different than it did, 5 or 10 years ago when Walmart was, big, slow behemoth, and Target was coming after them, and Target was the sophisticated one with clean stores and better prices and better merchandise. And Walmart was just, competing on price only. That story has completely changed. Walmart has taken advantage of their size. They've improved dramatically the experience in the store. They're leveraging technology. And they're
Walmart. I worked at Walmart. I used to run around the country and inventory Walmart. So I did inventory and I worked for them. In fact, I might have had 3 jobs. Yeah. I think I might have worked for them for 3 times. Sedalia. No, it's just Sedalia. Sedalia, and then I inventoried them. But I thought there was 3. So Walmart, there's a whole different grid between Target and Walmart. I don't like shopping at Target. They don't have enough groceries. They're I bought probably 10 items from Target my whole entire life. And then when they came out and went woke, I mean, they really went woke. They got that guy out there selling that devil stuff right in front of the store. Right out there, as you walk in, there it is, right there in front of you for everybody to see. And ever since then, it was like Wall Street's 5 and dime Tiffany's. Because when he said that, I knew yeah. We voted against another store here in Springfield. But I have to give them credit. That parking lot's packed all the time. I just don't see how they lose so much money. Well, stealing.
Target had a lower bar, and Walmart is doing better. They were a year ago, and they're continuing to do better. So both of them are improving significantly on the digital front, but Walmart...
See, I think this... the delivery, when they go out and they deliver the stuff out to your car and you got to park in that special spot, I think that really brought in probably a whole new kind of clientele to their stores. The people that don't want to be seen inside a Walmart just have to pull up, have someone else do all the heavy lifting. I mean, I think I haven't done it, but I think that'd be convenient. That was a smart idea. I was at a Walmart back, 1982, 1981, 1980, it might have been 1980. And an old man comes up to me, and I'm sitting there, I'm doing inventory. We used to carry these little calculators. They're about 6 inches wide and a foot long, and put them on the side of your leg and inventory the Walmarts. And you do a gondola at a time. And this old man come up to me and said, "Son, could you lead me to the health and beauty aids? I need some toothpaste, and I need some shampoo." And I said, "Okay. Yeah, let me give me, here, just wait a second, sir. Let me just take off my apron and I'll walk you on over there." I walked him over there and I said, "Thank you," and I walked away. And at the end of the day, the boss came up to me and said, "Do you know who you met today?" And I said, "No, I met a lot of people." He said, "Did anybody come up to you and ask something about health and beauty aids? Need some toothbrush, toothpaste, and some shampoo?" And I said, "Yeah." I said, "Some old man," and I brought him over there and went against the rules, and then came back and started counting again. He said, "Well, I know you went against the rules by leaving your counter, but you also left a good impression on our business because that was Sam Walton." I said, "What?" At that time, he was probably one of the richest men in the world. But I'll never forget meeting him.
Doing a great job of making sure that they're the leader, or that they're taking advantage. They're not losing out to AI. I think that Gemini is going to do really well. I think GPT's got the lead.
Yeah.
But then it's also which retailers are going to integrate. So for Walmart to make that a top priority shows me that they're forward thinking. They're not reactionary. A lot of times these large companies wait and see which
Here's Dar.
technology kind of wins, who's threatening them from the small guys, and then they either acquire the small guy or they just duplicate the technology and squash them. Right? But Walmart's not doing it. That they're taking the lead here and they're jumping out ahead of this. And yes, it seems early, but it...
Pardon, merhaba. Aracınız çok güzelmiş de ne iş yapıyorsunuz acaba?
Dar.
Pardon, merhaba. Aracınız çok...
I challenge you to a match. I couldn't get Jake Paul in the ring with me, but I think I could get the leader of the Hells Angels in there with me. I challenge you to a match. Dar.
Çok güzelmiş de ne iş yapıyorsunuz acaba?
I'll take 5 minutes. That's all I need. PayPal. Ooh, PayPal at 50. Ooh. Now, I think that's cheap. That is cheap. It's got to be a year low. PayPal might be one to have on watch. Oh, yeah. Still have a sell rating on it. Interesting. So we got Chewy at 32.85. Someone asked me about that about 6 months ago. I said, don't buy it. Wait for the pullback. Now, I bet you Amazon has a pop off earnings. But there is more delivery coming. I think, what? Yeah, Amazon might have a pop. Cost is down $5. That ain't gonna do nothing for me. Oracle at 201. Chipotle, I think, had a good bounce there. Once we took our eye off of it, $30 to 39. Morgan Stanley's way up too much. Disney at 112. So close to 100 was where it was. 102. See, this is too choppy for me. The way Baidu is right here at the end. I have to wait for it to pull back because this is too choppy. Okay, well. Went through the bad ones today. Chewy. I just think this one here is just always a little bit too cheap. That's where I got Beppy's food. Okay.
Capital intensive, right? Because if it does fall below 117, you might get assigned the shares, and that means for every put that you sell, you got about $11,560 in risk on this one. If that's where the stock were to somehow go to zero, keep that in mind. So it's almost a twofold trade. Now, I always look at this strategy this way. If you put a bid in for the stock at $115.60, you might not ever get filled on it. If you sell a put on the 117 strike, you collect $1.40, and that takes your break even down to 115.60. You can still be profitable if it doesn't fall below 117 on that type of strategy. So you better be comfortable owning the shares that the stock does reverse and fall, but it's almost like a buy the dip mentality or strategy.
I can't trade like they do.
Diane. So
it's just too hard.
Landon's data and his thoughts.
All right, good stuff there. We're gonna breakdown coming up. We're going to go back to the banking sector with Wells Fargo.
/ES. I mean, /ES. Ugh. /SPX. /ES. Let me see here. SPX. Oh, yeah. Okay, on the 1 minute, we're at the 200. Well, that's PLTR. Let me look at this PX for a second. So we made it in that resistance channel. We're back at support. SPX 6980s. At 115. Up. No, don't do that. We need it to hold that bar. It's major. They're a buck. That's what I didn't want to see. What the hell? Crowd's going wild here. I want to see some charts. No, Jim hasn't voted lately. Oh, shit. Reprimand. Oh, my God. $80. You gotta kid me. Well, I had enough time to unwind. And the stock took a dive. It's a double bottom off that hammer you traded before. Kind of got stuck in this one. Well, we didn't hold that double bottom there off the body of that candle. That's what I wanted. Still got good eyesight. $69.52 would be a triple bottom and an inverse head and shoulders. $115 and $65 if I can get it. That or $70. There it is. Nope. Thought I had it. God, that was nice. .60. Okay. Now I got 20. 115 and 10 at 60. It's a triple bottom. Fat bottom women make this world go round. Come on now. It's, yeah. Average point averaged up to 88 cents. hold up. We depend on it. Traders digest inflation data, earnings as U.S. equity futures gain pre-bell. And they've all been trying to pump the banks, and I don't think they're worth being pumped. Not if houses ain't selling. And interest rates too high. Well, my next door neighbor told me my rent's too damn high. They raised it up to $1,500. Grocery store says butter is too high. Okay, that's it. Live with Washboard Jim. Oh, God. No more. Stop it. This is pathetic. Ain't this been happening a lot? Look at that. We got a double sell-off here. There's your triple bottom, inverse head and shoulders. I mean, it's a good support. Then you have the whole concept of it maybe coming down to a double bottom. Buy low, sell high. Triple bottom with an inverse head and shoulders. I'm in the SPX calls, scalping the strike at 69.80, entries at 115 and 60, average of 88. Takes a lot of excuse me, takes a lot of talent to cough these songs up. No pun intended. Woo! Any of you women out there have any hair on your chest and take this trade? Randy? We got J-hook beginning. I fell down in the burning ring of fire. That's it. I fell down in the burning ring of fire. I fell down in the burning ring of fire. Yeah, I've done some Johnny Cash. So we're getting closer. We need to break the 21 EMA. It was that old double bottom I got in today. We got a snake in a J-hook pattern. Let's break this resistance. That's all. Oh, telephone. Always clean. This is Jim. May I help you? Some call me Washboardjim. Yes, ma'am. You was watching me on YouTube and said what? Oh, really? Double date with you and your grandma? I might be a little bit busy tonight, baby. Yeah, I got a long night. How about calling me up in the morning? We'll get back together. Yeah. By the way, what's your name? Lori Joe. Okay. Yeah. Bye. Woo! I don't have no time for Lori Joe. I would rather smoke a bowl. I'm getting so sick and tired of this stunk. I'm breaking out. Been holding this way too long before I finish this song. Darn it. I gotta move on. I gotta look at something else for a second. Okay. Well, we've got a snake here on a Navidier, back to the day low. AMD has to break the 50 on the 1 minute SMA. I mean, everything looks like it's out of support. Trump's envoy secretly met Iran's exiled crown prince. I guess I'm not really in tune in what's going up. I just find it hard to believe that we can't be, stomping out other countries like this. JP Morgan new low. I'm not afraid to say it. Come on, man, break out for me. These long waits tear me up because I'm so used to them just snapping right out and doing something. So, /ES. I mean, that looks clean as could be. This thing looks beautiful. I mean, it really does. I hope I'm right. It looks real clean. Dar. We just now broke out of the channel, but we're still caught at that double top resistance. We're at 70 cents a contract. If we break this, it's an easy run to 69, 60, 55. Randy, 69, 60, 54. And then I hope I can just avoid this. Just get her up here and boom, be out of the trade. And then it ends up at 69, 65. I went into Arby's today and ordered a couple sliders. Told the story to the guy behind the counter. You ever get your hamburgers like this, son? He said, no, I never have. Well, you take your first slider and you get a couple pickles. Add a little piece of lettuce to it and a special sauce. Your second slider, you might want to get you some canned onions and just eat it just like that with a little bit of mustard, some ketchup. Third slider, you want to make it a smasher. So you get a piece of cheese and you put it between the two little bitty buns. And we're about to the 63. I'm at 75 cents. I ain't doing it. I need some. There's 80. Okay, now this is a thought. This is hard to do sometimes. So when you're close, you're not there yet. And here we go again, just like earlier today. You're at that 63. Do I want to sell it? Buy the dip? Is this strong enough to go ahead and break the 63 and then nail it at the 200? Because I usually pull back at the 63. I can tell this is going to keep me in this trade. Watch it for a bit. So we'll go back to the chicks. Unlimited ATM free rebates. What's going on here? We get stuck?
Pop
populist, popular ways. Again, I don't know the fallout, but there's something here, and it makes sense that these companies are adding volatility and being repriced to reflect that uncertainty.
Yeah, and both Visa and MasterCard today seeing some of their steepest drops in at least intraday trading right now in half a year. So it's not just being
Not 4% for MasterCard. It's a big move.
It's a big move. I mean, the chart,
Huge.
It's a brutal move. Just goes to show that MasterCard doesn't typically trade with, this much volatility, whether it's the upside or the downside. It's a big red candle today. And our next name today also is in the broader banking, financial world, but definitely more of that fintech type of player, that being PayPal. So Daiwa downgraded shares to neutral from outperform, $61 price target, saying while the company should be able to achieve earnings growth of at least 10% through fiscal 2027, concerns about a decline in PayPal's market share are only strengthening. They think that the stock's valuation will remain at depressed levels until the company's growth in total payment volume at branded checkout in particular to start to improve. So PayPal has been seen as one. I've just been reading all of the analyst commentary on the potential shifting of the credit environment, and many yesterday were saying, hey, we could see some of these fintech players emerge actually as winners, but today not so much, as we're down about 1.5%, so not a huge move to the downside, but not seeing favorability either. This name has contracted about 33% in the last 12 months.
Yeah, it's really, really hard to project out. If we're already finding it uncertain to kind of think about what will this look like in some of these traditional networking and lender spaces, well, one of the natural next questions is, okay, is there areas of the market that could see some tailwinds from this? And the first initial thought would be maybe buy now, pay later, which isn't a huge part of PayPal's business as more of an e-commerce centric company. But it would be something that they do offer, so something to watch there. But PayPal, really since the boom post-COVID, just hasn't been the same company.
I know, I love PayPal. I use it for everything, maybe because it has all of my information. It just makes shopping easier, but that is neither here nor there. But 1.6% move to the downside today. We'll leave it there for the top of our show, but coming up next, we'll stick with our broader banking theme. We'll dive into the charts and some example trades in both Citi as well as Wells Fargo into their earnings reports tomorrow morning.
I think what screwed PayPal was the federal government when they tried to censor and go after people. I think that's what made PayPal's demise. I mean, I can't do business on PayPal anymore. I used to do a lot of business. Whoa. This ain't no good. It's 12:21. We're still at the bottom. Yep. Oh boy. Well, this last pullback here, once it hit that 63,
rally out of the mid.
well, make that another $900 worth. They really bring that price down. Still think we're going to see 69, 62, but oh well. I'm getting ready to squeeze again.
Mean that they can't act differently than their peers. You see a little bit of weakness here today. JP Morgan, though, of course, a little bit weak, and we know that there is correlation. That said, looking at a lot of those longer term technical metrics, the recent higher highs, maybe you still believe in this uptrend and this outperformance of the financial space. I have an example trade that looks at that as an opportunity into earnings. It's a neutral to bullish short put vertical. Selling the 117, which is sort of at the money. Maybe you adjust these strikes slightly given the sell-off that we're seeing intraday, but all in all, basically at the money, short put vertical here, looking to collect $1. $1 on the $3 wide spread. If you're able to do that, you create a 2-to-1 risk reward. Your break even is 116 in this case, but if you moved it down a strike, maybe you can get it the 116.
But you're winning, huh?
For $1, it would be 15 would be your break even in that case, but most importantly here, it's a 2-to-1 risk reward. It's neutral.
Well, we're
to
at
bullish,
support here,
and it's essentially at the money. Looking for some of these support levels to hold the stock to.
We're definitely at support. This is the fourth touch, so I think we do have to break this support. Oh, that's cold. And don't give up yet. Don't give up yet. Things ain't looking too good. All we gotta do is break this pivot point. I'm trying to think of that one guy that what's his name? Skinny fuck. Rock and roller. I was doing a good imitation of him right there. Dylan. Bob Dylan. Bob Dylan trading stocks. Oh, it's not looking too good out there right now. It just seems like a bunch of hell. But we gotta break this pivot point so we all could gel. I'm doing imitation of Bob Dylan, you can see. So stop, break this pivot point and set me free. Bob Dylan trading stocks. Come on, you sick shit. Break it. Does that sound like Bob Dylan? No comments. Whoa, that's a low blow of itself. Okay. I don't know, man. This thing's really starting to make me a little aggravated. That it should have took off right there. Now that it's came down one more time. Huh. This always eats me. It's the hardest part. There's no volume. $69, $56, $31, break it. There it is. Now we gotta have the boom. Head and shoulders. Symmetrical flag. And you got a head and shoulders right here and symmetrical flag. That's what you got to break. If that breaks, we're okay. Or I am. Well, I had 2 Arby's sliders. They went down real good. They were the best sliders I ever had. Well, I need to break the 63 EMA. I went to Arby's today and had a couple sliders. Let's show some respect to the 63 EMA. I went to Arby's and had a couple sliders. Break the 63 EMA, please. Come on, I want to sit in this all day. Yeah, we gotta break the 63 and get it to the 200 and then I'm done. I don't care where this sucker goes after that. As I used to tell Vegas, hey girl, I'm taking you out tonight. And you'll eat what I tell you to eat. Don't give me no back jaw. You ain't gonna get no coleslaw. Just some ribs. There we go. Okay. Now, I've got this here trend line here, and we got the double top break. So we're closing in on resistance. Roger, that'll be 65 cents, please. $65 a contract. Thank you very much. Bought the dip. Let her rip. Getting that 40 cents was just fine. It brought that average down. We're at a resistance, man. Let me know what you're going to do here. I'm thinking we're going to hit the 200. I have a catalyst. I'm going to erase all this stuff. No, don't erase it, Jimmy. I can't do that. I will show you something. Oh, God, stop it. Erase. Okay. You see this here? You want to drop a trend line. Come on, bitch. So, this thing's telling me it could break the 200, both the 200s. And I think we need to gain respect off this here pullback right here. So we got to break that resistance there. 69, 61, 18. $69, 61, 18. That's we gotta break. That's we gotta break. 69, 61, 18. That's what we gotta break. That's what we gotta break. So this bearish, but these here are kind of keeping it bullish. It's consolidating off that candle. We bounced right off my support level on the /ES. Let's break this. Before you know it, these things are going to be at $3. You're going to say, Jim, I had no idea. Come on. You sold too soon? Oh, you heard that. I didn't even know that one was coming. The burp. It's not polite to date and burp on your first date. It's not polite. It ain't right. Ah, darn it. I'm so pissed off at this motherfucker. It stops at every resistance. I really thought we had it made here. Just run right past this thing. It had to come back and kiss its butt. Chicken train running all day, can't get it on, can't get it on. Chicken train carries the chickens away. I gotta put this thing, I do this all day long. When I retire, I might even just hitchhike the country. God, come on. I don't know if this is gonna work, Randy. We needed a little blast right there. It's 12:43. Oh God, Trump's about to yap. Yes, we are getting ready to take over China. I'm tired of this riffraff. Turn on the TV.
Real winner of the last couple of weeks and especially today, and that is all things Alphabet and some of the latest developments we're seeing out of Gemini, of course. But joining us now for some more insight on some of the further developments we've seen in broader tech, I'd like to welcome in Ali Mogharabi, Senior Equity Analyst at West End Capital Management. So thank you so much for joining us, and excited to talk about, all things Alphabet on a day when we're at another all-time high. And so really, as far as some of the latest developments we're seeing, of course, landing that major deal with Apple, and we're seeing just further partnerships with Alphabet every single day, it seems. What are your broad takeaways on some of the expectations now into the new year?
Overall, very positive. Let me first start with our valuation. We think that it can still go up to around 350, 360. So it still has some pretty nice upside. But in terms of some of the events that have taken place, some of the announcements and or rumors, it's very positive. These guys are basically not only strengthening their ecosystem in terms of having access or maintaining that user base and not allowing them to go to third parties, at least for the time being, like an OpenAI, ChatGPT, but also they have access to that data, which they can't necessarily utilize it as well as they can their own because it's Apple, and Apple certainly focuses on privacy, but it still gives them an edge in terms of how to target some of the users or some of the cohorts of users from an advertising standpoint, and then just the overall distribution of that Gemini technology. So overall, it seems pretty positive for Google, and also I got to say for Apple too.
All right, so here's a big question that I've been kind of wrestling with, Ali, and I'd love to get your insights on. It's clear to me that names that are sort of the first, second stage AI winners are starting to see, selling into strength. And there seems to be a rotation, whether it's the SoftBanks of the world, whether it's, the Warren Buffetts of the world who are rotating maybe out of an Apple. It seems like that new home for much of that big money maybe is Alphabet. Do you think it's safe to say that we're seeing some of the tectonic plates among these Magnificent Seven or mega cap tech names shifting?
To a certain extent, I wouldn't say it's applicable to nearly every name, but obviously what really sets Alphabet apart is, again, it has that huge ecosystem. It was certainly late to this LLM or AI a trend, or I should just, now it's trend, but that emergence initially. But it is well positioned right now to distribute that technology through its user base. It is well positioned right now to leverage that technology on the cloud side of the business, and to basically have a stronger foothold in terms of enterprise clients and so forth. So it still has all of those advantages that it had pre AI emergence. And on top of that, there's no question that these guys are going to continue to generate that cash. So this is a cash cow, and it doesn't have any difficulties. And I would say there are practically no doubts that these guys are going to have access to capital if they need so to further invest in AI. So all of these things, in my opinion, gives them a pretty good advantage over some of the other players.
Okay, so as far as the broader picture of like monetizing all of these AI offerings, we talk about CapEx so frequently, and all these companies, I mean, shelling out big money to, of course, continue to be at the front, really the front of this major AI push. Do you see Alphabet right now as leading some of that monetization trend, or where do you see them fitting in that race? Because I know that that's where everyone's been so critical of, like Meta, Amazon as of late, but it doesn't seem like that narrative has affected Alphabet, of course.
No, it hasn't. And again, for the same reasons I just mentioned, from a monetization standpoint, as you see Gemini being utilized more by consumers, and we're saying this based on some download data, they haven't certainly caught up to ChatGPT, but they're actually pretty much, filling some of that gap. Then you can see these guys gradually try to monetize the consumer usage of this app. Gemini. So, I mean, you can, I'm kind of getting the sense that they're starting to do that. They give a lot of pretty useful, follow-up questions and give some actually recommendations.
Well, there it goes.
So you can see them monetize it. You can see them move.
It's getting a little bit crazy here. It just lost support. Major support right here. Yeah, it's damn.
Gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech check,
Oh,
options
well,
corner, futures focus.
it's a major support, that's for sure. 69.50, 65.
Tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
And I don't know, I'd probably adjust to 65
Stay
on the
connected to the markets with Schwab
15
Network.
minute.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network,
Available anytime, anywhere, on any device for free. Stay connected to what moves.
Adjust it up a little bit higher.
The Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 6 p.m. Eastern, only on Schwab Network.
Yeah, right to it.
Welcome back to Next Gen Investing. It's now time for Under 30.
All
Today
three of
we're
them.
talking Paladine, which is up now 17% on the session. Joining us now is George Tillis, Senior Markets Correspondent for the network. And so, George.
So I was sitting here going through different time frames and trying to get some kind of scope. And where did I get that? Now I forgot what time frame it was. Oh, a 15-minute would have said this. We got to break this resistance right here on the 15-minute. I'm getting respect for that one. 69.54.31. That was on the 15. Ugh. something. What am I going to do? Well, we got 2 hours left. I still have a little bit of hope. Not much, because we're so, I'm 6 knots out of the money. So if I was to trade it, I'd probably move it up. I'd move the calls up if I wasn't in it. We broke that 63 last time, but we hit that pivot point that I was right singing about. 69, 61, 18. We did hit it. But we did break it. I'm going to go get my coffee. Been soaking. Poop. Because they're going to be worthless. You're not a loser. It's dropping.
The lows of the session, but if you look at the amount of advancing stocks to declining stocks, we're sitting at around 50-50 when you're looking at the S&P 500, and it's more defensive in nature. If you're looking at consumer staples or other sectors within the defensive basket, really catching a bid here today. But we did obviously have the inflationary print. I know you're going to have a panel about that a little bit later, but that was actually a little bit better than the street's expectations, especially when you're looking at core CPI. That actually came in at 0.2% on a month-over-month basis. The street was looking for 0.3%, and the headline inflation number also then came in line with the street's expectations here. Now, there's certain pockets within that report that show maybe a re-acceleration, especially on the goods front, but it's headed in the right direction when you're looking at inflation. And I think you are correct. When we're looking at the market today, a lot of headlines really driving the market. The Mag 7 not doing too great, at least so far right now. And then also the financial stocks. So we can talk about one of those earnings, but the financials are really kind of falling off a cliff over the last 30 minutes or so. That's also weighing on the S&P 500.
Yeah, and we have to say, why does that happen? Right now, we're seeing bond yields coming down. I just saw 416 a moment ago. Had been closer to 420. It was like 4.1999. You know what I mean? Early this morning. So we're watching bond yields. J.P. Morgan came in a double beat delta. Also on your mind. Some of your thoughts on earnings season thus far?
Yeah, and I would say also on the yield front, we actually had a really, really strong 30-year auction that really did surprise the street, Nicole. So that's another reason why we are seeing yields kind of moving to the downside. If you're looking at J.P. Morgan, they did actually beat both on the top and bottom line. When you're looking at their earnings announcement, their revenue actually came in slightly ahead of the street's expectations. Looking at around, I just had the number up here, looking at around... my apologies. Looking at $46.7 billion. Yeah. She was looking for $45.6 billion. And we had the adjusted earnings per share coming in at $5.23. Street was looking for $5.01. You're really seeing a lot of that strength on the trading revenue front, where we did see trading revenue coming in at $8.24 billion. That's the highest of any estimate on the street. And the equity trading portion of that business really drove a lot of that growth, increasing by 40% on a year-over-year basis. Now, what we did see as far as weakness is investment banking fees. That actually did decline by 5% on a year-over-year basis. And their CFO actually did make mention that a lot of the deals that were kind of teed up for the latter half of 2025 was actually pushed to 2026. So we should see that actually backfill here. And now if we're looking at Delta Airlines, they had an okay report, but their guidance moving forward, especially when you're looking at their fiscal year guidance, was a little bit lighter than the street's expectations on the profitability front. They are going to raise some of their expenses when it comes to employee pay, and they have also made some purchases for some Boeing planes as well. So they are seeing the consumer being very confident and continuing to buy, as well as the business class kind of still showing some relative strength within the market. But obviously, once again, the stock did miss on the expectations moving forward, and that's why we are seeing a pullback. So once again, this is kind of a mixed day when you're looking at the broader market. Mixed earnings announcements, a lot of headlines that's driving the markets right now, and we're trying to hold on to the 69.50 level. Let's see if we're going to be able to do so.
And I know you're going to talk to the levels right now, but my thought was that, look, we've also had the DOJ probe and the criminal investigation into Powell, and then there were questions about the Fed's credibility and whether or not people would want to invest in the U.S. But so that makes me feel very good to hear about the strong 30-year auction. That shows people do want to invest in the U.S. Final quick thought on the levels.
Yeah, I would agree. Nicole, I think that actually the 30-year auction, the yield that cleared that auction was like 3 basis points better than the street. So this is one of the stronger ones that we've seen in a very long time. From a level standpoint, 69.40 is still going to be the key area of support here. We're trying to hold 69.50. That's going to be a key psychological level. But if we do get a flush going into the close, which could be possible, if we do have a lot of these defensive stocks starting to relinquish some of their gains here, you're looking at buyers.
He's looking at 45.
40. And if we are able to get some buyers to step in and we get a V type of bottom here, 69.75 is going to be that area of resistance. So we can see that has been for a fairly long time.
69.75.
Highs and still making higher lows in the sequence. And until we break that, Nicole, the trend is still bullish.
All right, Kevin Green, great to see you. Thank you so much. We continue to take a look at the big picture here. James St. Aubin is with me, Chief Investment Officer, Ocean Park Asset Management. And I'm glad you're with me because we closed at records yesterday. Today, we obviously see some selling going on. What do you make of it?
Well, obviously the optimism continues here in 2026 around AI. And it's really interesting to see the market really shaking off a lot of other controversies. I mean, if you think about what happened over the weekend with the Fed and the political sort of interference, if you will, with monetary policy, that seems to be dismissed largely. The market reaction was very muted, and we've seen muted reactions to other bad news. So I think it just underscores the idea that the market continues to be driven by this AI thing, which is very powerful.
Do you worry about what's going on with Iran right now, the tariffs, the, sort of the turmoil there, the U.S. potential involvement? Is that a real wild card that really requires your attention right now?
I think so, but if you look back at all the geopolitical issues that we've had over many decades, it tends not to be a very big market event. I think the issues in Iran certainly could have a very short-term impact for the market, but as long as that AI theme stays intact, I really don't see.
I'm about ready to lose it too. We don't hold double bottom.
Market right now.
So So does that mean when there's sell-offs like today, that's a buying opportunity for you?
I might move up.
I do think any sell-off is right now the trend, as you were talking about earlier, is your friend, and I think you want to continue to participate in this uptrend as long as it is sustained.
So tell me about the AI trade and what you like about it. It's more than just NVIDIA, right?
Yep.
Yeah. Well, I know you have Dan Ives coming on later in the program, so I'm sure he'll do a better job of explaining all the virtues of that trade. But I think we also have to recognize some of the risks of the AI trade. As I mentioned, this is pretty much the single pillar that's keeping the market momentum going. And I think we really have to understand that we have some very high expectations with AI, which very well can be met. So I don't want to suggest that, or not to come out and make any kind of apocalyptic predictions about AI, but I really want to reinforce the idea that the market is very narrowly driven by this one particular theme, this one particular narrative. And it very much, like I said, can materialize the way a lot of people are expecting, but we also have to respect the fact that it may not fully materialize the way we expect it to, and therefore we should be prepared for any kind of sort of turbulence around that.
Yeah, and look, it is the single pillar. They talked about how much of a GDP it is with all the spending that's going on, and that it is sort of, keeping the economy going. You said you are concerned about concentration risk. Maybe people are too much in one thing. What else should they put in their portfolio that definitely could balance things out a bit?
Yeah, I mean, obviously diversification is always an important pillar of risk management, so it's important and we're hoping that the AI theme really broadens out the rest of the market and delivers earnings growth for the companies that are not directly involved and that are end users of AI. So diversification, I think, is really important, but also you want to have some kind of risk management procedure in the portfolio to maybe duck and cover when the market does get a little sideways on some sort of controversy related to AI.
Right. And then any other sectors, that you definitely think that we should consider? I know you're mentioning a few already, but we're getting a lot of earnings, and earnings season's already underway. Your thoughts about what could surprise us. I had somebody on today who talked about industrials and materials and financials and energy. Technology and financials. So, not energy. Is there anything else you want to add in there as a good potential for you?
Look, I think it will be very interesting to hear from the financials. Obviously, we heard from JP Morgan today what they're going to say about sort of the government stepping in and setting interest rates for credit cards. That's a big deal. So we want to understand, more of what this sort of political government interference or involvement in price setting effectively is what you have in financial services right now. So I think that could set back some of the sentiment positive sentiment that we've been seeing.
All right. Well, it's great to see you. James St. Alban, thank you. Ocean Park Asset Management, really appreciate it. Glad you were with us. Coming up, Dan Ives and option.
I kind of want Trump to do it, and then I kind of don't. About the banks. And what they're doing is crooked right now. We go again.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, You can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to the Watch List. Time for Options Corner, where we analyze and look at real options trades. Tom White, host of Fast Market, Schwab Network, joining me right now. Of course, Alphabet Google had so many pieces of news. The most interesting, exciting one may be the $4 trillion market cap. Well, it's not maybe the most interesting because it has deals with Apple and a lot of the retailers too. But a new all-time high for GOOGL. What kind of trade did you find?
Yeah, Nicole, stock's up, 75% over the last year. It's been the leader over the last month since it was April, or last year, since it was April lows. And remember, this stock was in a downtrend even before a lot of the market sold off in April, just due to the fact that they thought that search business was going to get pillaged by these chat bots, and maybe that they weren't going to be the leader in AI. Well, that's quickly turned around. Search continues to surge also. And then you look at some other portions of their business that are doing really well, whether it's YouTube, that continues to grow.
Here we go. Oh!
The cloud business grew 34% last quarter, outpacing its competitors, Azure and AWS.
The 6965s,
they got quite a bit. So different segments within their...
So we hit the 63 again. $69.65s. Didn't help the 69.80s. Come on, don't do that. Let me take off my shoes. I'm wondering if I have one more pair of underwear to wear tonight.
The trader has that opportunity to buy the shares at a 3.5% discount to where it's currently trading. So taking advantage of selling some at-the-money puts with the expectations it's going to remain above that break even of 325.70 over the next month and a half here, Nicole.
All right, and where do we stand on Palo Alto? I saw UBS has a neutral and a 215 target. What did you find there?
Yeah, the stock's been struggling a little bit. It's pulled back about 14% from those all-time highs that we saw last October, and we saw CrowdStrike get downgraded yesterday. So we've seen some divergence, I think, a little bit from what we've seen in the overall market hitting fresh all-time highs yesterday. Some of the cybersecurity names have been pulling back. Now, you mentioned the UBS price target got cut to 215 from 220, but Citi came out last night after the close, and they added Palo Alto to the firm's analyst focus list. Kept a buy rating on the shares, $235 price target, and they stated that they had a survey that positive for Palo Alto given its pole position in budgetary tool and disciplinary sprawl within enterprises in cybersecurity. So positive note out of them. But this has been, a sector that's been in flux recently. Maybe somebody trying to take advantage of the pullback that we've seen over the last couple of months in here. This was out in the February monthly option series that expires in 38 days. A trader bought 9,000 of the February 220 strike calls. Paid an average debit of about $2 on these calls. Didn't pay a lot of option premium. These are far out of the money to the upside. So the break even where this trader starts to profit is above 222 over the next basically 6 weeks or so. 16% above the current share prices, that break even, just below that all-time high and from October of $223 with call volume in there today, nearly 3 times normal daily average volume. So a lot of call buyers in there today in Palo Alto with the expectations that we're going to see some more gains. I think one of the keys on this position that this trader took, they've given themselves plenty of duration. You're going to capture an earnings bet in there also.
And we have Dan Ives standing by. We'll be asking him about some of these names that you're speaking about right now. Last but not least, you're looking at Intel.
Yeah, this one's exploding to the upside here today, up about 8%, 147% gains over the last 12 months in here at 2-year highs for this stock, and this comes on the back of an upgrade out of KeyBank. They upgraded AMD and Intel. I think one of the interesting things about this upgrade was, this is about the hyperscaler build out, right? AI, and that's what everybody's kind of focused on. But the that kind of went to the side of their legacy side of the business, CPU business, which they're almost sold out for 2026. So the build out of these hyperscalers.
Can we get up here to the top of this trend line?
Necessary for more, build outs of their CPU. So they're almost sold out there. This is also going to add to what kind of pricing do they change, because they mentioned the same thing about AMD, that they're almost sold out of their CPU chips also as this infrastructure gets built out. And what does that mean for pricing? Is it going to be like
155
and the memory side where they can start to increase prices? So that'll go right to margins moving forward. So a lot of positives here for Intel over the last basically 12 months or so. Remember the partnership with the U.S. government almost took a 10% stake in Intel, but we did see some bullish activity in here also. But this was all the way out in the March option series, so about 66 days to expiration. Trader bought nearly 7,000 of the March 55 strike calls. Paid
I want to break
of
this.
about $2.61. So the break even for this trader where they start.
Now my 80s are going to end up being worthless. With the 69.65s or see, this is a little wall right here. 69.54.31. You suck.
Every day here, Options Corner. Coming up, Dan Ives. Have you looked at the Ives ETF from Wedbush? He has all the details.
Let's go,
the
Dan.
He loves the most and the ones he's watching most closely for 2026. Dan Ives. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. It's our pleasure to bring in Dan Ives of the Ives ETF, global head of
Oh
tech
God, here
research
comes
and
Dan Ives.
senior equity analyst at Wedbush Securities. And you and the team here rang the bell late last week. It's very exciting, Dan Ives, to have you around town here on the corner of Wall and Broad. Really, the conviction is evident for the AI trade. Where do we stand in the AI trade for 26 and 27?
Yeah, and first of all, it's so great having you there, to share that special day. I mean, look, Nicole, me and you, and we've talked for years, I continue to believe the AI revolution is actually just hitting its next stage of growth. I mean, when you think not just what's happening in the data center, but think about physical AI, autonomous, now Apple in the AI game with Google. Look, this is not just about LLMs. This is something much, much bigger, and I continue to believe it's year 3 of an 8 to 10 year build out.
I saw actually Elon Musk did not like that Google was partnering with Apple pertaining to Siri because they already thought Apple and Google were already in bed together too much with the other things. What did you think about that?
Yeah, look, I get the view from Musk, but my view is that one's Google, one DOJ suit, that kind of opened the door for what ultimately is going to be the Apple deal. Because look, Apple, I mean, they're gonna continue to bet on Google, and that's the smart thing for them to do because it's not going to happen internally. Google ultimately gets opportunity to monetize. When you look at Apple, you look at their broader install base, which is unrivaled. And I think this is a reality. The stronger going to get stronger. You see more and more partnerships in M&A.
And so with Apple, I think about Apple, you have a price target here of $350. That's one of your favorites, right?
So yes.
Well, it's also one of our favorites because my view, the AI premium is not built into the stock here. I actually think that's something when you look at the upside, talk about $7,500 per share.
I'd like to see
monetize the install base.
I would like to see this break the 63 and respect it. And then once it did that, go to like $3 a contract. That's what I want to see. 69, 65s. You can do it. Oh, I turned my head just a second. I see the megaphone. Megaphone, yay. So this can go either way, in other words. Don't. I'm not listening to this idiot.
What Palantir does, because AIP, this is really the start of just monetizing the enterprise. And I think the AI story of Palantir, as you go more and more into the commercial, look, only 3% of companies have gone down the AI path. And that's why when I look at Palantir, we've talked about $1 trillion valuation next 2 to 3 years. And they're playing a different game. Now, I think others are going to continue to have success in software. MongoDB, Snowflake, a good example.
When you talked about, I know you mentioned cybersecurity too, but you mentioned the top 5 names 2026. Tell us right now, so in case anybody's not sure, what are your top 5 names for 2026?
Yes, that's Tesla, Microsoft, Apple, Palantir, and then in cybersecurity, CrowdStrike. Now, the one thing you say is, okay, how come NVIDIA's not? Of course, how come NVIDIA's not?
She just get ready to say it.
But I've said, like, they are in the odds AI 30. They're one of our core names that we talk about. They're the one chip in the world fueling the AI revolution, 5 trillion more. But I believe those are the names those are the ones that stick out going into 2026 as part of the AI trade.
So CrowdStrike got a downgrade today. So on any pullback, you buy CrowdStrike. Why?
I think cybersecurity there is well positioned as anyone when it comes to AI, when it comes to, really AI cybersecurity intersection. I think CrowdStrike is the one where they have the product portfolio.
145.
Well positioned when it comes on the cloud side. And to me, like everything Kurtz is doing there is sort of changing the whole game in cybersecurity. Palo Alto, obviously, another one that significantly benefits in terms of what we see in cybersecurity.
We didn't talk about Broadcom at all. What happened to Broadcom?
Look, Broadcom's, again, that's one of our core. Look, when we talk about the AI 30 and we talk about, our view, it's not just 7 names. Broadcom's obviously on there as the chip. You got to play chips. Broadcom's one of them. Got to play software, cyber, energy, infrastructure, obviously a core part as well.
What's the energy infrastructure part of the story? What's your best name there?
I mean, we talk about G Vernova. That's one that sticks out. Aqua is another name that sticks out. I mean, those, I think what we see playing out in energy, I mean, this is a significant sort of scarcity effect that we're seeing play out on the energy side. And I think that's, look, it's just a very, very important time. We talk about nuclear fusion, right, with TAE and some others in terms of some of the opportunities that you're seeing. Look at Meta, look at the acquisition they did. You look at what Trump just talked about with Microsoft. I mean, it speaks to my view, like, you're going to see more and more the scarcity is energy, and energy is going to be a play.
Did you ever get to speak to President Trump after Liberation Day when you started to feel so downtrodden? You really were a bit doom and gloom when you thought maybe some of those tariffs were the real story, when in fact they ended up being much more of a negotiating tactic than anything else, but really jostled the market. Did you ever talk to Trump or anybody in the administration at that time?
May I just say, like, we're, being in the Beltway a bunch during that period, I think to me that was, look, we talked about that was like a scary period. But I did feel, and Tuckman's talked about it too, as we started to talk, more and more within the Beltway and outside the Beltway, you felt like cooler heads were going to prevail. And I think the reality is that like we've come off the cliffs. It's been handled well, and I think it's the reality too, where, see, to me, it's also like look at like Jensen. Look at, Sam Altman, you look at Karp, you look at others, like Cook that have been huge, I think, partners and probably tech people to lean on for Trump administration.
Let me ask you this. So the robo-taxi story, is it rolling out as quickly as you had hoped? And will people really be comfortable going in a robo-taxi? It's like asking, are you comfortable using stablecoin in retail? How quickly do you think that this could be adopted? I mean, I don't know that I'm ready to get into a car without a driver. Are you?
No.
Well, I am.
Hell no.
Yeah, I know you are. You probably already rode in it 20 times. But are people going to adopt this? And is this rollout going as quickly as you would hope? And if not, would you get on the phone and tell Musk speed it up?
Look, but see, I view it as I like that they're doing it brick by brick carefully because you're dealing with lives, right? So they got to make sure that everything is right. And I think it's more important in terms of the way they build it out, making sure it's safe and making sure that as the geospace area expands, it's in the right way rather than just quick. Hey, look, Austin's expanded nicely. We're going to go to California. But like I said, like, you really want to see 30 cities to get to scale on the robotaxi side.
Why
He
do
doesn't
you
have
say
much faith
Waymo's
in
better
it.
than
Neither do I,
Tesla,
but
and is that not true?
But Waymo's had a huge, it's had
It'd
a
be
huge
nice to see us
start,
back to the
and
top of the
they have
megaphone.
Phenomenal technology. My whole thing is that Tesla, no one will match the scale and scope of robotaxis eventually.
I
But
just
look,
now noticed
like I said
something.
about Waymo, Waymo is another reason to be bullish in Alphabet. It's not factored in.
And what about some of the names that you talked about in mergers and acquisitions?
Yeah, what about
Those
it?
Names that you kept an eye on, and you tell me right now if you think these names are really, maybe pick one. C3AI, the watch list that you had, C3AI, SanDisk, Lyft, Qualys, and more, that the M&A floodgates are opening. Are we still in the M&A floodgates opening? Tell me about M&A, and are one of these names a takeover target almost immediately?
Look, I think you're going to see cybersecurity. We've named a few there. I think you're going to see a lot of consolidation in the space. Strong are going to get stronger. They're going to be aggressive in terms of as they go after this market. And I think it's important, in terms of, what they do, how they go after this. And, to me, it's, this is going to be an opportunistic time for companies as they navigate.
And when we think about the IPOs that are coming, is there any IPO that you're watching for in the next 12 months?
Look, there's so many, right? I think a lot of focus on SpaceX, right? Just given where they play. But also it speaks to my view, like, if there's this bubble, like some of the best companies in the technology and AI revolution are private. They're not even public. I mean, it just goes back to, like, this is more of a 1996 moment than a 1999, 2000 bubble moment.
Let me ask you the last question. At the end of the year, is the CEO of every single one of these picks that you have still the CEO? Do you expect any sort of surprises in the C-suite for any of these top names that you picked today? I mean, you have 10, 15 names. Do you foresee any changes?
I don't foresee any changes today. I also think, I think Tim Cook will be CEO of Apple through at least 2027. So I think that's something, there's been speculation there. But Nicole, this is an AI revolution. We're still in the early days. And a lot of these Hall of Fame CEOs have to navigate their company through this period.
All right, well, Dan Ives, who loves to be in a robo-taxi, it's great to see you. I had a great conversation with Gary Wedbush and his wife Kelly, too. They love you, and I enjoyed their company here. It was really a great experience. Great to have you back here at the New York Stock Exchange, so we'll see you again soon. Dan Ives, the AI revolution that is still very much underway. Thank you so much. Great to see you. Technical Tuesday, Kevin Horner is standing by. We'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides. Time for a Technical Tuesday. And joining me right now, once again, every Tuesday, Kevin Horner, Senior Manager, Trading Services Education at Charles Schwab. I'm so glad you're with us because yesterday we had a record close for the S&P 500. Today we started off just a little back and forth, but clearly we have red on the screen. Precious metals moved to highs. Oil's at the highest in 7 weeks. There's a lot going on here with all these headlines. Your thoughts on the S&P 500 right now?
Well, as usual, Nicole, I'm going to continue to watch the trend here, trying not to fight against what's happening. I think that's the approach that many traders are really working with these days. We continue to hold a 20-day moving average. Dating back 2 weeks ago, we tested the 20-day, but we generally closed back above it very quickly. I think a lot of traders are going to be pleased by the fact that we once again have continued this uptrend. 6950 is where we hang out right now, and I'm sure there are many bulls targeting that 7,000 ledge above us. But if you're a trend trader, it's important to monitor the areas below current price levels so that we know where we might choose to take some semblance of action here, right? If you've been trading this to the upside, you've been bullish, you've got every reason to stay that way until things change. And that first thing that might change could be a day or two consecutively beneath the 50-day moving average. That's at 68.22 right now. I think a lot of traders are going to keep a close eye on that level. Under that, we have an increased risk for a deeper pullback until that actually occurs, though. There's really not a lot of reasons to fight against what you're seeing in this grind higher in the SPX.
All right. And then what about a name like Honeywell? Why did that chart stand out to you? Why is this the one we should check out right now?
Well, it's in this, this defensive space of the market, right? This area that's been rallying quite nicely. It hasn't necessarily participated, but a couple of things jumped off the screen at me here. One, it's up about 12% from those recent lows that we saw around the middle of November here. The other thing that stands out is when we made that last low in November, it was a divergent low. So we kind of had this heads up. Hey, we might be looking at the short-term lows being established. Let's see if we can get a new trend underway. Well, we've had that trend short-term bullish develop, but we're pushing into this 210 level that's been historically bearish over the last 6 months or so. And I think that there's an area to watch, and certainly short-term bulls who want to get started here might be a little bit inverted in risk versus reward, because buying right now before a legitimate breakout means you have risk for that deeper pullback, that pullback to what could be 202, the 200-day moving average, or even the volume point of control in the neighborhood of the 20-day moving average, which is around 199 or so. But you don't want to be a buyer at 210 if you think we could be a buyer again at 202, 199, something like that. You want to be patient here, wait for the breakout if that's the case. So traders, you got to keep an eye on something like this, but you need to have a plan, of course. Is it a breakout that allows you to play momentum to the upside, or do we get that true pause at this area of former resistance? Do we pull back at all and set up a better risk-reward trade opportunity for the bulls? Obviously, all remains to be seen, but it's an improving chart with an intriguing area of potential upside.
All right, great chart. We're not letting you go yet. We have one more, 3M. Let's talk about 3M, please.
Can do. Well, we talked about this one last year, and the reason I'm bringing it up this year in January, just 12 months later, is because we're seeing a 3-month consolidation at this point that is really dabbling with the potential to get to continuation mode, which means a new high close in the short term. 172 is kind of that area in the short run. It has done just fine here, moving off of the recent lows at 160. But again, an inverted trade at this point, if you're bullish, it makes sense to be bullish given the nature of this. And yet, if you buy now and we get rejected at the 172, maybe 174 range, 174, by the way, the all-time high, essentially, then you run the risk of us not getting a continuation, and really you're in a trade longer than you may have expected, which is once again why traders allow breakouts to occur and then enter after the fact. I know that's a difficult process for newer traders to get really comfortable with, but often buying as the stock is in the midst of making those new highs is the time frame that allows a trader to participate in what could be the most momentum-based move here. So perhaps some opportunity through 172 in the near run, but certainly an improving chart. And one thing I'll leave you with is the reminder from a technical analysis standpoint, when we get these consolidations,
technical analysis
out of a consolidation is when we expect the stock to begin trending thereafter. So keeping a close eye, if we can move through 172 on those shorter term moving averages, a 10, a 20, perhaps a 50-day could be the way to manage risk for a breakout.
All right, and I'm sure you're very excited for earnings season now, too. We'll get a lot of information on a lot of these names, too. Kevin Horner, Senior Manager, Trading Services and Education. Charles Schwab, thank you, Kevin, every week here at Technical Tuesday. Still ahead, let's bring in our
technical analysis.
About the inflation print we got in today. Showed a little bit of cooler inflation.
Back down to my entry here.
At the same time, what does it mean for the big picture, the overall economy, what the Fed does next? Our panel's ready.
Final 90 minutes of the trading day.
If we can bounce it right here, that'd give me an ascending triangle.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Marley's a hard worker. I have to give her that credit.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour. You can trade
God, not again.
With Schwab.
It just takes you frickin' out.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning,
every
whether
goddamn support,
401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Let's see how they can get away with that.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only
I don't think it has a
on
chance now. We got, I mean, it's at a nice little head and shoulders here. It's still go a little bit lower. there. I mean, that's it.
Welcome back to the watch list. Want to discuss today's inflation print, the CPI print. So important. Glad to get data now after the government shutdown that's real, I guess, and we need a few more even. Stephen Cates, financial analyst at Bankrate, joins me now. What stood out to you in the report? It's 2.6 annual. The story and the headline read cooler than expected. What were your thoughts?
Well, this is really proof in the pudding that inflation in November, which we were a little concerned was not necessarily fully accurate, just given the distortions that happened over the shutdown. But this is an affirmation that that is accurate. We are seeing some disinflation, and that while inflation is not conquered here, it's not necessarily reaccelerating, and that's worth celebrating.
So that makes you feel a little bit better. I mean, we did see new home sales come in a little stronger. Shelter, for example, is still a little bit sticky. It was up 0.4%. It's a third of CPI. It's up 3.2% year over year. What's with the housing story?
Yeah.
Well, we did see in September, and then again during the data from the shutdown, that those month over month reports appeared to be relatively depressed. I think this is more in line with what
been a tougher year.
Trend we're seeing in slowly cooling shelter inflation. It's not
a good year,
going to
better
snap
year, but
down
tougher year.
Full percentage points
That
over
makes
a
any sense.
short-term period. So we're seeing cooling. We know that some parts of the country, the Sun Belt, southern cities, are seeing negative house prices year over year in some cases. So that cooling is happening, and I don't think anybody should be too eager for negative housing growth in terms of prices. We really just don't want deflation there, but something that's more on a long-term trend and can be consistent is absolutely a welcome thing.
There we go.
Look, slowing is one thing, or
Ben, stop.
Let me ask you this, because I've had
Sorry, honey.
money managers come on.
I love you. You never had me come on your show. Left shoulder, right shoulder, right shoulder. 3 white soldiers. Head. Back to even. It sucks. Oh, I was up. Yes, I was up almost $400. Now we got the 3 white soldiers. If we can hold this first candle, third candle. It's on the 1 minute.
The 3.3% year over year, that's not helping them when they go out and try to spend their money.
Understood. Which one are you, more optimistic or pessimistic?
No way.
And also, I guess you're counting on some Fed cuts, at least one.
I think so. I think that we're, at this point, more likely to get 2 this year. When they are, I don't know. I don't think that we're likely to get a cut until probably the second quarter of this year. But personally, I'm more optimistic. I certainly do think that the growth that we're seeing in the economy is going to translate into a reacceleration of hiring. That's going to be good for everybody. The fact that we've now seen a reaffirmation of cooling inflation, we're going to get more of that down the line. It might be a bit of a bumpy road, given the fact that there could be some demand spikes after we get tax refunds. There's also certainly all the proposals that the administration is making to try to really save some affordability and promote themselves for the midterms. We're going to have some bumpy roads, from the market and certainly the bond market. I think that for consumers, they're just going to have to be patient.
What do you think of the 1-year 10% cap on interest rates on credit cards? It's not the first time we've heard that idea, and the president has put that out there. I mean, January 20th, we might hear more. You did have some people scratching their heads in the financial industry. Is that something that could work? Is it a good starting point, or no?
I was scratching my head about that. Both the timing.
I was just rubbing my head, saying break.
It sounds nice that people who might be paying high credit card interest rates, they're around 19% right now, that they would suddenly be saved. But that just isn't logical. What it means is that
credit cards will simply no longer offer credit to certain consumers. It's not that they're going to simply eat that risk. They're simply going to take it off the table as an option for some portion of those who have lower credit scores. So it's an access to credit issue. I would rather see Americans have access to credit and be appropriately risk adjusted in terms of the rate that they may have to pay to cover those balances than see credit card simply unavailable.
Yeah. I mean, I don't even know how it works because honestly, I have a great credit score and some of my cards are 30%. Yeah, but the cards are 30%, so it doesn't even make sense. Forget it. I don't even want. That's what it is, right? I mean, that's just what it is. One of them's 32% for a store. I'm like, what? And I pay it off.
But
anyhow,
don't you get
labor.
that balance?
No, tell me labor. Give me a second, a quick second thought on labor.
So 2 months of positive payrolls growth. Now, these aren't the numbers that we were used to back in early 2025 or 2024. We're not seeing 150,000 new jobs created, but we're also seeing slower labor force growth. So for the moment, we might be at an uneasy equilibrium. What we really need is hiring.
Right, understood. Look, there are dating sites now where people, sometimes they look for religion or they look for politics, and some people just say, I want to make sure you have a good credit score before we continue our date. It's very interesting, this younger generation. They are asking the key questions. Stephen Cates, great to see you at Bankrate. A good conversation, really.
It's a good question to ask.
Thanks for being with me every single day here on Schwab Network at 9.
Honey, I got an
See you
825.
tomorrow. Keep it right here. Market on close.
Well, you go out with me. I got an 825 credit score, and I have an education of a third grader, and I'm worth about $10 million. Would you go out with me, baby? My credit score is at 825 points, Mama.
Overdraft fees and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking.
Sorry, you shouldn't have interrupted me like that. As we were working on this pivot point, this is called a megaphone pattern, where you have lower lows and higher highs. And you have a pivot point inside of every pattern. And I suggested that maybe the 21 EMA here, right around 54, 53, 75 would be a good pivot point. So if we can hold that, I think we're going to win. What did I say it was again? Oh, I think we went below it. This ain't gonna work. This ain't gonna work. $0.55. What?
opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago
Now Power Hour.
And I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll discuss market expectations for this year and look at why the
Just touch that
2026
sport again
is to
one
be
more
even
time.
more volatile than last year. Later, we'll discuss the state of the tech sector with Daniel Newman over at Futurum. And in Options Quarter, we'll take a look at options activity in Boeing today as it hit a fresh 2-year high. But for now, Marley, take us through what's been on your radar today.
AMD and Intel, Sam, both higher today following an upgrade from KeyBank to overweight on stronger than expected data center demand and tightening memory supply across the semiconductor industry. The firm says that both companies are basically sold out of server CPUs through this year and expect that that could lead to price increases in the near future. Shares of JP Morgan also under pressure today after posting a beat on their adjusted earnings and revenue for the fourth quarter. The bank did take a 60-cent per share hit due to a pre-announced $2.2 billion charge for taking over Apple Card from Goldman Sachs. Trading revenue surged in the quarter while investment banking numbers underwhelmed. And Delta Airlines stock did not take off on its earnings despite posting a beat on the bottom line. Revenue for the quarter came in just slightly under expectations, mostly in line. The company also forecast a dollar-wide range for its full-year EPS, saying that if travel demand continues, particularly in the premium sector, that it could hit record numbers in 2026. We'll break down that full report and more coming up here in just a moment, but let's see how the markets are faring as we head into the end of the trading day here. A bit of a mixed picture again, better than the sea of red we had midday. The S&P trading down about 1/3%, 69.51 right now. On the NASDAQ, also down about 1/3%, 25,693. On the Dow, we've lost 415 points today at 49,174, but the Russell 2000 is in the green, up almost 0.2 at 26.4012. On the 10-year, we're at 418. The dollar slightly higher at 98.90. For gold, we've moved down a bit, giving back some of those gains, moving away from those record highs to 46.0350 a troy ounce. Crude oil still higher on the day, 2.5% higher, in fact, $61 a barrel even. And Bitcoin gaining on the day as well, trying to get back to that 95,000, that mentally important number, up more than 3% at 94,600. Before we get to some of our top stories today and introduce our first guest, I do want to check in with Sam in New York and see what stories caught her eye today. Sam?
Yeah, just when we thought we could get through a day without China and Nvidia headlines, here we are, Marley. The information now reporting this afternoon that China is restricting Nvidia chip purchases to special circumstances. So according to the outlet, the Chinese government will allow some local companies to buy the H200 chips as long as they're used for things like university research or development labs. Nvidia initially got a bump off the back of that report, but then pulled back. And that may be because there is a view out there that the message is somewhat vague, but also shows how China is staying tough on the issue of reopening the Chinese market to Nvidia. We also, of course, Marley, got the CPI report. A lot of attention on that. It looks like we've got past this hurdle now. Stocks initially getting a bit of a boost and yields coming off after that December print, which was in line with estimates. The CPI rising 2.7% annually, with the core, which strips out volatile food and energy, coming in cooler than expected. But it was a bit mixed when you look under the surface, under the hood. Shelter and electricity were higher, while used cars and gas prices were lower. But as Joe Mazzola told me today, while it shows the economy is still moving along and inflation is abating at the core, the numbers are still a little bit muddy, of course, with that government shutdown, and we need to get a bit of a cleaner picture. So we're going to be watching the trend. But for now, I'll send things back over to you, Marley, with Jenny in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, like you mentioned, Jenny Horn joining us here in our Chicago headquarters, co-host of Next Gen Investing, to help break down some of these big stories of the day. Of course, earnings, a big story today. We kicked off earnings earnings with our big banks and Delta. Let's first talk about JP Morgan. We are seeing a move to the downside of more than 4% on the heels of their report. Walk us through some of the key numbers.
Yeah, and this was, I think, really the tip of the iceberg as far as some of the investor sort of just really lackluster tone around everything that could be coming for the overall credit situation in the United States. And I think that this, unfortunately for JP Morgan being the biggest and one of the most well-known, I mean, Jamie Dimon is seen as such a great read on the overall health of the economy. There was still things to like. So maybe we'll start with the more optimistic. And he did say the U.S. economy remained resilient, that labor markets have softened, yes, but conditions do not appear to be worsening. Meanwhile, consumers continue to spend, businesses generally remain healthy. So overall, we did still see them round out 2025 as their most profitable year ever. Or excuse me, their most profitable year ever was 2024. We did see a contraction of that, but like modestly. We're talking, again, $1.5 billion, but still modestly. They did say they notched record revenue of $5.1 billion in their payments business. That was up 9% year over year thanks to these deposit balances fees. But also they did also mention the fact that last month some of their expenses they do believe could only continue to climb as we do go more and more into 2026. So that's really where I'd say everything sort of fell off, because then we also did see the overall opposition from very clearly JP Morgan's management on the 10% limit on interest rates that would be issued to credit card holders. Now, it's going to be interesting to see if this is implemented. Obviously, we have not actually that much time until January 20th, but we do see that this will be pretty bad for the economy per all the commentary we've gotten from the sell side. Jamie Dimon, and overall just everything from JP Morgan is saying that this is not a situation we want to see, and it will not only just harm the banks, it will also harm those that say do not have as fine-tuned of credit, and that will see them not being able to borrow at the same rate. So that will be an interesting situation that we cannot predict how that will unfold, but he definitely was seemingly going after the administration, and I think that also does not bode well when you are two of the most powerful people, frankly, on the planet. But I mean, did say that net income that came down 7% from year over year, but that was at least attributed to this accounting change with Apple, which did include setting up that $2.2 billion credit reserve as part of the agreement to buy Apple's card portfolio from Goldman. So I think that at least you can attribute some of the year-over-year declines to like a one-time specific event. But again, I think that's not what's driving a lot of this pressure today. It's everything tied to the unknowns, the murkiness, and a lot of these big banks' future.
Yeah, a lot of the commentary I've had today too has been, no, people want to avoid it. No one's really stepping directly into it, but a lot of it is about the uncertainty tied to that and what that would actually look like in practice if it were to come to pass on January 20 or at any point after that. We're also seeing a downturn in Delta, the other big earnings report that we got today. Interesting because the CEO came out and said that he thinks 2026 could potentially be a record for them. That's what a lot of the headlines are reading, but they're moving to the downside. They had a slight miss on revenue, but earnings was better than expected.
It was, and I will say that there's pieces of their guidance that you could also make the argument were better than expected. I mean, the headline number that they like missed on everything, it's just not accurate. I mean, I can understand some of the weaknesses right now. They're expecting still 20% year-over-year earnings growth now into fiscal 2026. Free cash flow also is only projected to improve, which helps reinforce their balance sheet momentum. And forecasting now 5 to 7% revenue growth and around 50 to 90 cents per share in earnings. That was slightly below consensus at the midpoint, but again, we're talking like the overall range was slightly disappointing. This was not a huge miss by any means. Adjusted earnings did actually beat expectations in the fourth quarter. And we did see that the U.S. federal government shutdown, longest on record, of course, did cut roughly $200 million worth of quarterly profits, or 25 cents per share. But despite that drag, they ended 2025 with their highest ever share of premium and diversified revenue that now accounts for 60% of their total. And their CEO did say that virtually all seat growth going forward will be in these premium cabins, and they're reconfiguring their planes to be able to accommodate this, which I will be very curious to see how that looks with a larger business and first class seating. That will just be something that we've frankly never really seen before. But then there were tones of like, you had lower fuel costs. That was a positive. But for the first time ever, they actually saw the rising labor costs then outpace fuel costs as far as their biggest expense. And that is something I think that also is being read through as a negative because that's not expected to ease anytime soon. So I do think that's still this major fleet diversification move. They ordered 30 new Boeing, up to 787-10s, an option for 30 more. I mean, Delta continues to really pave the way for these premium offerings.
There's another
but also
knife.
showing that the K-shaped economy theory is still very much real, because right now you're seeing like main cabins contract 7%, while premium revenue rose 9%. Just goes to show what's really holding up their business right now.
Yeah,
Dow-
CEO at Bass
Dow is
even
flagging.
said, we're operating at the top of the K in terms of the K-shaped economy.
well.
But, Delta moving to the downside will be interesting to see when some of the other airliners report if they cite similar issues with labor costs outpacing some of the not being offset by these lower fuel prices, because that could be a problematic trend if it does go across multiple airlines.
Okay, and I think it's interesting when you look at, say, I tend to think of Delta, and then maybe second place is United, but names like American, Southwest, I mean, even the low-cost carriers, what are their earnings going to look like without that same premium lift? Or if they've tried to drive that home this quarter, we will find out. But that is going to be an interesting tone when you don't have maybe the premium offerings to help really boost the rest of your results.
Yeah, some benefits to coming first, but also being the barometer can come with some downside, as we're seeing for both companies that reported today. Some major upside though for these next two. We're talking about AMD and Intel, two of the best performers in the S&P today, after they got upgraded by KeyBank.
Yeah, and a really optimistic note. I mean, frankly, I'm surprised to see this much of an outsized move, but finally to talk about something positive.
211.
KeyBank upgrading AMD to overweight from sector weight, $270 price target. And specifically when looking first at AMD here, they said the company largely sold out of its CPUs in 2026. Their supply chain indicating now that the recent surge in hyperscaler demand has led to AMD being almost completely sold out of its CPUs in 2026, and they potentially could be considering then a price increase of 10 to 15% in this first quarter. And they also, of course, Intel with an overweight rating raised from sector weight, $60 price target. As they did say, they expect again this outsized data center demand from hyperscalers this year to be an overall significant tailwind for Intel's data center and AI revenue. And that, again, channel checks are signaling further strength in server CPUs, but that given that strength in demand, they are, again, considering these pretty substantial price increases. I mean, I had never thought that I would see a day that we'd look at the last 52 weeks and say AMD up 88 to 89% roughly, and then Intel is outperforming that name. I mean, it has just been actually a really phenomenal recovery to watch. I know Lip-Bu-Tan obviously has seen some security being backed by the Trump administration, but I do think the interesting call out is these hyperscaler demand. You see it over and over again from analyst notes now, and I wish that I would have seen this theme of like the memory stocks last year, because I do think that these emergent themes in AI will continue to see these like pockets of real strength. Not to say that that's necessarily going to be 2026 for these names, but it's been a really nice start to this year.
And KeyBank even goes so far as to highlight that we've been talking about this hyperscaler demand, but that it is underappreciated. That's what a lot of the driver is, I think, behind some of these moves to the upside. But again, very impressive moves, more than 8% for Intel, more than 6% for AMD. And we also got an update on NVIDIA today, an update on their H200s to China. And there are some caveats here when it comes to this update.
There usually are when it comes to the overall landscape of right now the tech trade to China, but we did see initially actually a modest lift in NVIDIA shares before. Now they've given all of that back, but the information reported China had approved tech companies purchasing their H200 GPUs in some cases, as you said, some caveats. So they said reportedly to these local companies that the H200 AI accelerators could be purchased under special circumstances, citing examples like university research as well as development labs. But they also said that the government officials were pretty vague as they told some companies to buy the products if necessary, but did not specify exactly what that meant. So additional meetings between the Chinese government and tech companies are still expected to occur on the matter. NVIDIA has not yet responded to these allegations, but China reportedly has told some of its tech companies to halt orders of NVIDIA's H200 GPUs before the government makes a decision on if they're going to be allowed to be sold within the country. And then, of course, the back and forth. Jensen Huang did previously say earlier this month that he did not believe the Chinese government would be making a formal declaration that it has not allowed these companies to be basically utilizing their GPUs. But he said the proof will come through purchase orders. And as we know, there is a pretty substantial market that is, I mean, not to call it like a dark market, but basically they've even said we have such a need for these products that we're seeing basically people go around the Chinese government to access them, which I think that if you're Jensen Huang and you're boasting the best-in-class product, that's only a testament to how much right now there's an appetite for your GPUs, which are the most advanced. I mean, they command such a dominant market share of that GPU market. So it'll be interesting to see, again, how that does fall. A lot of things could happen in the coming weeks and months between, of course, the U.S. and really Beijing, as well as just the overall Chinese government.
Yeah, a lot of gray language in there, a lot of gray area to sift through. But Jenny, thank you for breaking down the latest for us. We appreciate it. That's Jenny Horn, co-host of Next Gen Investing here on the network. And I do want to check back in with Sam in New York and see what we have coming up next in the show.
Well, Molly, we're going to discuss expectations for 2026, where our next guest is saying the setup is to be even more volatile than 2025. Market on Close will be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Vardas on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. Let's just check in with where these markets are at with about 43 minutes left to go here. So obviously we have seen a bit of a pullback in these stocks. We're looking at a bit of a mixed picture. The Russell 2000 is managing to hold up just a smidge there, but of course we did actually see things starting the day higher before actually losing some steam, and of course this comes off the back of clearing that first hurdle, which was the CPI print, which came in pretty much in line before, which was slightly softer than expected. But of course, this is all factoring into how the markets are thinking about the Fed's next move as they look around sort of the middle of this year with respect to some of those rate cuts. And then, of course, we had some of the headliners with respect to the earnings kicking off with the financials. We had JP Morgan out, of course, and Delta, but both of those stocks have been lower today. We've got that drag on the financials, particularly off the back of some of the credit card policy setting as well. Not to mention, though, we do have some degree of rotation in these markets, certainly some selective strength, particularly when you look at some of the industrials, which have been higher. Energy, of course, chasing those prices higher. When you look at the crude oil, which is sitting at $61 a barrel, of course, off the back of the Trump announcements around tariffs and Iran. And of course, we do continue to see staples up there and real estate as well as utilities. So some of these adjacent AI plays. Now, let's just take a look at some of the futures products, because interesting move, particularly when you look at the reaction in the bond market, treasuries, when we did see, of course, things actually starting the day higher at around 419. We pulled back to about 417 off the back of the inflation print. We are sitting up about 418 right now. So continuing to stay range bound very much in this benchmark. Bitcoin, though, actually very much a standout today, catching a bid in the market, actually sort of quietly, not catching too much attention. But look at that, we're up 3.3% right now. We're at levels of 94,000 and change. So we actually have seen some of those Bitcoin-related companies rally alongside this price increase as well today. And then, as I mentioned, we have got crude oil sitting at $61 a barrel.
Very good.
A lot of moving parts with respect to the geopolitical cross currents that we have been tracking for you in the market. But I'm going to wrap it up there and send things back over to Marley in Chicago for now.
Thanks so much, Sam. Joining us now in our Chicago headquarters is Dave Secura, the Chief U.S. Market Strategist at Morningstar. Dave, thank you for being with us in studio, and Happy New Year to you. I haven't seen you yet in 2026. Perfect time for us to talk about Morningstar's outlook for 26. You say we've got high valuations and even higher stakes. We should brace for some volatility. Walk us through the headline.
Exactly. I think 2026 is actually set up to see a lot more volatility over the course of the entire year than what we saw in 2025. So, of course, last year in January, you had DeepSeek, hit the headlines. That hit all the overextended AI stocks. Liberation Day tariffs, took the rest of the market down. But once we bottomed out from there, it seems like over the course of the rest of the year, there's some little hiccups here and there, but nothing really that I consider to be all that volatile. So looking forward this year, just a number of the different things I've got, on my radar. First of all, it's just AI valuations. Again, no matter how you look at them, they're very high. We need to see even more growth in the growth there in order to support those valuations. Having said that, there's also a lot of upside volatility potential there too. When I look at a lot of the modeling that we do in names like Nvidia and Broadcom and so forth, stocks that we think are still undervalued today have a lot of upside if we're able to hit just our base case numbers, much less the numbers a lot of other people are talking about, just how much AI can continue to grow over the next 5 years. So there's still upside in those names as well. Of course, with the Fed, everything that we have going on right now, personally, I think the Fed was already going to be on hold until the new Fed chair takes over. So we weren't going to see any cuts. We're still looking for 2 cuts in the second half of the year, but that remains to be seen. I think we're going to have a resumption of all the trade and tariff negotiations. I think by spring and summer, that's going to be back in the headlines, so that can certainly roil the markets here and there. Our economist is looking for a slowing rate of economic growth. I think the economy is especially hard to read right now with everything that's going on between the capital expenditures for the AI build-out boom versus what's going on in kind of the real or the fundamental economy. We expect inflation will probably be hotter than consensus, not out of control, but higher than what the market would prefer to see. Midterm elections, of course, coming up, so we'll have all the political rhetoric. As hot as the political rhetoric is now, it's probably going to get even worse from here. The private credit markets, and that's one I'm actually keeping a pretty close eye on this year. So we have a credit rating subsidiary, DBRS Morningstar. They rate a lot of those private credit deals, and in their research, they've been noting that fundamentally, a lot of the credit quality of those companies has been deteriorating over the past 6 to 12 months. So we're looking at more downgrades there. A lot of these companies are breaking their covenants. They need to renegotiate those. A lot of the companies are backing off that they need now capital support from the private equity sponsors. So definitely a lot of smoke in the private equity market to be aware of. Some of the global factors I'm looking at, very concerned about China. I think the rate of deacceleration there might be accelerating, so we'll keep a close eye on that. And then lastly, again, it's been the widowmaker trade since before I've even been in the business, but I'm keeping a close eye on Japanese government bonds and the Japanese yen. So with government bonds, their yields continuing to keep moving up. If they move up kind of on a relatively modest pace, they'll be fine. I'd be concerned if those start moving up, too far, too fast. You'll start seeing too many losses in the JGB market, and of course the yen depreciating. If that starts depreciating too quickly, I think that's systemic risk as well.
Yeah, certainly the carry trade has been a conversation we've had quite regularly. Let's start at the top of that list, though. You talked about the valuations in some of these mega cap companies. Excluding a handful of those names, you say the rest of the market looks pretty close to fairly valued. Does that argue that we may see broader participation in 2026 or more selectivity?
The answer actually is going to be both, as stupid as that sounds. So when I look at the broad markets, trading at a couple % discount to fair value right now, that just tells me, broadly speaking, you should be a market weight in your equities depending on whatever your targeted allocation is. Now, having said that, there's 3 stocks. It's going to be NVIDIA, Alphabet, and Broadcom. So again, those 3 stocks, if we take our valuations out of that broader market calculation, we actually think the rest of the market is pretty fairly valued here. So I think it's one of those ones where I would set up my portfolio this year to be a bit of a barbell. So I think you need to still have the exposure to AI and AI stocks. I would specifically exclude from that a lot of these commodity-driven tech stocks. So like the SanDisks, the Microns of the world. Very concerned that the valuations there for what I consider to be more commodity-oriented technology are way too high. Intel is another one. I know that stock had a very good day today. It's trading at about a 50% premium to our long-term intrinsic valuation today. That stock, the company's just fallen too far behind the cycle. Where someone like an AMD, we have a $270 price target on that one. So that one, we still think, again, with everything going on there, we expect them to be the number 2 player in AI, has a lot further room to run. So I balance that portfolio by looking at value stocks. So I think if you can get more involved in value stocks, that will give you the cushion in these periods of volatility. So again, if the market's running hot, AI stocks are moving up, you can use those to take some profits, move those into the value stocks, because of course they're going to lag far behind. And then conversely, in the periods of volatility to the downside and the AI stocks are getting hit, value's going to be holding up. You can take some profits in there and move that into the beaten up AI stocks. So I think this year is going to require probably more trading around than I think it required last year.
Sure, more active management. So as you look at that barbell shape and you're trying to play into value here, are there specific sectors where you see the most opportunity or sectors that you want to avoid?
So it depends. So like real estate is still the most undervalued sector today, and I see a lot of value in the real estate sector. Having said that, I'd still steer clear of urban office space. I just don't like the reward and demand characteristics there. So I think that one probably still could fall further to the downside. But real estate with defensive characteristics looks very undervalued to us today. Having said that, some of the other sectors that I'd be looking at would be energy. Still a lot of negative market sentiment in energy. Now, of course, the oil field services companies, which we've been constructive on for a long time, SLB, Halliburton, Baker Hughes, those have run up, just relatively recently following the change in control, in Venezuela. But a lot of the U.S. domestic energy providers like Devon Energy and Diamondback are ones that we still see a lot of value in. Today. So going to be very selective on individual stocks, within those sectors overall. To the upside or the overvalued side, consumer defensive, it's interesting that it's going to be overvalued from a sector perspective, but again, that's because Walmart and Costco are trading at such high multiples today. Yes, everything is going right for those companies, but we think people are over extrapolating kind of the growth we've seen the past couple of years, too far into the future. If you strip those out, the rest of the sector is very undervalued. So again, it's going to be very active management, steering clear of the ones that have gone too far, too fast. Looking at some of the companies like a Kraft Heinz or a Mondelez. I really like Mondelez today for people that are looking for that emerging market exposure. Those are both 5-star rated companies that are trading at very significant discounts to fair value today.
Dave, always a pleasure to have you in studio. Thank you for some strategies that might play out well and some portfolio positioning that people may want to take a closer look at. We really appreciate it. That's Dave Sakara from Morningstar, and I do want to send it back over to Sam in New York.
Thanks so much for that, Molly. Well, coming up next, we'll be joined by the team from Polygon to discuss the U.S. payments infrastructure and more. Market on Close. We'll be right back.
Shitty day.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market at Close. I'm Marley Caden here in our Chicago headquarters alongside Sam Vadas at the New York Stock Exchange. Shares of MasterCard are under pressure today despite getting an upgrade from Compass Point. The firm upgraded shares to a buy from neutral, also raised its price target to $735, up from $620. That new price target almost $200 above current trading levels. Compass Point says that the sector is finding a bottom that likely materializes post fourth quarter earnings and expects superior net revenue growth from MasterCard and believes the stock multiple is too low. Let's take a look at how some of these credit card stocks and issuers are trading today. MasterCard, like I said, at $540, $465. They're down 3.8% so far today. Visa also lower, even more so, down 4 1/3% at $328.29. American Express under some pressure, down about 0.5%. Capital One down about 0.75%. This, of course, as this potential credit card cap rate situation plays out, and JB Diamond, of course, commenting that JP Morgan would do everything they could to fight it on their earnings call earlier today. I do want to shift gears, so send it back to Sam for a conversation with our next guest.
Thanks so much for that, Marley. We'll just stick with the payments theme now. Joining me here on the floor of the New York Stock Exchange is Sam Fagan, my namesake, head of payments over at Polygon. Nice to have you here.
Sam, it's great to be here.
Let's talk about your company. Just explain exactly what Polygon is and what it does.
Yeah, so Polygon historically has been a public blockchain. So it's really a settlement layer in which a developer or a fintech can build on top to complete transactions on a blockchain, primarily stablecoins. So yeah, Polygon has just been a legacy blockchain company.
And you and I were talking about this offline, that this is a competitive business. Just explain how popular this has become, where the demand is coming from, what you're trying to address.
Yeah, so I think blockchains have now become very specialized. So Polygon is focused on payments, while other blockchains might be focused on high-frequency trading or other use cases. We've really doubled and tripled down in the payment space. And so, yeah, moving money cross borders on a public blockchain or a decentralized ledger is faster, more efficient, and more accessible. So we're going to be focusing on payments, and yeah, excited to talk more about the news today, obviously.
Yeah, and then we'll talk about the news. I just want to get to the idea around the payment side of it, because when you say payments, are you sort of talking about everyday use cases of payments?
Yeah, so predominantly what we're seeing is cross-border remittances.
Okay.
Seeing a lot of adoption of treasury management. So if there's a large multinational corporation that has funds parked in dormant capital or nostro-vostro accounts globally, they're using stable coins on the back end to settle funds much faster cross-border.
Okay, and we got you on a good day because it is a big day for your company acquiring at CoinMe and
I don't think the market likes the bank earnings.
What's the significance of that for you?
Yeah, so CoinMe is a regulated payments infrastructure
I think it's just a
company,
good
or
excuse.
payments infrastructure company. CoinMe gives us access to 48 money transmitter licenses, which regulation is very important in this space.
They do?
We also have deep compliance capabilities in addition to fiat access. So when we're talking about cards, also ACH,
Okay, what's the reversal?
payment methods, we're able to access fiat rails from CoinMe, so it could be much more in the value chain. So if someone's moving funds from fiat to a stablecoin, we now capture that value. Sequence is an embedded wallet solution. So if there is a marketplace looking to embed a wallet within their application, we can now provide that infrastructure. Really just
Two red
with these
trades for me.
capabilities, we're now able to go to an enterprise and give a unified, really one-stop shop solution to an enterprise.
You mentioned regulation. Now, obviously, over the years, we've been talking so much about this as to whether crypto is investable without the regulatory rails in place. And then obviously 2025, we saw a lot of that being put into place, right, with some of the legislative wins for the space. Just give us a sense of how much of a tailwind that has been for your industry and what more needs to be done.
Yeah, so I think enterprise was looking for regulation, really rules of the road. So with the Genius Act, since then, stablecoin adoption has increased rapidly. And now what we're focused on is building out that infrastructure. So a bank, fintech can come into the space and really have turnkey infrastructure. And we're right now at the forefront of building this infrastructure.
Okay, so we talk a lot about how, things like Bitcoin,
I'm gonna give another
cryptocurrencies
shot.
are a store of value, but you're very much in sort of the transactions, at least the sort of more cross-border payment side of it. And I mean, this has been fascinating, obviously, because this is how we are thinking about, a new way of moving money around the world. I know that you've been expanding your footprint in places like Africa, which is just so far-flung. Just give us a sense of why that market and exactly what companies you're working with, because I believe this all has to do with some of the US tech names that we talk about, like the Ubers and the Netflixes of the world. Just tie it all together for us.
Yeah, no, it's super exciting. I think this is really all about dollar access and inclusion. So historically, these markets such as the US or even EU and UK, these are financial systems that have worked really good in a few markets, but folks in Africa or Latin America weren't able to access them. Now on public blockchains, you're now able to have dollar access. So a company like Flutterwave, they're a payment service provider that is building on top of us. You mentioned Uber. Uber is one of their merchants. What we're seeing there is Uber is accepting the local currency, but they don't want to hold that local currency. So what they're doing is taking Naira, swapping to a stablecoin, then holding that stablecoin that has a good store of value to then move and transact money cross-border. What Flutterwave is doing is taking that fiat,
laundering money,
stablecoin, and on the Polygon blockchain is a settlement layer. That stablecoin is being transacted on our chain.
Then how do you address these perceptions that you are bypassing the traditional banking system?
Exactly.
Yeah, what I would say is we're expanding it actually. So typically what has been accessible to a few markets, now we're really expanding upon that. We're really replacing the infrastructure or taking the infrastructure that's the corresponding banking infrastructure and expanding that to more markets. So a company or or even downstream a user can now have access to dollars.
Right.
So we're taking the system and really just expanding upon it.
Fascinating times, really exciting stuff for you and Polygon. Thank you so much for joining us. We have to wrap it up there, but come back and do it again soon.
Great, thank you so much.
Thank you so much. That is Sam Fagan from Polygon there. Marley, I'll send things back over to you in Chicago.
Thanks so much to Sam and Sam for that one. Coming up next, it's Options Corner. We've got Alex Coffey joining us here in our Chicago studio to take a look at Boeing after shares hit a 2-year high. That's next on Market on Close.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to
Need a
inflation
big breakout.
and geopolitical risk.
Let's go.
Fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down.
Wouldn't mind seeing $2.
Like trend analysis,
69.50s, but I doubt it.
moving averages, oscillators, and much more. Best of all, you can ask questions directly.
69.50s.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. Shares of Boeing hit a 2-year high today after Citi raised its price target on shares to $270, up from $265, and maintained its buy rating. The company is also seeing a boost in orders as Delta ordered up to 60 Boeing 787 Dreamliners, and Aviation Capital Group placed an order for 50 737 MAX aircraft. Shares are up more than 10% so far on the year. Right now, up about 2% just today alone. That means it's time for Options Corner. Of course, we're talking about Boeing. Here to help us break down the latest, Alex Coffey, the co-host of Next Gen Investing here on Schwab Network. You know, Boeing having a very good day. I mentioned 2 of the big announcements, but they also announced they outsold Airbus for the first time since 2018. So a series of really positive news, moving Boeing to the upside.
Yeah, they recorded 1,175 gross airplane orders in 2025. That beat the Airbus number of 1,000 orders. As you mentioned, it snaps that 7-year losing streak that Boeing had, kind of building back, market trust post some of the issues that they had with some of the aircrafts. They delivered 600 aircrafts in 2025, which is its highest delivery count since that same year of 2018.
Very good.
December deliveries alone
170
for 63 jets brought that fourth quarter delivery to 160 on the 175 orders that it got in December. So a lot of really positive things. If we start to look at the technical picture here too, it kind of reiterates this and reinforces this message of a stock that's performing quite nicely. You mentioned the 2-year highs, it's up 2%. The chart that I sent over to the team illustrates the last month of trading and just really kind of shows how steady this trend has been. Kind of like an aircraft, taking off at a pretty clean pace here. That teal line represents the 1-week moving average. It spent the vast majority of the last month above that level. It sort of acted as a near-term support mark. And then, of course, that purple or more violet-colored line represents 1 month. The difference between those two increasing, both of them upward sloping, and the stock price above both of them. All of that, to me, indicates a strong, well-maintained kind of medium-term trend as we extend into this first and second week of trading.
And as far as the options activity on this name, what are we seeing in terms of open interest? Are we seeing calls outweigh puts or the reverse? What's the sizzle looking like?
Yeah, so when you look at the picture for this particular stock, again, we've talked about the nearest term expiration being this big leap cycle. So some of the open interest is going to be skewed by that. But max pain would be 210, highest open interest for puts is 170, but those probably aren't going to come into play. The 240 call, though, is the highest open interest price today. And then if you factor in today's volume, the sizzle was 2, which suggests it's kind of double the last week's volume when it comes to contracts. But about 40% of those contracts were traded in this week's expiration. The 240 level, both calls and puts combined, was the highest strike activity. 250, though, was the highest for calls and definitely the biggest strike in terms of just one single either call or put that was trading. And then the 235 was the highest put volume. However, calls did outtrade puts by about 2.5 to 1, which suggests a little bit more optimism today, which ties into the technical trend, ties into the fundamental news. I should note, though, with some of that call buying that's happening, you're starting to see nearer term implied volatility start to increase as there's more demand for those options. And the 1-month IV percentile rank was actually 100 today, which suggests that over the last 20 or so trading days, this is the highest implied volatility has been relative to itself in Boeing. But it's all perspective. If you were to extend that over the last 12 months, that number would be 13.5, because then you start factoring in some of that uncertainty of last spring, which really saw implied volatility blow out. So all in all, a lot to like about Boeing right now, and a lot of excitement in today's options trading.
A lot of excitement. They have their earnings coming up January 27th, so we'll be on the lookout for those as well. But Alex, thank you for being with us for Options Corner today to highlight Boeing and talk about some of their recent headlines and options action. I do want to send it back to Sam in New York.
Thanks so much for that, Marley. Well, coming up, it's time for Overlooked Stocks, and George Sillis has his eye on Enlight heading into the close. He'll break down the news about that and what you need to know coming up next.
you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going?
First day, so sometimes you know.
Next.
Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
That's
Actually,
100.
I'm something from Schwab.
What's up, Carl?
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Stay connected to
We're
the
now at
markets with Schwab
150.
Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Vardis on the floor of the New York Stock Exchange. It's time now for overlooked stocks. So we are seeing shares of Enlight rallying today after providing an update on its preliminary Q4 results. So we've got George Siller standing by, senior markets correspondent, to help unpack this one. And I suppose the ticker code gives it away as to what it's in the business of. Lasers.
Yeah.
Just talk us through what we heard from this company and the significance of obviously some of the rally we're seeing today.
Yeah, I was actually just looking at the charts, and I mean, this stock has been on a tear since about mid part of last year, and I think the theme is really associated. This is another one of these names, by the way, that we've talked about as of late that has both semiconductor application, technology application, but also aerospace and defense. So Enlight is actually a supplier of laser products, just like the symbol.
We're at $2.
High-powered semiconductor
That's what I
lasers
needed.
used for things like directed energy, laser sensing for manufacturing, factory automation, and so forth. But the other specialty program is their advanced development program. And this is essentially more classified advanced DoD application, offensive and defensive lasers. And we know the Trump administration has been very pronounced in declaring the United States prominence in military, even calling for increase in defense budget to $1.5 trillion from over $1 trillion where it was in fiscal year 2025. And this is another one of these companies that is benefiting from it. And overall, top line sales have been improving quite significantly, but the composition too of their business has been more skewed towards their advanced program development aspects of DoD lasers, which in many cases are classified. So the catalyst today, as part of this trend continuation, is the company did raise their guidance for the fiscal year Q4 of last year, which they'll be reporting coming up soon. But they raised their top line sales guidance, which was between 72 and 78 million, so at the midpoint 75. Now they actually raised it to 79 at the midpoint, between 78 and 80 million dollars. They still see continued strength, in particular their aerospace and defense business. And this is a company that's one of these comprehensive suppliers to the military,
11
not
minutes.
just in the United States, but also in the allied countries in Europe, as well as in the Middle East.
Yeah, I mean, you mentioned this incredible run-up that we've seen throughout the course of 2025, which, as you say, started around just before the middle of last year. But I'm looking at a 5-year chart here, George, and in fact, if you go back to pre sort of 2022, it was still right up there. I mean, it was trading at about $44 before it came off quite significantly and then sort of bobbled along for most of 2023, 2024, very sideways action. Can you sort of explain sort of the story here, you know, as far as the overall performance we've seen?
Well, yeah, I think first off, you need demand for your products, and I think the advanced development program that Laser supplies the market, or Enlight supplies, is quite pronounced. That's a huge catalyst. If you look at the last 6 months of trading, it comes down to profitability. That's what I've noticed. If you look at, like I said, the last 2 quarters where the stock has ramped up, that was an inflection point. If you look at adjusted losses to profits, in fact, the last 2 quarters is reported. So that would be essentially Q2 and Q3 of last year, which fits in that same technical composition on the chart. They became structurally profitable in those last 2 quarters. And so if you look at the profitability profile going forward, they're expected to continue to achieve positive adjusted profits for this fiscal year, which again, they're going to conclude coming up, which one would presume considering the top-line sales guidance they raised. But also going into fiscal year 2026, where top-line sales are expected to grow to about $290 million, and comparing that to 228 in the last 4 quarters, that's a meaningful increase.
There's your number, Randy.
I mean, there can be years where this company essentially is growing revenues, let's say in the mid-single digits to high to 10% double-digit ranges or low double-digit ranges, but they're structurally unprofitable. They've got cash burn, which if you look at the company on a net income basis, GAAP basis, it's still unprofitable. But they're burning around $44 million in cash, at least in the last 4 quarters, and that's improving. So the point is this: I've done this long enough to know that inflection point where they're getting closer to break even, and when they do achieve that break even, you see big pushes in stock, and that's effectively what we've seen going back to May of last year. And then you throw in the other catalysts, which again, not just lasers used for DoD purposes or defense, but everything that has to do with automation and industrial production. We know that this is a common theme going forward in artificial intelligence and technology and robotics. So these are all positive catalysts. And I think the defense, aerospace and defense spending is the primary one right now, but the secondary one is certainly robotics and automation. Again, so that explains why it's moving so aggressively in the last 6 to 7 months off of a low base, which again, if you go back a few years, was quite low, but it's recovered quite a bit.
Oh, it certainly has, and as you say, some of those key themes around obviously exposure to defense and manufacturing, industrials, which have all been sort of catching a bid as part of this whole sort of onshoring narrative, as well as, you know, upping the military budget as well, and looking to, you know, manufacture and automate things here as far as factories. Look, Needham likes it. I see today, obviously, maintaining a buy rating, raising the price target to $48. I'm just wondering, you know, as far as what some of the analysts are saying, what is some of the commentary around this one?
Well, I think if you look at, you know, Needham's call 48, the high on the streets around 50, midpoint at $43. So it's trading near the midpoint right now. And in fact, if you look at the variance between the midpoint and the low point, it's very narrow. Again, $40 is the low point consensus from the analysts. So, you know, once again, it seems to have a tilt towards more bullish growth going forward. I'm not saying it's going to, but certainly the trend speaks for itself. I mean, if you look, and I use 20-day moving averages to establish a trend that's very positive, and it's been above that level for the last 2 quarters, and it's got a positive trend going forward. And I'm not saying it's going to continue from here, but I do think that the defense spending catalysts are there, and you know, it's a midterm election year as well, so there's going to be a lot of headlines about the prominence of U.S. military from a strategic standpoint, alongside various other political tactics to improve midterm prospects for the incumbent president. So I think that's also, again, something to consider with this move in this stock in this year.
Makes sense. We are trading at $42 and change right now, sitting up at around 2.5%. Thank you so much for getting us across this one and what we needed to know about LASR, that is Enlight today, George. I'll send things back over to Molly in Chicago.
Thanks so much to Sam and George. We are nearing the end of the market session. We're bringing in Kevin Green to break down the levels he's watching on the S&P 500 and today's action. That's next on Market on Close. Stay with us.
Oh my gosh, $7. Randy.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
We are back here on Market on Close. I'm Sam Vardis on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. So we've just got a few minutes left to go in today's session, 3.5 or so to be exact. So let's welcome in KG, Senior Markets Correspondent, to help close out the day. And we're not celebrating with our 7K caps today. Kevin, obviously, we thought we might be at the open, obviously, with some of the gains we saw initially in that pop off the back of the inflation print, but we lost some steam. It's been a wobbly old session, pretty range-bound, the S&P and the NASDAQ. Just talk us through what you're watching as far as those levels there.
Yeah, I think
3 minutes left.
Pretty decent recovery off of the lows. It did look like it was going to get pretty ugly for the S&P 500
we got
from a
ugly
technical standpoint, but this close looks like we're going to try to close above this 69.50-ish area, and if we're able to do so, I think that would be a win for the bulls, even though we do have a little bit of a loss on the session. And here's the reason why. We have the 15-minute chart up here.
Yeah, show me why.
Kind of look at this technical pattern in white. It's a head and shoulders pattern. Now, we actually did just test the neckline and broke below that neckline, which is actually bearish. But in doing so, we also then created this hammer candle off the 200 period moving average.
Oh, I saw that.
Hammer candle is actually again bullish, and now you are seeing actually some follow through on that candle. So this is actually a very interesting chart.
Oh yeah.
If we can kind of go into the close and see what levels that we're going to really focus on here.
You dog.
It's actually the key point. 69.60 is where I've been looking at the call flow over the last, let's say, 20 minutes or so, and we might see a call wall here. We might even get some buyers to really try to step through, but 69.60, 69.65 is kind of that area that I'm looking at as far as
oh, you're a tricky little gizzard, aren't you?
If you're kind of looking at the composition of today, though, a little bit of weakness when it comes to technology. I think the market's also once again preparing for that Supreme Court announcement tomorrow. Consumer staples still did fairly well, and you still kind of have this reflation type of trade taking place. So yes, inflation from core CPI was better than the street's expectations, but I think there's still maybe some concerns about certain pockets of inflation that could be a headwind for Fed policy moving forward.
And KG, I want to talk about Mag 7 performance today. We saw Alphabet, have another good day here. They passed that $4 trillion market cap We got an update on NVIDIA. I know you said it to me on Teams this morning because every time we talk chips, we bring it up.
Yeah, I agree with him too, that 59
more
area.
detail, I'll say loosely and with
God,
an
you're loud.
inquisitive tone there on what kind of...
Can you shut up? Put it in neutral. Oh, we're already there. So we busted above. Mine would have been a little bit higher. My support level. According to his 5-minute chart. So we busted above that, and that had been right around the 62, and I think he said 59, which is the 200 EMA. So kudos to you, Mr. Green. And I am Mr. Washboard. I've been a washboard player since 1994. And it's brought me a lot of excitement. Can you imagine a washboard in a rock and roll band? Oh yeah. Okay, well, I'll get back at it again tomorrow. And hanging out with NVIDIA. I'll be here tomorrow. When I retire, I'll be catching a lot of these white bass. There's a good one right there. Oh, that's a pretty one right there. That's a pretty one. I think you're allowed 15. And it don't take no time. 15 or 30, but it might be 15. Okay, well, adios.